Yo, 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 good morning, everybody.
Well,
Welcome to
good morning.
Tuesday, the second day of the week. We are a bit flustered, myself and Will. We've been a bit busy behind the scenes. So, early morning for us. I hope everybody else today is having a great day. Welcome to the The5ers live stream. My name is Richard Butler, and this guy on either one of these two sides is Sir William Davis. He is our
What's
resident
up?
He's our resident Welshman.
Good save. What's good, guys? How are we doing? It's like Rich said, a bit flustered this morning. However, I had a good gym session, so good gym session makes you feel good. But when just things just stack up, and then just do some breathing
Grab your
exercises.
earlobes and then start rubbing them and go and say "Hoosa,
Ooh,
hoosa."
Yeah, guys. My big thing is, when stress tests you, just take three big deep breaths in through the nose, hold it for a second, fill up those lungs, and slowly release it through the mouth. So,
And
do
then
that 3
pimp
times.
slap the first person that annoys you.
Yeah, and then if you see anyone who annoys you, just close fist, hit them.
I was
No,
about to say, take off the white glove and slap them twice across the face.
I challenge you to a duel. Oh
We
man, but
fight
no,
at dawn.
you know what? Look, I'm looking forward to getting into the markets. Looking forward to getting some good price action going. Last week I had 2% on my live account, on my funded 100K account, and then yesterday we had 3% on my play account as well. So we're good. We're good. So hopefully, gold looks to be rather bullish now as well. So hopefully, maybe looking at some buys on that. I'm not going to rush it. Not going to, like I said, I'm a big advocate of psychology, and I got to practice what I preach. So, guys, I'm got a bit of a stress headache in the back coming, so I need to try and align myself again, align myself with the market,
Yeah.
align myself with my goals for today, try and take those deep breaths in, try and remind myself what I'm working for, who I'm trying to be today, trying to be the best version of myself and implement the best analysis possible. So, guys, just want to be transparent at the start of the stream and not let my internal negativity bother me when it comes
Yeah,
to the
take
market.
that shit home, mate. Like
Exactly, mate.
we
Yeah,
we don't want your
leave
negativity
that
here.
shit at the door. You know what I'm
Yes,
saying?
please. Okay,
So,
so to build on that positivity, we'll get straight into the market, right?
boom. Let's get straight into the markets with your TPs.
Yes. In a Nasdaq buy, TP2 has been hit. TP3 has been missed ever so slightly. TP1 very quickly. TP2 missed initially, bit of a pullback, retested. TP2 took that one. My trade is now at break even. My stop loss for TP3 and TP4 is now at break even. Just missed TP3. Looking for a continuation to push up again. Love this. Love
Love
this.
that for you, my friend. Love that for
I just
you.
I just drooled.
Was it that good of a setup? You just dribbling for it?
No, I don't think I swallowed properly prior to. I'm having a coffee and it's making me salivate, mate.
Oh, you know what? No, you know what? I kind of rate that because this is my second attempt of a coffee. Yes, people, that is how my morning went. This is take two of trying to make a coffee this morning. So my first attempt went diabolically wrong, and I had to throw it down the sink because I just cocked up in every way possible. Attempt number two, this is a banging coffee. The gods were looking
Well,
down at me and saying, "Look, Will needs a break. Will needs to catch a break today. Let's give him a hella good coffee because he knows that if he has a good coffee, it's going to be a good day." This, my friend, is a bloody good coffee. So it took 2 attempts, but we got there.
well, fancy fancy having a good coffee to just like bump you up just
It,
next
it it helps. It certainly helps, man.
little bit.
Like a stress. I never used to understand as a kid how adults used to say, "I'm so stressed, I need a coffee." I used to think, how can you like allow your emotions to be controlled by a drink? You know, a bloody hell, I can completely confirm that that's true.
Dude,
There's something
any person that drinks too much alcohol can attest to that. Can just be like, how can you allow drink to control your
to solve your
emotions? It's just
problems.
like if you hear a sad song and you're like, I don't know, like 9 or 10 drinks deep and the tears start flowing, is it you or is it the alcohol? I don't know. Anyway, do you want to say hello to everybody in chat, or shall I?
Absolutely. I'll say hello to everyone in chat while you get your chart up. We'll do a top down of your analysis, and then we'll jump onto mine. I may end up taking a trade real quick. I don't want to rush it, but it's setting up beautifully. So
okay, wait, and then in that case, let me say hello to everybody.
Okay,
in chat.
you
get
say
your
hello.
charts
I'm
ready.
going to decide whether or not to enter in on this trade.
All right, cool.
Okay,
I'm going to
sweet.
say hello to everybody in chat. I'm going to assume this is Widigo. Or Edigo. Well, good
Nice
morning to
profile
you.
picture.
Yeah, nice car. JT Babs saying great. Well, it is.
Bloody great. Bloody brilliant.
We've got Satyam saying glasses. I don't know. Well, good morning to you. HHH Gemming 9955. Hi. I wish that I could pronounce this.
Go away, hotahe.
Without insulting anybody. So I'm just going to say hello to you.
There's a good chance I've potentially insulted someone.
Yeah,
I do apologize if I have.
We've got Patrick in. Hello, how are you? We're good, mate. We're really good. MGN saying greetings all the way from a very sunny South Africa. Good morning to you, MGN Talendier. We've got Henry. Good morning all the way from Australia. It's evening there. Is it evening?
Yes.
Yeah, it's 6 o'clock already. Wow.
Yeah, 6-ish, yeah. Damn.
Henry, I might message you just now. We've got something that we need to test, and I was wondering whether or not you'd be willing. What time's your bedtime? And are you free? From us to everybody, hi everyone, welcome. Glad you made it to the stream. Yes. If you guys haven't already, drop a like, drop a subscribe, and then join in chat. Any questions that we have the capability of answering, we'll answer. We have Will's significantly more attractive significant other, CC. Good morning to you.
Them do be the facts.
Yes, them be facts.
Hello there. Good morning, CC.
Mahibur saying, hello everyone, have a good day. Best of luck looking for buy in GU Gold, already up 2% for the day. Dude, congrats.
Beautiful. Nice.
BEA
beautiful. You like your Jim Carrey movies, didn't you?
Yeah, I do.
Dude, I love my Jim. That's how I know that's how I know that's a Jim Carrey quote. Dude, I love my Jim Carrey movies.
Pet Detective was one of my favorite ones.
I literally watched it the other night. I watched number 1 the other night.
We've got Azrael Trades. Anyway, we've got Azrael Trades. Good morning for everybody who doesn't know. Azrael Trades won a bootcamp account last week with our trivia day. So it was on his birthday as well. So couldn't have scripted it better. Maber saying morning. Satyam saying we are ready. I hope you are. You better be ready.
You better be ready, I mean.
Got no chill saying if you give me 100k account, I will be very grateful. Today is my birthday. What I can say is congratulations with your birthday, and no, I'm not going to give you a 100k account.
I will say congratulations and big happy birthday to you, bro, but
yes,
unfortunately there is no. I don't know. Is there accounts to be given away today?
Not today. Not today. There isn't.
Sorry, bro.
WizGoat148 saying hi from South Africa, dude. Welkom. Morgen.
Away, bro. Away, bro. Stop, dude.
Pratik asking, can you show your MACD settings? Yeah. It is. Oh, come on. It is a very. This is the Chris Moody Ultimate multi-time frame one. The only reason why I use this one is because I do like the crossover coloring. So this is the MACD settings. If you go into the inputs, it is a stock standard, typical default MACD settings. So nothing was changed here. It's just call it a custom looking MACD. But other than that, it's just a stock standard MACD. You can go and you can literally just search CM_ULT_MACD_ multi-time frame. And you will find it. Or you can just search MACD Chris Moody, and then you will find this one. So stock standard one, I just like the coloring, and it's a minimalistic one. Like if you put the signal and the histogram up, this is what a typical one looks like. I just like the minimalistic approach of this. Gives me the information that I want, and yeah, there we go. CC blowing you a lot of kisses and showing you a lot of hearts, mate. You do have a good one.
I know she knows I'm stressed. She knows that I've had a stressful morning. Trying to show me that love.
Oh. Let's see here. Who else is here? Luhan saying, what kind of accounts do you guys have? We have multitude of accounts. I have a few 10Ks, a few 20Ks, and then I have 1 or 2 personal accounts that I also trade. But in general, those you don't look in like the size of the account.
Yeah, same as that. You know, I have 100K. If I have a 100K live that I passed in front of you guys, I have this 5K. I have a couple of like 20Ks and all, and then I've got a personal account as well.
Yes, and then also we have play accounts. So this is a 5K play account for the stream that we can just, I don't know, go ham with if we so wanted.
Yes. I don't like gold anymore. I think I like it, but I don't think I like it at the same. Does that make sense?
Yeah, it does. My trade is looking like it's going to...
Oh, no, Rich! That's tragic.
Okay. It missed TP3, so it's okay. This is a risk-free trade.
Yeah, fair.
So I'm not bothered.
That's so annoying. I'm so annoyed for you. I mean, look, like you said, look, you've secured what, 0.75?
0.75, yeah.
Yeah, so you've secured 0.75, so it's still a good day. But dude, that was so close to TP3, and I honestly thought that you were going to get a full TP4 then.
I mean, it's testing the 50 EMA right now. Let's hope that it rejects off of it. However, if it were to come a little bit lower than that, I can just wait for another set to enter on. So this is a winning trade so far, so I'm good. Is there any account giveaways? Not today. We don't have any account giveaways today. However, we do have a bunch of other stuff that we have going on today. So we will have Rich coming in and talking a little bit about psychology. We will have Pedro and LJ that are most probably going to give you guys some really good actionable trading setups for you guys as well. That's going to be in about 40 minutes or so. So even though we don't have giveaways, we do have other really good high quality stuff that is going on as well. We've got Paco saying good morning. Also Kapil, don't worry, I didn't skip your trade or skip your question. We will mark everybody who's asking for a specific asset to be analyzed, and then we will go through it. So I've marked it, so don't worry, we're
a nice little flag or a nice little tick next to it so we can come back to it.
Yeah. We've got Trader Eddie saying good morning to you all. Good morning to you. We've got Rory Walker saying good morning from Kent, UK.
Nice.
Good morning.
Hello to my UK friends.
Good morning to you.
Kent.
Good morning. Yeah, all the way up in Kent. Trader Eddie is from Tanzania. Dude, welcome. Welcome.
Tanzania, nice. Dude, we really are international here.
Dude, I'm telling you, we are.
It is absolutely.
Henry, yeah. Henry, send me your email. or send a message via email to me at richard.b@the5ers.com, and then I'll send you an email quickly. Or wait, you are on Discord, aren't you? You're on Discord, correct?
I'm sorry, just message you on Discord.
Yeah, I'm going to message you on Discord, and then I'll explain what it is that we need some assistance with, and then, yeah. But yeah, 5 hours till bedtime, that's great. All right, we can set that up then. Awesome. We've got Raphael saying, good morning, guys. Good morning to you. Mahibur also, sorry, all the way from Bangladesh. Love having you guys in. Wait, my mouse is freaking out. There's a hair on the... There's a hair on the sensor. And then Meow saying, look at gold. We will have a look for you at gold in a moment. Raphael saying, on my way back to work. Can't wait for the day so I can made it into trading. Dude, that day is closer than you think. Oh, dude. I'm happy for the heading of a live account. I just lost my account after 3 months of trading. Dude, that sucks. But you can do it again. You've done it. You can do it again.
Exactly. It sucks. And what sucks even more is it happens. You know, it'll probably happen again as well. Yo, big shout out to Pakistan as well. Yeah, no, it'll happen again, bro. Hello, CC. Good morning, my love. Can you come here and make me a coffee, please? I can't seem to make one myself, and I need you. I need her to come here and make me some coffee. Make me some soup.
Don't you watch NAS 100? Why am I looking at US Tech? Well, because US Tech is the NAS. The only reason, okay, I'll give you an example. So on the 5ers, the 5ers account, NAS is NAS 100, all right? But when I'm doing analysis, I'm using the IC Markets data feed, and IC Markets refers to as the NAS 100 as US Tech 100 index. It's exactly the same as the NAS 100. It is just a different data feed, that's all. Or at least in this case, IC Markets just coins it a little bit differently. They just call it US Tech 100, but it is the NASDAQ. It's exactly the same. It's just a different naming. So the data feed of IC Markets is the closest that I can get for MetaTrader.
Guys, have I frozen or is that Rich? Okay, I think it's Rich.
No, dude, it's you.
It was me.
Yeah, it was you.
Oh, why am I freezing?
Because you're in Wales.
Probably. I thought it was your midnight shoppers again.
Sorry, Remy, what did you say? Nah, it can't be. Nah, there's no way. You guys are wrong.
I knew it.
You guys are wrong.
Thanks, Remy.
You can see the price action here is very close to the current price action. So 28,923.54 versus 28,946 versus 28,946. So it's as close as you're gonna get. Anyway.
You don't mind it being a pip or two or a point or two out, you know, a couple of points out is fine.
I just don't want it to be like 20 points above or below. Like have a massive difference. Yeah.
Yeah, literally that. You don't want there to be such a difference that you can notice it, you know, and plus then spread. You know, you don't want that to be like oh, wow. You know, next minute you're looking at TP and it's nowhere near your TP.
Not a single one of you guys got it correct. I'm sorry. I refuse to believe that it was me that froze. It was definitely Will. No, guys, it happens sometimes. My internet can sometimes take a bit of a dip. It happens, but I'm just playing with all of you.
Love you, bro. You know, you guys are awesome. Backing me up. I was going to say love you, boys, but love you guys because we got the gals in chat as well. So love you guys. Big shout out to you all. Backing me up. Yeah.
Good. All right, so Yeah, you wanted to say?
I was just going to say, the worst thing is my Wi-Fi used to be so inconsistent until I literally called a guy out. I got back from Hong Kong. I was that annoyed that my Wi-Fi was bad. I called the guy out. I was like, you fix this shit now. I was like, I was out in Hong Kong and my Wi-Fi was like MIA. It was, killed in action. It was KIA. So you sort this Wi-Fi out now because I'm never having this bad Wi-Fi again. And he was like, okay, yeah, cool. Fixed it. And he was like, okay, we've now given you faster than you're actually expecting. I was like, oh, nice.
Wait, what is your internet speed at the moment?
Oh, dude, I don't know. Let me...
Wait, dude, you can't start a sentence with like, I'm actually faster now than I've ever been.
No,
and then when I ask you what is the speed, you're like, I don't know.
Oh, dude, I didn't know. He just geeked out on me. He was like, oh, dude, nice setup. What do you do? I was like, I'm a trader. He was like, oh, this and the other. And so I was like geeking out at me. And I'm like, dude, I trade. I was like, don't talk. I'm not a what do you call it? Online geek. I was like, I'm not that guy. So I don't actually know what my speeds are, but apparently it's better than they said I should be getting. So I was like,
okay,
oh, yeah.
so you don't know what you're supposed to be getting, which means that you never had a look at your contract. And second thing is now they could be oh, dude, it's faster, and you're going to believe it.
Completely bullshitting me.
Muppet.
100%. Yeah, they could be completely right. Okay, so I've got a pile of tabs open. I got 2 terminals open, and I got the stream running.
Doesn't tell me anything.
And right now I've got download speed of 40.
40 megs, okay?
Yeah, an upload speed of about 6.5.
Okay, all right.
So that's not bad.
Yeah.
Given that in Hong Kong it was like 0.1 upload and like 0.3 download.
Okay, yeah. Okay. I don't want to make you angry or anything.
No.
So I'm not going to tell you what... I'm not going to tell you what my speeds are.
No, please don't. Please.
But anyway, let's look at the chart. So there's a few people asking for gold, and then there's also a few people asking for I did market. So gold, and the other one was USD CAD. All right. So do you want to have a look at gold, and then
yes, absolutely
you need to just at least share a screen.
I do, to be fair, need to at least share my screen. I try and share my screen as little as possible because look at me now. What is this about?
How many tabs did you say you had open?
I have a few.
Yes. I think that might be the reason why. It does seem as though I have just hit stop loss. Let me go and have a confirmation.
Yeah, we've had a bit of a drop on gold. Just to bring my
so the trade is now Dunsies, and I hit TP2. So
you're out now. You're done. Yeah. You're done.
You're done.
You're done.
Get out.
I am the best.
I'm just going to save this screenshot quickly.
I'm gonna add in on my play account trade, and I'm actually also considering putting in a quick. Yeah, I'm actually gonna trade on my 100k as well. I'm in for a buy. I'm only risking 0.5%. I'm $500. It's a little bit risky. I'll be honest. It's a little bit risky, but it does look good.
Nimiao's saying, are you drawing an analysis or is it a trade that is already underway? That was the one that I had on the NASDAQ. That one I'd entered prior to us going live. Apologies. I have already... Okay, so it's basically gone TP1, TP2. When I reach TP2, stop loss gets drawn to break even, and then I let it run either TP3, TP4, or back down to break even, which in this case would then close the trade. In this case, reached TP2, it just missed TP3, and then went down to stop loss. So the trade was in on my personal accounts and my prop accounts. But yeah, so it's no longer running. It's now done. Just so that you know. If we take a trade on, like, for argument's sake, the play account, we'll show you the entry. So we'll bring it up and we'll show you where we enter and what we're looking at as an example. But when it comes to my personal account and my prop accounts, I don't bring that up on screen.
Yes, no, yeah, literally. So same as that, guys. I don't Mads the trader, or Mads the trader, and I were chatting yesterday, and I did give a sneaky sort of giveaway on
Yesterday?
Last week.
Last week, I was about to say. She wasn't on yesterday.
Did I say yesterday? I meant last week.
It's okay. We understand you're having a little bit of a day.
I'm having a bit of a day today, and I did give a little bit of a sort of sneaky thing about my sort of my portfolio, but I don't bring my portfolio at all to stream. As it's my business. However, I do bring my 100k live account up that I passed on the 5ers, I passed on London Live Trading Floor. Then I traded live on the 5ers, and then I also trade this 5k. Anyway, gold. This is what I'm in. It's a little bit risky. We seem to have a bit of, heavy selling pressure coming in. This area here, we have got Tokyo low down here, so we could sweep Tokyo before moving bullish. However, I like the fact that we had this consolidation here. Nice clean break and close above, consolidation, nice clean break and close above, pull back, and then hopefully a continuation higher. Now, that's what I'm wanting to see. If we don't see it, that's absolutely fine. I'm taking this according to my plan, so I'm glad that I'm in it. Now, there's two areas of interest for me here on the play account and here on the play account and the live 100k. However, there is a chance this could hit stop loss. Knowing the way that my day's going, it's probably highly probable that it's going to hit my stop loss. However, like I said, 0.5% risking on my 100k and 2% risking on my play account. So we'll see how that goes. I'll bring it up on my actual screen in a minute if you want. Probably won't need to. It's probably going to hit stop loss, but we'll see how it goes. We'll see how this plays out. That's all I'm seeing right now on gold. Yeah, we've had really nice reasons to be wicking under, and we are bullish. If we break and close bearish momentum under this level here, I can see us targeting lower. But I'll be honest, I can't see this being bearish at all. We've got some really nice confluences here. We've got some really nice reasons to be heading up. But this 2-candle push here, it is bearish. So when I look at the news out, 7 a.m. we had the climate count for the pound. Go away. We had the climate account for the pound, average earning index, 3 months on the year. Then we had. No, we don't have anything. Then we don't have anything until 1:30. We have Canadian dollar CPI, and then US dollar at 3 p.m. So we're okay actually for now, unless Trump decides he wants to be a menace. We're okay in the markets trading. It is a tight stop. I will be honest, it is very tight. It is on the low. So I don't want to see much. I don't want to see much more lower movement, but look, if we do, we do. I'm making peace with that. I got 3 potential TPs. We got like a 1 to 1 to like 1.9, so just under a 1 to 2. Then we got this area here, which is the next area of interest, the next high point. And then we've got what I believe is Tokyo highs. If I get my indicator up, let's have a look. Yes, so Tokyo highs, high of interest, and then we've also got the current session high, which is London high. Honestly, though, if we can hold and consolidate and chop around in this area here, and then continue higher, I'd be a very happy chappy. But we'll see. We'll see how this goes.
Nice. So I was
like
just
I said, if we
Henry
can take
a message.
nice, if we can take these highs, yeah, I'd be a happy guy if we can take these highs, because that would be looking around 1.5. No, that'd be about 2.5 to 3% on my play account, and then it'd be about 1% on my live account. Yeah, 1% bang on. So yeah, we'll see how this goes. It'd be nice if we can get some bullish movement in gold now, but who knows? I think we're in the right time as well. I think, Trump's still asleep. I think he's back from China now, I believe. So he's not, in Asia time zone trying to create absolute havoc. So hopefully that he's still asleep and he's not going to go creating any taco moves.
Not sure. Gold to me is a little weird at the moment. I'll
It was
bring
a little
my
weird
screen up.
yesterday, mate. To be fair,
Yeah.
it was a little weird yesterday.
I'll bring mine up, and then you'll see what I'm indicating. So this was on Friday. So Friday we had a very bearish. Let me go over to the hourly, and then it'll make a little bit more sense. Friday was incredibly bearish. Really, really, really tanked on Friday. So as we were coming into the London session, we were continuing that downward pressure, but it was a little bit more consolidative. Let's put it like that. It wasn't a nice volumetric directional move like we had during the Tokyo session. Just on the hourly, you can see that we had still that attempt, but a much slower presentation on this upper end. So as we were coming into Monday, we started out going a little bit lower during the Tokyo session, and then we started pushing up. Now, this here is a base area on the 5-minute, where if I go back to the 5-minute, you'll see that during that Tokyo session, price pushed lower, created a base, and then volumetrically reacted out of it. When we eventually opened up the London session, we retested that base area and then started pushing lower. So if I just take this area as a high area of confluence, a high area of interest or resistance, where price struggled to push through, and we pull it all the way through back to yesterday during the New York Open, that's basically where we tested for yesterday on gold. And then we reacted out of that, pushing lower. So I'm not even going to look at the support down low. I'm just looking at the upper end, the resistance point. We opened up today back into that area, and then since then pushed lower again. Now, that's the upper area of interest. So right now, a higher area of confluence, an area of resistance, struggling to push through. If we're going to go bullish, it needs to break through that. So I agree with you there. However, if we come back down to the lower end from yesterday, so the whole week so far, apart from the Tokyo session on Monday, we've struggled. So if I can pull this back as well, you'll see that we've struggled around this area. This was the only time we were below that area at all, was yesterday during the Tokyo session, with market open, price pushing a little bit lower, trying to continue Friday's downward push, failing, and then going into consolidation. The consolidation that we're having is, if this was your established area, so if this is your area of resistance, look how many times we've really struggled to break through. If you ignore one final attempt down here and you ignore this, you'll notice that most of your attempts are within this area. Fair enough. The whole of this week so far, from yesterday as well as this morning, has been in this area, struggling to break through. Now, I'm a little concerned because it means that we've entered consolidation, and the consolidation is this whole segment that we have here. So the whole of yesterday's London session, New York session, this Tokyo session this morning, and the current London session that we have now has been range bound. So if we're going to look for trades, it's going to have to be either a scalp, taking from the shorts, trying to buy up into the highs, or from this low area here, trying to buy into that upper area. So looking for price action to get up there, and then hoping that we get some sort of break higher. Alternatively, we can, where we are right now, because we are testing it currently, see whether or not we're going to actually try and break lower of this current low, which is also the low of Tokyo as well. So in my mind, we're kind of on a knife's edge at the moment. I can't see a directional bias just yet because we are consolidative across yesterday into today. However, we do have a much lower area of interest that we can come and test, which was the week low so far, which happens to be yesterday's low as well. We are struggling to pick up higher, and we are making equal lows on this area of support, but we're not reacting that strongly off of it, which makes me feel like there is a potential for us to come a little bit down and see if we can come and test yesterday's lows. I don't know if we're going to have it right now, though. We'll have to... I don't know. I'm going to be sitting on my hands with gold. If I'm going to be taking a trade right now, it needs to reject off of this area where we are right now and start showing a higher... Okay, so let me remove all of the drawing.
We've had a nice sort of that bullish engulfing... bullish momentum close, nice wick to the bottom, very little wick to the top. We've had that almost perfect reaction candle. We just need that follow-up momentum.
But here's my problem. Being a little bit more price action driven, you can say that we are having higher lows and higher highs. So if each one of these points is a high on the lower time frame, and these are all lows, they do look like they're creating some sort of upward start to a direction. However, then you have the lows that get swept, the high gets swept, the low gets swept again. So you're having this current expanding triangle, basically. It's expanding right now. And the question is, how deep of a push are we going to have, and how deep of a drop are we going to have, and how high of a push are we going to have? And then eventually, is this going to start doing this, which is not great price action in my opinion. So I'm just waiting to see the reaction here. We've created a slightly lower low in relation to this previous low that we've had, and we've created a higher high in relation to the most recent previous high that we've had on the low time frame. If we go onto the 15-minute, the same idea. We're pushing lower from the high that we had so far. If this was the channel, we've broken the channel. And it would look like, if we're just following on the channel, that we're going to potentially have some sort of bullish price action that's going to follow suit now. But I want the confirmation. Because this was a strong sell attempt. Two very strong 15-minute candles, even on the hourly as well. It is a strong current selling candle.
True that.
Want to see whether or not it's actually going to continue. Let's say that.
Hopefully we seem to be attempting to pull back on this candle, but we are trying to push up as well. We're really fighting on this candle. Hopefully we can just have that, sellers give up and say, look, we've tried, screw this, we'll try again later, and then we can have that momentumous push and continuation higher. We'll see. Like I said, I really like that 5-minute close candle.
Yeah, the 5-minute looks good. However, I want to see the follow through. I want to see it follow up. The thing is, we have had nothing but bearish price action the whole day. That's one thing that goes against buys for me. The second thing is we are still... Okay, you can't see it now, but we had the slowing of the downward momentum. You can see it on the MACD down here. But you can also see it on the price action as well. It was really struggling on its way down. So I want to see whether or not we can either gain a little bit momentum pushing lower or actually gain some momentum pushing up. And we have yet to have that as we speak. So that's why I'm saying right now, sitting on my hands. Please look at Euro NZD. I'm adding a position in Euro NZD longs from the 9th of March, 24th of April, and the 13th of May. We'll have a look at that for you, but first I'm going to have a look at USD CAD because that was asked earlier already, USD CAD.
Seems well, Raphael. I just saw your comment, mate. I was just scrolling through now. William, when are you coming down to London for a nice deserved pint? Summer is coming. Soon, actually. Well, I say soon. I want to be up in London a little bit sooner, but I am in London in October for an event that I'm speaking at, but I'm going to try and get up there a little bit sooner. So not only that, guys, I stream here every single day. So the moment I'm in London, I will say, guys, I'm in London. So, and then you guys can drop me a message and we'll all go out for all those
Join
London
me for
local,
a point.
yeah, all those local London traders will all go for a beer. There's a trading pub as well, or trading bar in London, I believe. So we'll go for a trading pint.
A trading point.
Maybe I'll do like a live stream. Maybe I'll do a IRL live stream, and in real life. Or is it IRP, in real person? I don't know. You know when you see those streamers?
IRL.
It is the IRL. Okay, yeah. So we'll do like an IRL live stream where we'll go around in person. Oh no, yo guys, it's Will from the 5ers drinking. Can you imagine the chaos? Yeah, maybe that
I actually can, like, legitimately, I can see the chaos that would ensue from you consuming a few beverages and then trying to take a trade.
Funny, could you? That would be so funny. Maybe I should.
Yeah, I'm just gonna say yeah.
Should we do like an evening stream? Do you reckon we can have it with the guys?
No,
do an evening stream.
No. I'm saying no, just flat out no.
Down here.
I'm not getting drunk and then having people ask me questions and then my filter is blocked and I cannot contain.
Fair point. Okay, why don't we turn?
Nah, guys, you guys are the best.
Just shut up. How about we turn chat comments off then? We turn chat comments off. I'll get a bottle of whiskey in, a couple of cigars, trading, live streaming, boom. What do you guys? Yeah, what do you guys think? Put a W for whiskey in chat if you want to see that.
I don't think anybody wants to see me drunk. I have not been drunk in
lies.
10 years.
I already know he's gonna lie. Okay, no, yeah, fair. Okay, drunk. We've been tipsy together.
We've been tipsy. But I've not been drunk in like 10 years. Like my bachelor's was the last time I was drunk. The rest of the time it's been like 1 or 2 drinks, tipsy. But I've not been this level of drunk since my bachelor. So
I can't. Yeah, same as that. I can't remember the last time I was that drunk. I think the last time I was that drunk, I was pretty ill the next day. Like I said, I had like a 3, 4, 5 day hangover. It was. Yeah, it's just not okay. I just gave up getting drunk from then on.
Yeah, I'm not a fan of it anymore. Anyway, USD CAD. I'm having a little look here, and we were on the higher time frames. We were quite bullish over the last few, like from the beginning of this month. So the whole of May, the last 2 weeks or whatnot, we've been quite bullish. If I'm looking at the higher time frame, I'm seeing there's a few areas of potential, like. Here specifically is a very nice area. So it can be a little bit wider, but a very nice area where we've had reactions, rejections, price trying to break through, wick above, starts pushing lower. I have a few areas that we can test. As of right now, the most clear area to me is the current weekly high, which is Monday's it's Monday's high, which we're just on our way to come and test. If you look down on the hourly, we are a little bit consolidative between these two areas right now. So this zone here, which is Thursday's high of last week, Friday's low, well, not the low of Friday, but like the New York low, yesterday's lows of New York as well as London, and then this morning's lows on Tokyo. And then we have the high point of Monday, or on Friday in this case, which happened to have been retested yesterday morning during the Tokyo session. So, to me, USD CAD is bullish in general. So, for the whole month, you can see that we're trading above the 50 EMA. We have clear higher highs, higher lows. We're definitely making higher price action. However, we've slowed down ever so slightly, trying to push higher from yesterday. So yesterday kind of slowed. if I had to put my money on a trade for USD CAD, it would be a buy. And I would probably try and have either the highs of last week Friday be broken, tested, and continued from, or I would try and look for another area slightly higher, somewhere over here, as a area of take profit that I can hit. So for right now, my first area of interest is 137.62 to 137.67. And then should this area be disrespected, meaning we break through, retest, and start pushing up, I would want to look for 137.81 to 137.90, with the eventuality of trying to push even higher, getting to 138.23. So I'm very much bullish on USD CAD right now. This is purely on the technical from what I can see. Yes, it is a little bit slowed, but we have at no point tried to really retake new lows. So I'm definitely looking at USD CAD as a bullish movement. Now, this can change. If we respect this area up over here as an area of resistance, meaning price comes into it, rejects, tries to push up again, fails, and then continues lower, then all of what I've just said falls to the wayside. And then we're looking at potential shorts.
Well, that's
where
the
are we going to be
as well. You know, you can be wrong pretty quickly.
Yeah. Where we'll be looking for then is potentially these lows here to be broken. And should they be broken, we're going to look for lower swing points down here. So the swing point of Friday, if that gets broken, we're looking for this slight area of consolidation that we had during Thursday. So if we fail and we start presenting with lower highs, lower lows, and it starts building up momentum, then we can start looking at sells. But right now, very much bullish viewpoint on the market. That's what I'm seeing on USD CAD.
I don't like this reaction area from gold. I love the reaction. We're getting some bullish movements, but we've just come up and we've rejected from the 45-48 level. I don't want to see us reject from there, because technically, if I just bring up my screen real quick and just make sure I had the right screen up, because you guys can see that we've got this area here. We got high. In fact, before we put in this new low, we had high, low, break and close under this low, because I was more interested in this low here. However, we have got this imbalance zone here, and we've rejected off of it, which could mean that. But we were close to hitting a 1-to-1. We were just close. We're about $100 off on the live account from hitting a 1-to-1. I don't know. The thing is, so when it comes to risk management as well, guys, you know, when it comes to being psychologically, I don't want to call it vulnerable, we're psychologically exposed, let's say. When I feel psychologically exposed, I tend to go a little bit more mechanical. I have the ability through, you know, working so hard on my psychology that I can now switch it on and off. I can now say, right, okay, look, Will, you are, you know, psychologically exposed in the markets here. You're not on top form when it comes to your psychology. It's time to look strictly at the mechanicals. And, you know, you can analyze and you can take discretion into consideration, but just bear in mind you're not top form peak condition when it comes to your discretion. So right now, like, discretionary speaking, I'm questioning the trade. But because I don't feel like I'm on top form, I want to hold this for stop loss or TP. You know, I don't want to be trading this discretionary right now, because I'm worried that if I trade this discretionary, then if it hits a full TP, it's potentially going to give me a more of a heightened emotion than it should do.
Yes. I agree to that. I have found that if I have not slept well, I tend to have let's say a weaker mental framework to work off of. So if I've not slept well, or if I'm tired, or if I'm grumpy, it impacts my trading. So if I want to take a trade and I'm not feeling my best mentally, I do not make good decisions in the market. I have a higher likelihood of either being a little bit more revengeful when I'm trying to trade, or I'm trying to catch trades that are just not according to my strategy. It's not an excuse, but it is something that I have recognized about myself. I need to be in a good frame of mind. I need to have good sleep, good energy, in order to be like mentally ready to say, you know what, this is a good decision, and I'm thinking it through properly, and there we go. So I agree to that, mate. I agree.
Yeah,
Good
I
sleep and
respect
good
that.
mental time frame of good mental health is good within trading. It's a requirement.
Yeah, 100%, mate. And so I need to see a. Hey, go about the Bitcoin. What is good, Dick? I need to
Hello,
see a break
Doc.
above here, ideally. But I don't like this 2-candle wick here.
Gold, like I said, gold needs to prove to me that it wants to push up. As of right now, gold
As
is
of right now, it's not.
definitely
I've gone
range bound, and a bit more on the selling side of that range bound.
I've
needs
gone
to
from
prove that it wants.
$350 up, which is just under 0.5%. So just under a 1-to-1, straight back to hit a BE. So I'm back to a break-even bounce. I need to see a rejection here, and a strong rejection.
Yeah. I agree. Like I said, it needs to start showing that it's got momentum.
Yeah,
Candles need to start proving that it wants to push up. Like,
yeah, 100%.
AUD is getting destroyed today. Luckily, I'm not trading it today. Yeah, I saw that earlier, and I thought to myself, oh, not good.
I think everything is just a bit all over the place today.
If we start pushing lower on Nasdaq, I might take a sell.
Yeah.
You know what I'm gonna do?
If
Let's do this.
if GU closes, I may consider selling GU.
Okay, so
Same with EU.
where's this drawing tool? We had Can everybody see this? Maybe I should make this one a little larger.
It's a little bit fine, but I can see.
I'm gonna make it thicker, bruh.
Get that thick out.
There we go. A little bit better. All right. So you can see this area here this morning was very slowed, struggling to push lower, and then we started to push up. So this was the established area from which I wanted a reaction off of, start producing a higher high and a higher low for me to enter.
Ho.
Yes, definitely. Which led to me entering on this candle over here on my accounts, and then eventually hitting TP2, missing TP3, and starting to push lower, taking me out. However, this area has just been reacted off of once again with these 4 bullish candles. I want to see whether or not this is a strong reactionary push yet again, or if this is the turnaround. If this section is now trying to push lower again, trying to test these low sections down here. And it will be proved by these candles. So if I zoom in, these candles here, this follow-up ones, not taking these high points up here. It could be a bit of a retrace back to this base area that we have here, this area of what was resistance now becoming support and continuing higher. That would be great for a buy. But for a sell, it needs to disrespect it. It needs to break through, retest, and then continue lower. So in this case, this zone down here, we need to break lower, retest, and continue. And then I'm in it for a sell. But as of right now, it's not ready yet, let's say. It's just not quite there.
Yeah, yeah. I can. I don't know. I still like it for buys if I'm honest, but I could see why you'd be thinking sells, and I can see why you say it's not quite ready yet.
So here's another thing. I marked this up yesterday, or I showed it yesterday. If I just go over to the daily, we have the earnings reports for Nvidia, which is going to be the 20th, which is tomorrow. All right. So
Yeah.
we've had earning reports previously, but if I go to the previous earning report, like here, you'll see on the 4-hourly, it says the 25th, but the earnings report happens on the 25th, but on the 26th, when we have market open, there's a reaction. And almost every single time we've had an earning report on Nvidia. So the earning report happened the 25th, but the 26th, with the market open, we've had some sort of reaction. So go back again here to the earning report of the 19th of November. On the 20th, we have a reaction. It opens up higher and then sells off. The previous one wicked lower and continued lower. So just go and have a look at all of the earning reports for Nvidia, which is like 13% of the Nasdaq. And then you realize that there's some sort of reaction. Now, if I then go and mark it like this, where I have Nasdaq, come on, where is Nasdaq? There we go. If I look for the days with the Nasdaq when the stock on Nvidia had an earning report and then a drop, in this case, with the open of the market, it's all the way down here. So if I just do this, just want to zoom in. So there's the earning report. You'll see my mouse cursor is showing the overlap. So there's the earning report on the 25th. On the 26th, the New York Open is a massive drop on the hourly. So if I were to go down to the 15 or whatnot, you would see that the New York Open for Nasdaq drops price lower. So this is what I'm looking for Wednesday's price action and Thursday's price action. I want to see whether or not the earnings report is going to be positive. And if it's positive, there is a potential for us to take profits off of the stock. So it's going to push the stock. It's going to open up higher. People are going to take a little bit of their risk off of the table. It's going to push lower, and then we'll eventually see whether or not we start picking up. So I'm going to be looking at that to see after earnings report on Nvidia for Nasdaq. And the earning report, like I said, is the 20th, which is tomorrow. But the impact of it will be Thursday. So Thursday's market open of New York is an area that I'm really looking at to see what is potentially going to be playing a little bit. So right now, Nvidia Corporation is having a bit of a pullback. I would love to see whether or not this is going to be a full-blown just sell off a little bit and then continue up higher, or if it's going to wick higher, dip lower, and then start picking up. So I'm interested to see that for tomorrow. So for me, I'm going to be keeping my eyes on Nvidia's earning reports tomorrow, and then deciding what I'm going to do for my trade on Thursday for the Nasdaq Open on New York. So it's an interesting thing. So I'm going to be looking at that. Just something that I've noticed. Let's call it correlation. Just some correlation that I've noticed. So interested to see how this is going to play out.
Yeah.
Okay, so on the 15-minute, Nasdaq is starting to push a little bit lower. On the 5-minute, definitely so. So here's what I'm going to do. I am going to take a sell on Nasdaq on the play account. I'm going to have my stop loss be, let's say, above this last candle here, not entirely above this point. And then I'm going to look for a 1 to 2. This is 2%. I'm going to risk 1%. This is going to be a 1% trade. Do I want to have a break even? No, I do not. Am I happy with this?
No, you want to risk 2%. You want to go big or go home.
I'll go 1%. All right. So I'm taking a sell on my play account. The idea is to see whether or not this area down here can be taken, can be swept, eaten up, destroyed, and then price start pushing lower. If it doesn't, it's 1%.
Yeah,
Is there nothing to worry about?
as long as you stay consistent with the risk, like guys, I risked 2% yesterday, and I got, here's a quick one. I earned 3% back. I was 2% down, earned 3% back. I'm up 1%. If I'm fluctuating with my risk, risking 0.5%, then 1%, then 0.5%, then 1%, then you're going to struggle a little bit more with consistency and earning back profits, especially when you lose them. So as long as you're consistent, 1% is nothing. 1% is 1%. But as long as you remember that you are risking 1%, like if you're going to make your bed, lie in it. If you're going to risk 1%, commit to the 1%. Same goes with 2% as well, mind. If you're gonna risk 2%, stick and commit to the 2%. If you're gonna, do 0.5%, stick and commit to the 0.5%. That's why it's so important that you understand your strategy and you understand how much you can risk. Especially when you're getting into the drawdown stages. Don't let fear take control of your risk. Allow your strategy and allow your data to. But yeah, what is 1%? 1% is 1%. It's nothing. Although I'm risking 2% on this account now, and it's a break even. It's I'm down $15 on it. In fact, let me bring it up because I brought it up now. I've shared my screen. You're completely hedging my trade as well, actually. I just noticed.
I am crazy.
So, I don't know. Look, I don't like this, but I like this. Gold is just gold at the moment, man. Gold is just being annoying. It's been a nuisance. So, the best thing we can do, like I said, I'm not psychologically sharp enough today to have discretion on this. Worst case scenario, I lose 2% on my play account and I lose 0.5% on my live account. If that's the case, so be it. I'd rather be mechanical on this. Yo, LJ,
Yes.
good.
LJ, what's up, mate?
Not too much. Dollar looks strong across the board.
It doth.
Waiting to
doth
see.
it?
How about gold? Give me some fundamental good news on gold.
It depends which way.
Yeah, that's enough, LJ. That's enough. Shush now. That reaction was enough.
I think gold goes lower. I think everything's looking like that. Aussie's getting pumped today. Euro-dollar's starting to drift lower. I can see more downside on
Euro and pound. I want to be selling at some point, I reckon.
Yeah. Dollar yen also looks like it wants to punch through this the highs today, 159.15, and then head straight to 160. So, yeah. Next Oz PM in the house.
LJ.
Yo. How we doing, unbiased trader? What do you guys how you guys been?
I've been good. Got a TP2 on Nasdaq a buy. It missed TP3 by, dude, like fractions, and then eventually came down and hit break even. So it just missed it, but good trade, locked up 0.75. This one over here I have taken now on my play account on this one over here. So gonna let this one drift a little bit lower, and we'll see whether or not it's kind.
I'm short,
kind
hey. Yeah. I think we're going lower. Like everything just seems as though it wants to roll off. This is what we were scoping out yesterday. I would have liked to see a bit more of a bounce. So if we go back to Aussie first of all, I was looking for something like this: pull back through here, pick up, into the underside of this sort of gradient that we had coming through there, and come back into that head that we fell off from, and then eventually wander down. But it looks as though we're just kicking on already. So
yeah, pound's really interesting to me because I dollars, euro dollars clearly bearish, but I thought we could break and close under on the pound, but it seems to be holding these lows, which is really interesting. So I don't know, technically speaking, I probably wouldn't be in much today. I probably gold's the only thing I'm seeing that's nice, unless we can break above sort of the 134.065 on pound. If we can break and close above that, then maybe we could see some buys on the pound. But yeah, I see what you're saying. Everything just seems like it wants to fall off the cliff at the moment.
Yo, what's up, Pedro?
Morning, everyone. How are you guys doing?
Morning.
How's it?
Not too shabby. Gentlemen, I'm going to have to run off. We're going to be testing a little something in the background for an event that will be coming in the end of the month. So we'll be talking about it maybe in the next week or so. But we need to first test a few things, and then, exciting times. But for now, I need to hop out. Pedro, have a great day yourself. LJ as well, and Will, I'll see you a little bit later, my mate.
Sweet. See you later, bro. Same as that as well, guys. I'm going to pop off and leave you guys in the very, very capable hands of LJ and Pedro. So make sure that you're kind and you ask them all sorts of fantastic questions, and you're the chat that I know you can be. So, guys, thank you very much. Make sure you're going to smash that like button as well, by the way, guys. Let's see if we can get over 200 likes today. Smash the like button, subscribe to the channel, click that bell notification. Peace.
Cheers, Will. Thanks, Rich. And yeah, smash that button.
All right.
How's it going?
Oh, good, man. Oh, good. What are you looking at? The Aussie pairs are moving. We talked about it last week. They look like it's starting to trend. If not Aussie dollar, at least Euro Aussie and Pound Aussie, they are moving. Do you think that's the top now? Do you think that's the top on the Aussie dollar for now?
Yeah, I think so. Near term. If we go to the 4 hour, let's hide all this junk. We're pushing. There's this big kind of air pocket down through here. So obviously, I'm looking at 70.50 next, then that round number of 70 cents. And then potentially a further deeper push into 69, somewhere around here. So I think for now, this is definitely topped out. Like the Aussie the entire year has had a massive run in general. We can see down here like the seasonals. I mean, what were we up at the top? Like almost 8%, which is pretty huge especially for like a major currency, right? So yeah, I think it's about time we sort of wander back down. Run that right through there.
Where do you get that? Where do you get that seasonals? That means where do you get it from?
It's down I think it's just there by like default on.
You just scroll it down a little bit and you find. Yeah. Oh, okay, got it. I see them.
Yeah.
All right, just to see how much I use TradingView. That's
It took me a while to notice it as well, because normally I have the screen on the like little smaller one.
Yeah, you need to scroll down to find it. Yeah, that's actually nice to see. All right.
It's normally hidden kind of
down
here.
That looks good.
But
it's worth having it. I like it. Perfect.
Yeah. So I think Aussie dollar's topped. There's now questions around the whole continuing of rate hikes. RBA is definitely still looking at inflation, but they've even said themselves that probably going to pause on it and kind of wait. We've had 3 rate hikes already. That does take some time to actually filter in. And their forward projections do see now inflation coming right back down. So they're probably in the sweet spot. Is there really a point to hiking once more? Even if we did get that would be definitely the end of it. So hence it would just create a further, buy the rumor, sell the fact. We're done with the hiking cycle. Things start to come off. We're also seeing a lot of strength in the dollar at the same time, of course. So dollar yen is kind of eyeing this level that we're sitting at right now. it looks as though we want to propel all the way back up into the 160s, up towards the top of this kind of channel. Didn't quite get the lows of it after the intervention. We've now pushed right the way up. Kind of seems we're going straight for that. So yeah, I think across the board, we're seeing dollar strength. There's more pricing in of potential forward rate hikes. God, I really should clean up some of this chart. But we can see, yeah, euro dollar once again as well. We broke outside of that channel, dipped just through it a bit, tested the underside, and we've come right off. Small correction off after such a drop yesterday, and now we're back into that motion. So similar deal, euro dollar kind of looking down 115.50 or so. Momentum just seems one way right now.
Yeah. I kind of agree with you on that. Do you want to go already to indices as well?
Yeah, so indices, similar deal. So the NASDAQ over here. Let's go down to lower time frames so we can actually see this stuff. This was basically what I was looking for us to pull back into this sort of neckline here, then come off. We did get that. We had another little bounce up yesterday, hit that neckline once again, and now trailing right down. So NASDAQ, I'm definitely looking about 28,300, 28,400. And that would just be a kind of healthy sort of retracement. I think with the NASDAQ, though, obviously we do have to breach these lows because we do still have high lows through here. And we do have NVIDIA earnings to come through tomorrow, Wednesday, just after market close. So that'll be the deciding factor. If they put out some blockbuster numbers once again, rip right higher. If they're probably in line, then I'd say it'll be that, buy the rumor, sell the fact, and NVIDIA has a small pop, and then there's a bit of selling that comes in. So I think there'll be other portions of what they communicate in how they're talking about the whole China side of things, where they haven't really broken into China yet. So depending what kind of backroom deals might have gone on over the Trump-Xi summit, and some of that might filter through. So it depends if Jensen Huang gives any kind of indication around that stuff. But yeah, again, I think a bit of downside, healthy, natural. It's kind of one-way direction across the market. So I don't know what you're thinking.
Yeah, I agree with you. I think I started the week looking, basically finished last week looking more or less to that, which is some correction. Let me just bring my chart. Some correction on US indices. They look like they were starting to lose momentum. Where is it? Where am I? Where am I? Myself. Pedro.
Yeah, and got no chill. Yeah, bearish on gold as well, just by the way. So same deal in with the rest of the basket.
1 second, let me just show you yours again.
Sorry. Yeah, so again, it's a very similar deal, similar structure. We got high correlation right now. Had that dip down, come up, retest some of the prior structure. Was looking for that to cap. It has capped. We've kind of gone back and forth a bit, and now starting to roll off again. So I've got targets down somewhere around the 4,300s if we make it that far. It's gold. We could, pause somewhere in between 4,400, build some kind of base, and then move higher. But I do think we're coming a bit lower on gold for the minute. So,
yeah, okay.
Where's your chart?
Oh, yeah, my analyses are going to be quite similar with yours. Maybe we can start already from gold since we are here. I'm with you. I think I could see gold eventually navigating towards these levels, which takes us into 4,300s around this level. Are you going to take this low? Not sure yet. I think then we need to see how price reacts from around this level. But for now, I think price continues to break structure, and it can go down. Now, where to short? That will be a little bit more of a good question as well. Are we going to short from where we are right now, basically respecting today? So this was still yesterday's high, or by any chance we are going to try to squeeze a little bit more towards these 4,600s and 50s. You can see in the past that price has bounced from this level quite a lot. And maybe there's a chance that price could try to get closer to it again before just try to move lower. Or even if you do make a new low, maybe don't go directly into this level. Maybe try then to revisit this level again and to short it. So somewhere around here, maybe that's a good opportunity to potentially look for a short in the future. Maybe if you even look left a little bit, yep, even in the year, price actually respected quite nicely. If you look at this low, yeah, exactly around there. So it looks like that price likes these 4,650s, either as a support or a resistance zone. Now, if price does start to move to downside from here, perfect. If by any chance I was looking for longs, I'll be just curious a little bit how price would react from here to see if it holds, and then price could go, because this is actually a Quasimodo pattern at this point. However, I'm more inclined to look for sales, so this may not be exactly a reversal pattern that I'm going to be really eager to trade in terms of longs, but this is actually a Quasimodo pattern, because we have the shoulder, price moving up, we have the head, price break structure, and maybe could visit again this left shoulder, trying to go higher, and we have also this previous level of support that can actually be support again after the fake out. So and maybe you can collect a little bit of this liquidity from these lows, spike a little bit in here, and then try to push higher. But I would need to at least see something like this. So let's pretend that now price creates a little bit of a range in here. Maybe price can squeeze quickly, then come back, and then at least try to see if this structure is broken again, and maybe try to go long from there. And even more confident then, if you create a double bottom at this level, then any break above this high can be a second move to try to squeeze into that next zone. But again, I'm more looking towards shorts than longs at this point. But that's just an idea to look for longs if anyone is interested in looking for longs. But I'm with LJ. I think price can eventually go to 4,300s. And I think that could be a potential target and can go in alignment with the potential move to the upside on the dollar, and so on. Another situation that's maybe something that eventually I want to hear your thoughts, LJ, is your opinion about the war and that, until what point the market is kind of starting to move away from whatever it's going in there and try to look for new catalysts, new news that actually can affect and move the market. We can answer that question in a bit, but I think the market is starting to move on. It's already tired of that story and is looking for something new, which I don't really know what that's going to happen, what the new is going to be. US indices. A little bit of the same story. So we have the earnings, NVIDIA earnings on Wednesday, correct? I think Wednesday night after the closing or around the closing. So I was expecting, or at least I'm looking for shorts on US indices up until Wednesday. Okay, and then Wednesday maybe can resume the move to the upside. So both yesterday and today, and even tomorrow, maybe midday until the earnings, I think we may have a little bit of a correction, just to give a little bit of a breathing room to the market before potentially trying to go up again. So yesterday was a nice move. I actually wanted a little bit higher, not really got to the level I wanted. It was just a little bit higher in alignment with this lining here. It got a little bit shorter around the US Open, and I think eventually price can break this level, and I think it was more or less the same levels that you're looking for. I don't know if it was kind of 28,000 or 27,700, something like that. I think somewhere around here, I think maybe eventually price can eventually go there. Of course, we need to break this low. I think this low is basically the last low that created this high, and price is still respecting it. I think eventually can be squeezed. Now, for a short, is price going to just hold this level and it should squeeze? Is price going to fake out a little bit more into here towards yesterday's structure? Or by any chance, eventually are going to even try to squeeze a bit higher and respect this double top, and move lower? I don't really think that price needs to come all the way here. It will be my favorite, to be honest. The closer to the top, the better. But I think price can just find something around the structure and continue to squeeze and try to push lower. And breaking this level, I think it starts opening the door a little bit more to the downside. Looking at the other US indices, and I saw someone also mentioning the DAX in there. We can take a look at the DAX in a bit as well. S&P, quite similar. Okay, and basically what I wanted to say in terms of starting to lose momentum, because we did have a big momentum in these last few weeks, but we could see that price was starting to not really managing to break and continue. It was basically breaking new high, but kind of come back straight away to the downside, or at least retest the previous low, and eventually even taking some of these lows. And that's when you start noticing that the buyers are not as strong as they were before, and the sellers are starting to kind of participate a little bit more, fighting a little bit more for price, and the buyers don't really manage to just squeeze and continue to move higher. So when you start seeing these movements, especially the double top situation, then you can see the squeeze, then attract more sellers in here again situation. Eventually that's going to end up into a top, just like similar to the S&P as well, at around this level. Now S&P, I still like this level a little bit higher as well. Now price is respecting these basically red shoulders around this level. So for some people also, they may be looking at this move as a head and shoulder, or potential creation of a head and shoulder on the S&P, which eventually tends to become a reversal pattern, or at least starts to attract people thinking about reversal patterns at around this level. I wouldn't mind at all if price would squeeze one more time somewhere close to this level and then drop. We do have the same low that needs to be broken. Same thing that we had on the Nasdaq, and eventually price could squeeze a little bit more to the 7,200s or 300s. I think that can be a potential move in here. Now, the one that I'm quite interested is Dow. Okay, Dow overall in the higher time frame, we never managed to break new all-time highs this year, at least from Feb, and it looks like more of a reversal pattern to me. Price didn't really manage to squeeze through and pass. We do have this supply that finally price reacted from it on Thursday, and we started to break some structure in here. So is there a chance that we can go all the way? This one, I'm quite curious, to be honest. If price comes back into this structure again, I'm going to try to look for a sell, and I may try to even try to go all the way. I like the fact that we started to break a little bit of the structure in here, of this move to downside. And if this was just price action alone, this starts to look quite interesting to potential move, even potentially come out the back to this 47,500s, or eventually to fill this fair value gap that is around this level. So this is definitely something on my radar, and I'm going to be paying attention to the Dow, potentially to move. Now, it can be quite tricky to hold a trade for so long, because Dow doesn't really just move in one direction. You can spend a lot of time on the same place, and that's going to increase the cost of swap and whatever. We'll see what I'm going to do about it. But it looks nice for a potential long-term short in here, as long as, of course, the highs hold. DAX. Someone mentioned about the DAX. DAX was really good, this move, this reaction from this gap. I think price reacted really nicely, and we are basically back into this range. Okay. Now, what I would have liked to see on DAX to give me a bit more confidence to look for shorts, it would have been this level to be broken. Okay. Basically, this structure is managing to hold price. It managed to hold price in here. Price came all the way back and never managed to break this level. Actually respected kind of as a double bottom, and I would definitely like to see this level being broken, and this automatically would have become a quasi-model pattern. It didn't happen. Okay, so price never really managed to break this low, which would have given me way more higher confidence to look for the shorts. Now we still have the supply, so price can bounce from this level. I don't know if this was the level that someone was mentioning about the DAX, but price could bounce from here. But from here, maybe the only target available now to be just retest of the structure, and there you go. And you have your trade from basically this structure all the way to the next structure, and that's it. If price had broken this level, then potentially we can have this type of a move in here, which can still happen, but at least I'll be playing zone by zone at this point in there. If price eventually starts going a little bit more to the upside, then there's a risk that eventually can take the highs, or maybe one reaction from here still. But then eventually, I think all-time highs are going to be taken. But yeah, DAX can still find a little bit of a reaction from there. And then just to finalize, we can take a look at the dollar. Of course, dollar I think is bullish. I agree with you. I think dollar can continue to go higher, and that's going to push euro dollar, pound dollar, and so on to the downside. Price broke this high. It hasn't really managed to close that gap, whatever gap this is, and I think price can eventually try to go a little bit more to the upside, close to 99,800 or something like that. I think eventually price can go closer to this structure, somewhere around here. Is there any chance that price can bounce from here and try to go into this level? Maybe, but that wouldn't be exactly a trade that I'll be interested. Even though this level is still fresh, I think price eventually can squeeze more to the upside on the dollar. And then looking at the yen index, I saw someone also mentioning the yen index. The yen index finally managed to take all these lows. And the question that I had yesterday when price was actually creating this move to downside, it will be to see if this will be a follow through and eventually price would come back into a little bit these lower levels, or if this which is going to be some collection of liquidity underneath these levels and try to squeeze to the upside already from where we are. Of course, we do have these structures. Price needs to break above these levels to kind of confirm it. Somewhere around here, price can still find some bearishness and continue to squeeze a bit more to the downside. But so far, it looks kind of interesting that the price actually managed to fake out the levels and is already holding this structure, hold this demand zone, creating a new demand zone above it. So far, it looks like it's finding a little bit of strength. We continue to see many ministers from Japan or Bank of Japan or whatever it may be saying that they are at paying attention to what's going on in the Forex market. So anytime they mention that, there's maybe some potential of doing something. At least the market reacts to it. Looking at the dollar yen, I agree with LJ. I think dollar yen can maybe go a little bit higher, and then of course I think we are going to find a new squeeze on the yen. So that's something to continue to pay attention to. Maybe I might even this level on 59.490 or something like that. And then of course there is a risk that getting closer to 160s, and 160s I think is going to be definitely a level to try to short. From there. So at this point, what you can do on the dollar yen is kind of simple. Just draw a trend line or continue to follow until you actually see a proper low being broken or previous low being broken, and then maybe you start having some reversals around that level. For now, maybe a little bit more of a squeeze. And you can look at the other yen pairs as well. We have pound yen a little bit stuck. Euro yen is holding. Could also go a little bit more to the upside. We'll see what will happen with that one. And just finalize $0. Yes, $0 moving to the downside. I think that's the expectation. Pound also, even though we did have a little bit of a bigger move on the pound yesterday, but basically price just respected this structure. It's actually the same thing as $0 if you pay attention to it. The only difference is that the structure on the $0 was a bit closer to the structure when you compare the structure on the pound dollar. So we had this previous level of support, price broke it, respected, and moved to downside. The structure on the pound was a little bit higher comparing with this move to downside. Price kind of got close to it, also respected it, and then you'll see what will happen. But yes, it was a little bit of a bigger move. And then the one that I've been speaking the most about since last week, it was the Aussie. Unfortunately for me, price never fake out that high that I mentioned. It just fake out this one and it start moving to downside. And I agree with LJ. I think Aussie can come all the way at least close to 0.69, maybe close to this 0.700s. And yeah, it's a great move. It can still retest this level, can even go a little bit deeper again to here and look for a short. Again, I think breaking this low, I think that's kind of an artful move. And then the other ones that you mentioned as well. Pound Aussie working really nicely. So if I count those lows a little bit in here at the structure, move to the upside, and I think it can go a little bit higher, at least close to this next structure in here. So that was a great move. And Euro Aussie doing exactly the same thing. Fake out that low, still respected the other lows on the left side. And he can go higher, and I think these Aussie moves, I think they are. Last week I talked about them, that they most likely would be a great opportunity to trade, and they are working and they're moving. All right.
There we go. All right, guys, that's the stream. We're all done. That's have fun.
Questions. LJ, about the war and the way the market is reacting to it. What is your opinion? Do you think that, or at least what is your sentiment based on what you see price doing and based on the news that are coming in? Do you feel that the market is still too focused on it? Is trying to move on? What is your feeling?
I think the market generally has moved on. Oil market is definitely still, very much front of mind as far as the war, but the broader market has definitely moved on a bunch. Trump pulled back on his, his chatter. He was going to say he was going to strike Iran today, Tuesday. He's pulled back on that after the Gulf states were saying like, hey, can you just stop, right? Just leave it alone. Keep negotiating, we'll get somewhere. So yeah, market hasn't really rallied off that. We weren't really selling off particularly because of it prior to that. It's all just going back to that rates outlook. So as far as that portion of the war, the market is concerned with that as far as when inflation actually might decide to actually roll or show up in the numbers like down the line. So 6 months from now, that kind of thing. So we're more focused on that. But as far as the headline stuff of the war, market's just, I don't know, oversaturated, doesn't care. Because everything goes back and forth. What's the point of moving on anything right now? I think it's very much understood that it's going to be a gradual situation for it to be resolved and focus on other things.
Yeah, I kind of agree. I think at this point, the market is no longer kind of afraid of any tweet in the from Trump that can affect the market. I think market has moved on a very bit, unless there is the word we got an agreement, 100% deal, and then maybe that's okay. That's going to be maybe the last squeeze or the last move. But it looks like, and the reason I mention that is because it looks like that the market is starting potentially new trends, and we look at the dollar. I think the dollar maybe actually start to resume to properly get in a new trend, and I'm not saying that just because it's maybe a 1 or 2 days move. I think can be the beginning of something, and the same thing with the euro and the pound and so on, kind of maybe correcting a little bit. For example, the Aussie dollar as well, that has been super bullish. Maybe the next days or weeks can see a proper correction. The question mark is always the US indices. Up until what point we are going to see a little bit of a correction as well. We basically grew 28% in 1 month and a half or something like that. That's been quite massive. You kind of mentioned it, that the stocks, they were kind of the cheapest ever. So you were correct on that one. Market actually rose a lot since then. And then gold also potentially can continue to move a return to the downside. So basically the way I asked that question is exactly because it looks like the market is finally ready to go into the next phase, and also price action wise in terms of new trends, and also the market is maybe looking for new catalysts that can actually market, which at this point I'm not really sure what that's going to be, because looking at the data, we're expecting some high inflation coming in. We are going to have more inflation data even today in Canada, tomorrow in the UK. But in terms of interest rate decisions, I think everyone is expecting just to hold. No one is really expecting to rise, at least looking at the UK or the Fed or something like that. So there's no surprise in that. I think it's let's see what what's the next big move or the next big news, or what Trump is going to kind of surprise the market with that hasn't surprised yet is going to be next. That's a little bit of my expectation.
I think if somehow like we go back to kinetic war, so we're actually firing missiles and that kind of stuff again, obviously that would be negative for the market. That would just set us further in the current direction we've already got, dollar running back up, that kind of thing. If we did get, some kind of, all of a sudden they figured it out and the war's completely over, the strait is completely open and everyone's all, I won't say friendly again, but not at each other's necks, then I'd say we get like a near-term blip in things running up, and then basically just continuing back into the current state we are. Because again, people will just be looking forward to, okay, how much damage was done over that period? How is that going to hit inflation, the consumer, that kind of thing going forward? Does the Fed potentially have to hike rates or something? I don't think they will. I think they'll just stay tight. But the market is starting to price that in, and it'll be basically the next catalyst, I think, is just going to be Kevin Walsh. Around the next words we hear from him, what kind of commentary he gives, what kind of indications he gives going forward of how he wants to run the Fed and where he actually sees everything right now. And then that'll either confirm where the bond market is pricing rates for various things, or if that needs to be pulled back just a little bit. So that's about it. We're kind of in that wait and see period. And then, essentially just go back to trading on data again as it comes out, better, worse, we go up, down. That's it. But it's oddly
strange. Because how since beginning of the year, basically we had a lot of news catalysts, like everything's going on, like started with taking over Venezuela, then more oil, and then eventually getting into this war, and then whatever it may be. So it has been kind of this first 5 months of the year has been quite chaotic in terms of movements and news. And now kind of it feels like, okay, it's kind of stand by a little bit. Let's just see what's going to happen next. And actually, when looking at oil, to be honest, maybe there's an opportunity to start looking for sales now that we are getting closer to these 110s again. Price has been trading within this range, and unless there's something really catastrophic happening that's going to push oil to break above these 115s or 20s, I think the natural next move is going to be just to try to correct again and bring into the downside. Okay, I don't really like to trade ranges, but if there is a range that maybe you can try to trade, is this one, because the impact of seeing oil going all the way, that would scare everyone. So I think the natural move next on oil is actually to just try to correct again, maybe even if it is just getting closer to 100s. I think there's maybe a potential moving here on oil for a short. And I haven't been trading oil for a long time, but this looks like an interesting one to pay attention to.
Yeah, I agree. It's basically that long end of the futures contracts, or not, I shouldn't say long, but further out futures contracts for oil that have started moving higher. Hence, it's brought the spot price up as well. They've started moving higher because obviously just the situation is going on for longer. But I don't think we're going to, go terminal at any kind of point. So I would agree. Some kind of area up here to, potentially short back lower. Oil's definitely a risky one though, but we've calmed down a lot, so it is much easier to trade now. So
yeah, definitely. Just Derek mentioning, I have a good strategy for you. Just do the opposite of what I'm trading. Fair enough.
Oh man.
Yeah. We have demand. What's his name again? Sorry, 1 second. No, not this one. Nimayu. Okay, I hope I'm pronouncing your name correctly. He's talking about an order, and I think he's talking about Nasdaq. I'm not really sure what is he talking about though. What order are you talking about? Who shorted Nasdaq? Do you know what is he talking about? Was it about Richard before, or?
No idea. Absolutely no idea. It might have been Will or something. Rich was in Nasdaq shorts.
Okay,
so that might be it. But I mean, we've been trailing down this past bit, so I would just say yes, his shorts are further in profit. So I don't know what specific order or something. If there was something else,
yeah, me neither. Okay. All right. Any other questions? Any other comments on the charts? I have just one comment here from a biased trader. This is about football. Arsenal is close to win the Premier League. Let's see next week. Well, if City loses today, then we're going to be the champions. Good luck with that. It's interesting. It's interesting to see. We'll see what's going to happen.
I'm glad you cleared that up, because I wasn't thinking soccer.
No, that is football. This is football related. To be honest, I was just a little bit in the end just supporting City just because Bernardo is his last season, and I'm kind of I love that guy. But yeah, it is what it is. Arsenal is deservedly going to win the Premier League. We will see. And it's about to be the World Cup. That's where the focus is. That's where the focus is. So I think today is a national team, a Portuguese national team call up. I have a little bit of hope that I may be called up to the national team. We'll see if that happens. Let's see if the manager remembers my name and kind of if he calls me up to go to the US. With Ronaldo and the rest of the band, we'll see.
So if you're missing the stream, that's why.
Yeah, definitely. Yeah, FIFA next month. Yep, we'll go for the World Cup. Okay, markets. What else? What else do you guys want to look at?
I saw this as well. Please, the 5ers server on MetaTrader for gold is at 2 points or 3 points decimal. I need the information. What do you mean? In what terms? It's 2. It goes to 2 decimal places. But you should be able to just bring it up. Bring up MetaTrader and you can see that. I don't know why. Why?
Yeah, I think you can see that.
In such dire need of it, yeah. But yeah, it's two decimal points.
Yeah, 2 decimal points. You can see that.
Yeah. Yeah. Sorry, Pedro. I don't know if were you looking at something else before I brought that.
Oh,
up?
we did actually quite a good summary. I think someone also mentioned Bitcoin. I don't know what comment was it. Bitcoin. Bitcoin buy. What's your take on Bitcoin nowadays?
Similar deal. I think we kind of head lower. We had some of that push back up towards that 80 zone. And I was talking about this with Dirk yesterday. You started seeing everyone go like crazy that, is my chart's not changing. Let me.
Okay, 1 second. I'll bring mine. And OJ also left. Okay. Bitcoin. What we have on Bitcoin? Bitcoin was had a good run. Okay. Which started almost to look like that this could be the bottom. This 60,000. I mean, price doesn't really need to go further down than that. However, Bitcoin now just got closer to the first level of resistance, let's call it like that, of structure after this correction. Okay, so basically Bitcoin getting a little bit into this zone, and you start finding a little bit of a selling pressure at around this level. So first and foremost, Bitcoin, in my opinion, still needs to break this low. Okay, breaking this low, it may start opening the door for price to come back closer to these 70,000s. Otherwise, if this holds, then potentially can just resume the move higher. And if by any chance this level starts breaking, I could see Bitcoin eventually going closer to. Yeah, I don't like this level. I don't like this 69 some. I like this level potentially to look for a move to the upside. Now, is this the bottom? To be honest, I'm not really sure if this is the bottom or not. It could be. Maybe Bitcoin doesn't really need to go further down than this 60,000. It's already a big retracement, more than 50% retracement from the all-time highs. I think it could accumulate somehow price from around this level and squeeze to the upside again. Maybe need some data, some positive sentiment in the market that actually things are getting better, to see crypto and Bitcoin in particular going up again, and to try to create a fuzz again, try to bring people into Bitcoin all over again. But in my opinion, I think this level would be quite interesting to try to look for some kind of longs. But you mentioned that you are looking to buy Bitcoin. Yes, you can maybe try to buy Bitcoin from around this level. I would like to see now at least some of this structure being taken. Maybe this top in here could be reasonable, or if price kind of squeeze a little bit more. Maybe something like that could eventually do. Would be a good price action to look for potential long on BTC if that's the case. Otherwise, as I mentioned, if price does break below this level, I would like to see it coming out the back close to the 70,000s, and then potentially could go higher. That would be my ideal scenario.
Yeah, sorry, my browser crashed. So yeah, we were talking about Bitcoin yesterday with Dirk. So what I don't like is that we've come up to the 200-day moving average and basically rode that down. Now we've pulled back a little bit further. We're sitting on that 50-day moving average, and this is basically the by some of the needle tops to the left, right, in this lower trading cluster. So I think either we need to bounce off here, or my preferred is for this to actually come lower 100-day moving average, that's about where you were looking at, Pedro, in that lower cluster. Ideally, I'd still want to see us come right down to 56K for another test down around that 60. That's what I'm hoping for. That's what I'm looking for. But definitely in this zone through here, there is a fair shot that we could hold up through there, and that forms the new base and then push on. But I prefer to see somewhere down here to pick up Bitcoin.
Yeah, I wouldn't say no to that. I'll definitely not say no to 56K. I do like that level as well. But yes, I think the way price actually managed to hold at 60,000 after a big spike, and then price started to create a base around there. It's actually kind of a Quasimodo. Maybe that can be enough to continue to hold price. And now within this new, basically, yeah, what I mentioned is we do actually created a Quasimodo pattern around here after this low managing to hold price. So yeah, somewhere around here, I think maybe it's enough. Of course, it also depends on what you are trying to do here. Are you trying to buy and hold for eventual price to come back to all-time highs? Are you just training it in the lower time frame? I think you mentioned on the 5 minutes time frame. That's a totally different approach.
Yeah, that's going to be totally different.
Yeah, that will be completely different from what maybe we're talking about. That 56K, I actually have those lines around there as well. So yeah, I would like to see that. I don't know if we're going to see it though. So yeah, we'll see. It's going to be an interesting one.
I think lower time frame.
Go ahead. Sorry.
I was just going to say lower time frame, like 5 minute. I'd still be looking like generally for downside. I think kind of similar direction to everything else. I think we've got a bit more downside pressure overall. You've got this clear sort of higher lows being constructed through there, but we're looking to sort of break that just at the minute. So if that does actually kick through, you might see that punch right on. And then obviously it's just each of these low points through there that would be your near-term support on 5 minute. But I prefer sells overall.
Yeah. Yeah. And then even if you do go a little bit higher, then I still like this level. Potentially can still push price to downside. Actually, maybe 2 levels in here, to be honest. So yeah, we'll see. We'll see what will happen on Bitcoin. Morning, Abdullah, my friend. How are you?
Morning.
Yeah, share with us what you are looking for on dollar yen and all the rest. I think our friend here misspelled something. I don't know if you wanted to say 60K. What's the number? 70K? What's the number next to you? Maybe it's a 7.
Or the UK.
Yeah, or UK, yeah. Like, what is the logic to go to UK? I want to know. Yet I don't know either. Like, it's May. It should be sunny. It doesn't stop raining, so I don't really know what's the logic to be here. Yeah, so there's a typo there. It's either instead of a U, it's a 7, or the 0 is it shouldn't be there. So, my friend, just clarify that for us.
Yeah, I assume it's 7.
Yeah, I think maybe 70. Yeah.
What's the logic? I guess the structure, like momentum to the upside slowed down. We've got progressive, lower highs coming through. Basically just the overall momentum is sort of stalled out.
Yeah, and if I was about to answer my side of it, is because of this price action as well. So basically every single low in here has been respected already. Prices have taken the orders from these levels. So as soon as it breaks this level, kind of in my theory, all this is compressed and price can start going below 63,200 and then takes us into this level. And then you have a double bottom in here, and why not just to kind of squeeze into this range around this level and try to go higher. Maybe we can change time frames as well. Yeah, this 4-hour demand zone looks good. This one is not bad neither, but for some reason I prefer to go just to close to 70s. Now I didn't know that this was a 200 moving average, so thank you very much, LJ, to show me your chart to see that price actually respected 200 moving average. I was more looking into this previous level of support resistance that we had. It's the first time that price actually is respecting the structure, and we did manage to find. But yeah, those 200 moving averages do work quite amazingly. To be honest, I should actually add them onto my chart more often. But But yeah, price action wise, I think I could see price end coming. If it breaks below this level, I could go a little bit further down eventually.
Yeah, I think near term today, if we're talking sort of intraday, I'd expect, like, we've had a bit of a kick lower across the board. I expect going now through the rest of London, we might get some kind of a spell, bit of a reprieve, a pause, maybe pick up a couple pips to the upside. Then coming into New York, probably resume that downside. Yeah, stuff like, I mean, the Aussie's already down 0.8% today, after being down about 0.8 yesterday as well. So wouldn't be too surprised if from here we get a little bit of a pickup near term, something like that, and then sort of wander off again. And it's going to be the test coming to New York, depending probably on the NASDAQ, if this actually kicks off further today, or if we manage to hold these bottoms for today coming into Nvidia tomorrow. I think that's the big question. Let's get rid of this arrow that's right in the middle of everything. That's better. But yeah, once again, it's still progressive, lower highs, and then this recent cluster through here, lower lows. But we've got that portion from, what was that, earlier today. Today's the 19th, isn't it? Yeah, it is. Yep. That last night, end of New York last night. Those lows.
Yeah. It was a pity for me that high yesterday. I wanted just a little bit higher on the Nasdaq.
Yeah.
A little bit higher. Yeah. And another two interesting assets that related to dollar as well. It's dollar CAD and dollar Forex Swiss. Okay. Today we have CPI on the CAD. It has been quite nicely recovering, and I think it can go higher. We talked about that also last week. So we had this really strong, but it's another one. It's the third one that I'm drawing here. That price has been respecting these lows, and after breaking this high, we mentioned that there is a high probability that the price now can get into the next phase. Basically, you can see that price has been holding this level for a long time, and anytime it kind of goes higher than that, then it kind of goes and rallies. And that becomes more of a trend continuation type of a setup. For anyone that likes to trade those patterns, I think that's more or less what you can have around here. Now, something that I usually try to do is try to see where are fresh orders on the way down. Okay, as price is moving down, where are maybe some fresh orders in there. Basically, fresh orders means kind of either order box or supply levels that price hasn't really reacted from. As you can see, this was fresh. Price already reacted from it, then it would be a little bit higher. Maybe somewhere, somewhere around here could work, and then a little bit more to the extreme as well could also work. So yes, dollar CAD could have a little bit more potential move to the upside. Eventually, could actually have just a little bit of correction before try to resume higher. Getting into this structuring here, and we now actually have this low, so maybe could eventually fake out these lows into this level and continue to go to the upside. After that, so dollar CAD is one to potentially track. Now it's not on my radar. It was on my radar when it was closer to the lows, and I want to see price getting a little bit close to these extremes to become my level of interest. And then you have dollar franc Swiss as well. Dollar franc Swiss is another one that I think price can eventually squeeze a little bit higher to 0.79, and I think that could be more or less maybe where the dollar can find some resistance zone as well. Might have this level first, but then I think could go a little bit higher. So even on these dollar pairs, dollar CAD, dollar franc Swiss, it looks like there's a little bit more potential upside that can again reinforce potential move to the upside also on the dollar. At least when looking at the levels, I think there's a little bit more room to move towards those extremes, which are the levels that actually I like to trade from. So that's more or less another two to pay attention to.
Indeed. Yeah. I think today's going to be, pretty boring one overall. Bit slow. Gradually wandering down. So
Yeah, Abdul over here, German. Now ranging yesterday, interesting area. We're waiting confirmation for short. I said this level yesterday. Yep, I think you did. I think I remember it. I'm kind of looking on the DAX. I'm waiting for, is it this level 24,800 that you are looking for? At least that will be the level that I'm more interested in on the DAX. That will be a little bit more of the levels that I'm interested. I think there's a potential continuation now to the upside. Maybe price can bounce from here and go higher until it gets closer to that next level. That would be my next zone of interest for shorts, personally. What's your take on the DAX and the overall European stock market?
Yeah, I was just having a look at it. Let me have a gaze. I mean, I don't like it that much overall. I'd be looking at similar deal. Obviously, we've broken these heads here, come up to that left shoulder, just like you highlighted, and then see if we get some kind of a head and shoulders type thing and then come off, or if this just snaps and we're straight up. But as far as other kind of, I don't know, macro positioning, anything like that, I think it's all very by the by right now. ECB is kind of in stasis, just waiting, see what happens with the war. They've basically talked about that, saying they've got eyes on that. As far as that flows through to inflation, as well as keeping on an eye on progress with the whole Ukraine situation. But yeah, there's not too much new to report. It's all very by the by.
Yeah.
No real catalyst for any kind of rotations, that kind of thing.
Yeah,
it's all pretty boring.
When you do have that, that becomes more of maybe training the zones themselves, kind of resistance, support, resistance, kind of just trying to trade between those levels and let price make the move to fill those spaces. Basically, that becomes maybe a bit of the approach, not fighting it. Respect the higher time frame structures, basically.
And then, obviously, drilling into if you actually drill down to the actual 40 companies, you can go individually look at them, see where the general momentum of each of them is, what sort of the drivers going on there fundamentally, and then sort of just package that together. But as far as broad-based sort of macro influence, don't quite have that so much right now. Obviously, we had through, FTSE, through the DAX and everything as well, the energy players and weapons manufacturers, right? Obviously, got a good pump, but we kind of played that story out right now. So hence, we're just in this kind of lull type phase. But yeah, I just trade it technically, just like you were saying.
Yeah, that would be the levels. Our friend here asking, why do you analyze most of the time and not trade? Are you waiting for an opportunity? Yeah, that's mostly the what we are waiting for, opportunities as well. Yes, we do trade, like the next comment replied. We do trade. Sometimes, yes, we do not show it. It's because it's an educational and entertainment channel and not a signal channel. Yes, that is entirely true. And if you do have questions, feel free to ask us. But we do trade, and most of the times as well, at least based on my own style, I do wait a lot. I don't take as many trades as I was taking before, and I like specific levels to trade them. My idea in here is to share my thought process. Doesn't really matter if I catch a trade or not. Didn't matter for you guys because it will be my win or my loss. But I think sharing my thought process, I think that's the most valuable thing in here, where you can benefit from it, can learn, or can get some ideas. Just these interactions with LJ, for example. I don't really trade what LJ is trading, but I do like to hear his thought process because it helps me with my own trade setups, kind of ideas, idea generation to for opportunities.
Yeah, we often see a lot of similar stuff, but then how you enter and exit and everything is very different. Even though we're often on like the same page, same trajectory. And then, most of us have like a whole bunch of accounts. So, it's like, which trade do you want to see? Right? So we've always got a heap going on in the background. But then, as we spot various ones through here, then we'll highlight them. This is what I'm currently in, Aussie dollar. After we had the break through this neck just here, we had similar deal on euro dollar. So I've got the risk split between the two. Aussie was definitely, charging lower much more aggressively today, but we're already down almost 0.8%. Euro has a bit more room to potentially run, especially if we get down through here. So this is kind of where I'm looking at for the euro. A similar deal is break that neck through here and then jumped in. So it came through, broke it a touch, tested it again, then fell right off. So on that next red candle, jumped in. That's basically what I'm waiting for now. So see how much further we kick on, or if we kind of just stall out in this general zone for most of the day.
That trade on the Aussie, can you check the? Yeah, it was during Asian session, right? It was like 2 a.m. in the morning for me. That would be what? That would be like 10 a.m. for you. Like, what time is that for you?
11:45.
11:40. You are well awake at that time. Usually, you do see like because basically this is a break of kind of structure and kind of just rally the momentum. Basically, that's what you're trying to do there. Do you see those trades happening or kind of working more often when it's not exactly around opening of the sessions and more of kind of mid-session periods where price made whatever decision made around the opening, and now that price decided basically to break, basically just follow through now the sequence of the move?
It depends. So normally around 10 o'clock. So this is where, so you can see exactly here, this is where we started driving. Right now, around that's when you get the Australian market open. You've got New Zealand already open. You've got Japan coming into about to open, so pre-market. So you get this cluster of basically the Asian sphere all coming online. And what you tend to see is a drive in one direction, and then somewhere around quarter to 11, about 11, that either sticks and gets confirmed and then it pushes further, or we get this big reversal and we'll go right the way up. Okay. Right? And basically reverse that and then continue in that direction the rest of the Asian period. And so I was looking for something like this last night for us to come up through here, come down, test this, run a bit higher before looking for shorts, but we didn't get that and we just snapped right through. So given we didn't get that, pushing right the way down. And then the consideration points were if we'd stall out through here at 71.20 or so around yesterday's lows, or if we push right through, momentum was still bleeding out. So I'm holding this right down just a touch below 71 right now, 70.90 to 95, which has been a level in the past that we've sort of banged into, came off for us, used as support, vice versa. So.
Okay. We should just ask this question because it's literally more of a continuation setup, and just to try to understand if usually those tend to happen a bit more easily if they're not really in like on that maybe 15 minutes around the openings, but more of on the follow through of the movement after the decision has been made. And now there you go. Price decided at the opening that it went to go down. It went down aggressively, broke structure. Now it's just continuation of the.
Recently, we've definitely had that. We've also get a bunch of those days where we collapse first and then we get momentum back the other way. So it's not always one way, but there's normally, some kind of shift. It's normally a break. Either you hit support, goes back the other way, or in this case, we hit support, broke through it, and so continue in that direction. But we do tend to see that one way or the other lately. How are we doing, Rich? Welcome back.
I'm good, guys. I'm good, thanks. How are you guys?
I'm doing well, man.
What are we running through today? I see a bit of strength coming in the dollar at the moment.
Yes. Yeah, that's I was going to say that's pretty much what we've looked at, like across the board, seeing that euro dollar, kicking lower, Aussie dollar kicking lower, dollar yen is on the cusp of the highs today. We've pushed through them just a touch now, and the question is whether we take a full ride back into 160s. I don't think the Bank of Japan is going to be willing to step in front of this just now and try and intervene again, I'm sure they'll be looking for this to kind of naturally pause a little up in this higher 160s level and then hit it. And then that kind of carves out that top section once again. So we're in this big kind of channel through here. So I think that would make sense where you allow dollar yen to push a bit further back up here, then you hit it again with intervention, and then we get some kind of larger move right the way back. So especially as euro dollar, Aussie dollar and that kind of thing continue lower, let's get rid of all this stuff, and find some kind of support back down into the 115s, and then you get, you know, natural shift in the dollar anyway. But yeah, that pretty much the direction for things right now, I think. There you go.
Yeah,
There you go. There you go. So what's chat asking for today? Are they trading? Are they trading alongside you guys?
A little bit. We've had a few questions on various bits and pieces, but Pedro and I have just pretty much extensively just hammered through every single asset. So I think it's kind of answered everyone's, if they had questions that hadn't asked, we probably already went through it. They're like, oh, cool, thanks. So yeah, because I was saying trading today is probably going to be a little boring. Everything's moving very much in sync. It's kind of one direction, very highly correlated, that kind of thing. And we're just kind of dribbling off. Nothing too major. Headline-wise, it's basically just CPI for Canada. Trump pulled back on his threats of attacking Iran again today. So it's probably one of those days very just by the by. So, yeah.
Yep.
I was going to ask you
with
this. Well, I'll build into that in a minute. I was going to ask you with this political event at the moment, how do you feel gold and silver's been using? Because I still see a lot of volatility when we look at. I think silver's down 2.5% today. I think gold was down about 0.5%. And is it still being used in terms of the typical safe haven, sort of risk on, risk off?
Yeah, not at all. So we've gone inverse to that. It's basically playing the opposite right now, right? The correlation has fully flipped. That comes down to, a large portion of it is down to the rates market. Bonds are just ripping higher. Rates are running higher. So obviously, gold being a non-interest bearing asset, the cost to hold gold goes up and up and up. And then especially when we've had this situation where gold's already been on a massive tear, it's a bit of natural profit taking that set in from the start of the war, where we did see markets come off, and then people have to cover, margin calls, that kind of thing, cover losses on bad assets, paid for by good assets, which people cleaned up on gold. So that sort of set that natural tone in, and then that was then backed up by the current rates picture that we have. So until that whole situation is done, gold's still going to be under pressure for the time being. So yeah.
Okay, so you're saying the gold train has gone from typically that rally that we saw earlier on in the year relative to what it is now, because I see a lot of traders are still. You remember that time where traders were just like long gold, like there was, and I want to say little skill involved relative to kind of how we're talking about intraday trading, but it was like open charts, click buy, close charts, end of the day. That's your target done, and obviously what we're seeing is now we're not in those environments, but yet politically we're still seeing a lot of the same kind of pieces flying around the board. So it's like the behaviour has certainly shifted between market participants, and it's been interesting as an observer. And then obviously the correlation between silver, seeing that typically has been magnifying the moves that we see on gold. So, and then I went back through the chart, and I think silver had a 30% down day beginning of this year or earlier on in this year, and I remember looking at that.
Where was it? This, yeah. When we hit 121 and then tanked right the way down to 71. Huge.
Yeah, some big movements in the chart. So why don't we hard pivot? First of all, before we do this, can I just, this is the get off station for Pedro or LJ. If anyone needs to hop off, I don't want to keep you prisoner for the next however long that we're going to talk about this subject. Are you guys good for time, or is this your...
Yeah, let's go ahead.
I'm fine.
I can say 20 minutes more until 11:30. Let's go.
20 minutes more. Okay, right. Chat, we'll see if we can keep him hostage for as long as possible. Let's see if we can get him wrapped up in this conversation. So I can see that we got in chat this reference here, which is pretty much about today's topic. If you have ever blown up an account, felt devastated, or thought about quitting trading, then this session is for you. So you see it in the topic from today's video. It's talking about how to bounce back from losing a funding account. So if you've ever lost one and you think you are the exception, I'm gonna very openly say you are not the exception. You are typically the normal. Many traders, as we go through this journey, we're going to hit the highs and we're going to hit the lows. Now, typically, we've got our focus on the highs. The highs is going to be getting funded, getting payouts, scaling accounts, repeatable payouts. But what do we do when that's not the experience that we're getting and the account just absolutely tanks? And what I'd like to do for a little bit of this session is focus a little bit more on that, because this is typically the experience that a lot of traders are getting, and this is more of the normal experience. But I want to put it into two different camps. So you've got camp number one, where you are trading your plan on an account with a level of risk which is pretty aggressive. We're going to talk about 1% risk, only giving yourself maybe 10 trades of breathing room relative to just doing dumb stuff on an account trying to make profit. Now, we can lose accounts typically for those main two reasons. LJ's smirking. Maybe I touched a nerve. Maybe not. We'll go into it in a bit.
No, I just love the doing dumb stuff on the account. That's funny.
Well, I can hold my hands up and say I've actually lost way more accounts for doing dumb stuff trying to make money than I have by actually following and trading my plan. And typically what would happen is I would lose 4%, 5%, 6% of an account, sometimes even up to 8%, just by experimenting with price movements. Now, this is typically in the earlier part of my journey, but when I would be down to that last 2 or 3%, it's like my logical brain suddenly hooks in and says, right, Rich, now we've got to try. Now we've actually got to trade our plan properly. And the amount of times I've traded, but from like an underdog position, and it was almost like I needed to be in that position of like the odds are stacked against me. And I mean, like the odds aren't stacked against you enough when you come into trading. It's like I needed to stack the odds even more against me. But most of the accounts, if I was to talk about the accounts that I'd lost in developing as a trader, most of them were just from doing really dumb stuff. The stuff we talked about a little bit earlier, seeing markets absolutely tanking and thinking, yeah, I'm going to stand in front of this. I'm going to be the guy that catches the bottom. I'm going to catch the reversal. And then adding to a loser and doing this kind of silly stuff. Or maybe losing 1%, 2% on a trade and not really accepting that that was what I intended to do as a part of my plan. Now I need to make that money back desperately. And often what would happen is I would be chasing the profit instead of the process. So if you're in that camp and if you're going through that session at the moment, I want you to look at your accounts as two different camps. You've got camp number one. You're just playing around. You're doing dumb stuff. You're typically losing more than you're making. And you're probably not learning too much for it, but in enough fun. That's typically where a lot of traders are, over trading, having a lot of fun with accounts and just getting involved with moves just because the market's moving. Then we've got the other set of accounts. The other set of accounts are the accounts where you trade your plan consistently. And if you've been through the performance coaching course, you'll understand how we mark our trades as good, valid trades. So we have our good wins, our good losses. It's everything in that account which attaches to that. Now, one of these becomes a tool and a useful foundational building block to set you up for the next stage as a trader. Sadly, what we see is many traders in that second camp where they're constantly just going through accounts with sporadic risk management, total different trading pairs, or you'll see a trader would be long an asset, get stopped out, long an asset, get stopped out, long an asset, get stopped out. And you could see this trader was struggling to let go of their trade idea. And they're just attached to this idea of surely it's got to go up or surely it's got to turn around. So the reason I highlight some of this stuff is because I've done a lot of this stuff. And I know that traders do and have done and still do a lot of this stuff. Now, here's the silver lining. You can choose to come out of that chapter. And trading is, and I spent a little bit of time on this morning, and I worked out What is it I want my total exposure to be through prop trading? And so what I did is I looked at the accounts that I would have, live challenge accounts. I stacked them all up. I worked out what my total risk allocation was when I was putting my full size into the market. I worked out what that risk was to me. I worked out what it would cost me in terms of drawdown, how much drawdown does each account have. And I put myself in a position where everything I did on my trading activity is logical, no emotions. So you know when you've been in an account and it's trailing down and you're getting close to that max loss, and I'm sure we can all relate to this. Maybe you've got a 10% max loss and you're watching that account and it is just slowly hovering around just a few $100s from that maximum loss. And we feel this frozen, where it's like a haze. It's like a bunch of fog in the brain where you're just sitting there feeling, I can't think straight. And the moment that trade is closed, all that clarity suddenly comes back. Now, our job as a trader is to make sure that we catch ourselves in those moments, because those are the moments which lead to revenge trading and over trading and FOMO and greed and fear and all that stuff. So before we take on that next challenge account, this is where we have an opportunity to look at, am I being logical, first of all? Okay, so if we're talking about bouncing back, the internet is full of comeback queen stories. Like even films is all about that underdog, creating that larger than life character, you know, like think Rambo. There's so many scenarios where, you know, Jason Bourne, where that phrase, we found him, you know, I am he, you know, he is it. And it's traders often fall into this camp of thinking, I'm going to be that guy. So first of all, is to have a look at the last account we failed and say, why did I fail this account? And put it into one of the two camps. Did you trade your plan fairly consistently and the market just moved against you through a series of trades? Or were you doing that dumb stuff that we were talking about earlier, where you're just opening random positions and you look back at it and go, I don't really know what I was doing there. Now, one of those has a future in a career as a trader. The other one is going to keep you stuck in a circle of just ongoing bad behavior. So first of all, we want to try and figure out which camp are we in. Now, if you're trading for a bit of fun, you could do it on demo and lose no money at all. If you're trading as a career and you're taking something from those lessons, then you logically say, okay, well, that account maybe is a 100K account. What did it cost you? $500. Am I happy with that $500 lesson? And what we want to do is slowly shift our attention from making money into how well can I prove that I can follow my process? And imagine if I said, hey, follow your process, and at the end of this month, you'd earn $6,000. I bet a lot of traders would have an easier time following their process. But often because they're thinking about this profit, we've got to make the money, we've got to get all the money, we've got to focus on, you know, this next trade and trying to be right, the trader typically fails to follow their process and gets zoomed in on the P&L. And that's when the account starts entering into that second camp where we're just trading mundane trades, cutting trades early and breaking our trading plan. So if you have lost an account, see if you can figure out why you've lost it. And then spend a little bit of time saying, okay, the evidence supports that I'm still in very much a learning chapter of my career. How much would I like my next lesson to cost? And am I ready for my next lesson? And if you find that you're still dumbing about on accounts, then maybe you're not ready for that next lesson. Maybe a demo account would be better because it would be free. If you feel that you're ready for that next lesson, then ask yourself, how much am I willing to pay for this lesson? $500 lesson on a 100K account. Maybe that's too much for you. Maybe it's a $200 lesson on like a 25K account. Maybe it's a bootcamp account or a hypergrowth account. But this is where we get to retake control of our trading journey and choose how much do we want to expose ourselves to the market. Nobody makes you keep buying accounts bigger than you can afford to lose. And that's a quick way to keep us emotional and keep us in a loop of lose account, get another one, lose account, get another one. We really want to put a stop, a line in the sand, and actually figure out, well, what went wrong here? And if you can do that, your chances of being successful on the next account are massively higher than the previous account. So it's about taking accountability and choosing how much financial exposure do I want? and am I in a chapter of still building? So for an example, let's say I was doing dumb stuff on an account. I can't trade demo. I need a little bit of skin in the game. Then I'll say, okay, your lesson typically is going to be to prove to yourself that you can do less dumb stuff and more good stuff. How much do you want that lesson to be? Now, typically, I don't want that to be a $500 lesson. I might want that to be a $40 lesson and buy maybe a 5K account or something like that. So depending on which chapter we're in our trading career, it's always worthwhile taking a moment to look at how much financial exposure are we bringing on ourselves. Because what kills traders from becoming profitable is they just typically lose too much, either emotionally or physically, before they reach that point where they've got a skill set that's actually worth backing. And it's okay to admit if you're in that chapter. In fact, it's a good thing to admit if you are, because if 70% of traders are in that learning chapter where typically they're losing a little bit more than they're making, what can separate you apart isn't immediately trying to become profitable. It's actually immediately positioning yourself so you can mentally and physically sustain how long it's going to take you to pick up the skills that you don't yet realize you need. And I know it's super boring stuff because everyone wants to size up, send accounts, get funded, get payouts. But let me ask you honestly, has that worked for you? Because if it had worked for you, then I guess you wouldn't be needing to take a different approach, right? So typically a lot of traders are going to go through that first camp where they're still in that learning chapter. And prop firms are a wonderful tool to have a little bit of upside, protect your downside, and try and take the lessons from each account that you trade. And if you trade at 5% risk or no stop loss or hit the max daily loss, it just means your lessons are going to be a little bit more expensive. If you trade at 0.5% risk, you're giving yourself way more opportunities to build a new behavior pattern and build out repetition. So this is something that I think is super important for traders to recognize, that if you carry on down that route, you shouldn't really expect a different result. It's the behaviors and the decisions that you make that compound over time that give us the edge, which typically isn't a strategy. It's typically the trader. And it was said in a wonderful interview I done more recently. The trader said, you could put Lewis Hamilton in it's like a Nissan Micra, and yet put that trader in a Formula One car, and it was like, who's going to win? And it's really so much of what we've got to accept responsibility for as a trader is actually our ability to execute an edge. And so many traders haven't yet got that grasp on that skill set. And it's so much harder if you put a big old weight in your hand and load it up with 100K, 200K, 500K account. It's much, much easier when you've got this small little thing that if you get it wrong, okay, it was a cheaper lesson, but I'm not so emotionally compromised and I can figure out what it is I might need to do to learn from this lesson. So it's something that, I know it's kind of like setting the tone for it, but I would definitely encourage traders to not just keep running into another account mindlessly. Be intentional. And I'm not saying don't buy another account. I'm saying just know why you're buying that other account. What is the lesson you want to get from it ahead of time? And if you can be clear about that lesson, then you can align yourself with the kind of tool that is best suited to drive that nail in. Just curious from your guys' perspective. So Pedro and LJ, you've been trading prop for, I guess, a kind of a large portion of your trading career. Was there sort of a lesson that very obviously jumps out to you that maybe was a bit different from personal account, that you say, actually, when I traded this prop account, there was something that's a bit different, or I picked up this lesson very, very quickly, and it actually helped you navigate your path forward with prop?
Interesting. You go first, Pedro.
There's lessons. First of all, I like the way you put it in perspective of lessons when you're now looking at getting the accounts every now and then. Most of us will be thinking about how much could you make when you go into buying a challenge, and they're thinking about, can I afford this new lesson, and how much do I want to spend on this new lesson? That's a really nice perspective and way of looking at it, and I think it can actually help a lot of people to decide which account they want to purchase next, because that's actually quite interesting. I'll go a little bit different. So, for example, when I did started to try to trade these prop firms, it was in that moment of the 30 days rule that we had to pass the challenge in 30 days. I struggle a lot. Okay, I failed miserably on those accounts because. First of all, because of my approach, because of my belief what trading is, I always thought about trading as something that would be long term, and all of a sudden someone puts me a restriction of 30 days. First of all, I don't like restrictions, much less in terms of timing, and I couldn't even trade my own edge in that moment. I was just literally trying to rush trades into the market, and I really struggled. It was like losing accounts constantly, or challenged in this case, because I couldn't deal at all with those 30 days rules. Not that I couldn't make 10% in 30 days. It is just perspective that I only had 30 days. It created so much pressure and on myself, on my trading, that it was terrible. And so that actually it was a lesson for me which kind of goes a little bit into what you mentioned as well. Are you playing with the market to try to make some money here, or are you actually following your plan? I was not following my plan at all during that period, and it was something that I had to learn. It was not just because I was, and then I managed to understand a little bit that it was a little bit because of the pressure of the 30 days, but also my deep beliefs of what trading is and what the market is, which is something that it's for long term and not just to rush into make profit for tomorrow. So there is a really big conflict within myself that didn't really manage to trade it correctly. Now I don't even remember what was your question, Richard, to be honest. What was the question again?
We were talking about what was one of the biggest lessons that you learned from trading prop that actually helped your prop journey as you continued to trade it.
Yeah, then it was about for example, leveraging as well, in terms of getting used to risk some dollar amount that I was comfortable with. So it kind of going step by step. Initially, also starting going straight away to those 100K accounts. It was a little bit of a bigger amount that I was not used to trade. And those profits, seeing those profits or those numbers running, it was something that I had to adjust. So also actually giving a step back, starting to get into maybe a 20K account, then a 50K account, and then go back into 100K accounts. That was something that helped me to navigate as well through those, just to get used to the numbers that I was trading with. So that was something interesting. But in terms of the rest of the rules, aside from the 30 day, and when the 30 day was removed, it was thanks God. But aside from that, I was comfortable with the risks. So I was never really leveraging. I'd already had good discipline within my approach. So I think it was mostly about recognizing, give a step back in order to then give 2 steps forward into my journey. I think that was something that I had to adjust a little bit. And then in terms of as you get more accounts as well, start trying to diversify a little bit instead of trading every single one the same way, kind of looking at it more of as a portfolio. Don't risk every single one of them, kind of try to make money from one, then go make money from another one, instead of just trying to, because otherwise if I lose one, then I'll lose every single one of them, and I didn't want to be exposed to that. Kind of just a little bit of more diversification in terms of how I was trading them in general. But that's kind of a little bit of the prop firm game that eventually traders get to expose, and they will see what it's best for them, and basically what they want to do it. But I think that the scalability process, I think, forced me to kind of give a step back before giving 2 steps forward, and then that conflict of the 30 days initially. That is a memory that really sticks with me, because I was just trading, and I hated trading in that moment. The way I was feeling at the end of every day, because I was not following my plan. I was literally just scalping, doing something that I don't really do, just trying to see if a 5 pips move will give me kind of 1,000, and if it was the opposite, I'll kind of be devastated. Whatever. I was literally not trading whatsoever based on what I was doing, and what am I doing here? That literally gave me a lot of frustration, those periods. But yeah.
Fair. I think so. What I would say is, I'd say when trading, I don't know about like good lessons. Probably just prop. So yeah, my trading probably definitely much worse through prop, because it's much more directional, right? In personal accounts, like I'd sort of have a number of assets kind of roughly like hedged out and all sort of trading with slightly different timeframes, and then often implementing, other bits and pieces like options and that kind of thing, which, you create sort of more of a full portfolio kind of structure. And then there'll be some things I'll hold for a couple hours, others days, others weeks, and then all basketed together. And obviously going into prop, you can't really do that, right? It's not very favorable to multi-day holds so much. The swaps aren't quite as favorable. I used to do a lot more swing trading in combination with a bunch of sort of my intraday type stuff. And these things would sort of balance each other out. With prop, it definitely pushed me more to just sort of collate that all together and then take directional bets on a certain asset and then try and pick whatever the prime asset for that is going to be. And then it tends to be more of a closeout each day, not really going to hold things over the weekend. You have to concern yourself with this, even just spread expansion. And then, so of course, you can be holding positive equity, resets your balance up to here. You've got a shift around, say, one other asset you might be holding gaps down, only to come back later. But after gaps down, you get spread expansion that skews the midnight level to where you are now, and you end up getting like clipped on the drawdown, even though everything just corrects once market opens after the first hour, 2 hours after rollover. So I would say with that, I have and still find it kind of worse as far as that for me. I guess it's sort of, I would say, however, it does force you to kind of hone in more of that directional bet, I guess, on my end. But yeah, I think my trading was already quite mature by that stage. I was 10 years in by the time I started prop. So I kind of figured most things out personally myself. But I think most people having those kind of drawdown levels does force people to actually focus on that risk management side and actually keeping things in check in order to be able to come back and actually trade again, which I think for most people coming into trading is often something that's lacking, right? They don't quite have that discipline of actually really thinking how they're sizing up trades, taking to those in consideration overnight holds, weekend stuff, slippage, that kind of thing. On a personal account, you can just, the number's bigger, whatever. I know you've got a bit less money, but with prop, you might have to start all the way again, put up that fee, then also go through the stages you might have already climbed partway through, which is definitely very painful. You're just like, come on, right?
You both raised some really interesting points with this, because Pedro was saying about how when you get into the account, suddenly the size is bigger than perhaps what you've traded before on a personal account. I found exactly the same. I was trading a personal account, pretty small personal account. Then I went into prop, and I remember making like $20 in a day and being like, yeah, just made $20 today. And then I looked at my target, and it was $5,000. And I very quickly calculated that I'm going to be about 109 by the time I hit this full target. But it didn't stop me. I carried on the next day, 0.01s, and this was when an account had 1 to 3 leverage. Going back a long time ago. So I had to make $5,000 with 0.9 of a lot. So 0.9 of a lot on GU and EU was my full margin. So you're talking about going all in on every trade idea and making 500 pips. Bearing in mind, at this point, I'd only gotten involved with a prop firm trading account for the simple reason I needed to protect my downside. I'd just come through a horrible big loss on a personal account. And I'm like, I can't trust myself, because as LJ mentioned, for a lot of traders going into prop, you have these rules. You have a daily drawdown limit. Maybe there's certain news events you're not allowed to participate in for a little time window, or you've got the daily rollover. But on a personal account, I was king of the castle. I could do whatever I wanted on that account, and I didn't have to answer to anyone. So initially I came into prop as a way to mitigate my downside so that I couldn't lose thousands of dollars on a move. I would only lose kind of the drawdown of the prop firm account. But then I started to do really, really well. And I started to make, I made my $5,000 and the account scaled up. And then I made a few more thousand after that. And I sat there and I thought, why can't I do this on a personal account? And it was because the prop account didn't have, in that stage, it didn't have the same leverage, and it had a set of rules that I had to adhere by. And I realized very quickly that there was a difference between when I had to adhere by a set of guidelines. It was like playing bowling with the bumpers down. It kept me on the straight and narrow. So as a trader, eventually, it started to teach me discipline. And then I started to look at it as a 5% daily loss. Like, that's a terrible thing. I don't ever want to go anywhere near that. And it started to make me think about, I don't ever want to go 5% near a daily loss on my personal account. Whereas before, dude, I was probably paying 5% in commissions. I mean, that's a joke, bearing in mind, chat. Don't jump on me for it. But the account was swinging. And so it taught me risk management at a level where I guess I just didn't have that discipline originally on a normal account. But going back to what Pedro was saying, that I was not ready to see, accounts move $500 into profit, $500 into drawdown, because on my personal account I wasn't moving accounts that big. It was £5, it was £10, and then to see like 10x or 100x multiples of that, and see the account swinging. I remember watching an account rolling around like $4,000 or $5,000 in profit, thinking, "Nah, that's not enough. I've got to keep pushing this account." And it taught me a behavior which I think, as LJ said, you already knew what you were doing before you came into prop, and then prop gave you these set of boundaries or guidelines, and then all of a sudden it's like, how do I navigate my edge through this prop? Whereas I built my edge in trading prop. So once I got my edge, then I had to transition back into a personal account and say, right, now let's do it where no one's watching. Because I always used to be convinced when I was trading prop, I was like, everyone's watching. I'm convinced everyone's going to be watching. I'm going to get a message from someone going like, good trade, or terrible trade. Why are you shorting the dollar? And but it made me feel like whatever I did, I had to be somewhat accountable to that behavior, because I know it was kind of my name that I'd bought the account, but it wasn't the same as like my broker account. It was like I was trading someone else's money. So it definitely taught me a level of behavior that I don't think I would have picked up on a personal account. But the biggest thing I remember is just seeing the P&L flying around way too big. And took a little bit of leveling up to get used to that for a little while. But yeah, interesting points.
Yeah, for me, I pretty much had to just reform the style, the approach, resize everything, because I'd happily be sitting down to an R3% or whatever, get spread expansion on depending on what pairs. Personal account might be down temporarily like 8-9% just because of the expansion. Then obviously that comes back and you're sitting at -2.5. Then I'd keep holding that. Maybe it goes down like 3.5 or something. Hold it, swing right back up, and then you're up 3, 4, 5% or more, right? But yeah, prop, you can't really do that, you can, but it's difficult, and you've got to be very selective, and especially in these times with Trump, it's very hard. So that's yeah, but it's just different. So I think it's also good in terms of just learning to trade something different. And I mean, that's never a bad thing. You're just further expanding those horizons. And then I have implemented some of that directional input into my personal stuff as well, because you can hammer that a bit more too. So
yeah, but there is this question here from Dusanavik. Pedro, can you tell us what is your edge? Because if you ask me, the edge is more important than emotions. I agree with you in the last part, that edge, I think, is more important than emotions. At least when you know exactly what your edge is, it helps tremendously then manage your own emotions. So in terms of my edge, as I mentioned several times, I'm a counter trend trader. So that's what I usually try to look for, reversals in the market, either and close to the extreme. So either tops, bottoms, that's where I like to be involved in. And I look for that mostly in a higher time frame. Okay, so I want to see price getting closer to higher time frame structures. That usually helps me to identify, or at least to expect that price is about to have those reversals around that level. And then I pay attention to the type of approach that price is doing when it gets close to those levels. And the approach can last 1, 2, 3 days. So it can be something that it takes time to evolve until eventually gets me to the point where I want to be, eventually participate in the move. And then I look for specific patterns. In this case, Quasimodo pattern is one that I love for a reversal, to give me the triggers to try to be involved into the trade. And there are different phases of the Quasimodo pattern that I like to trade, all the way from the left shoulder to the head until eventually to the conclusion of the pattern, which is the right shoulder, to try to trade it. And each one of them, they have different targets. So that's also important in terms of edge, is also trying to understand quite clearly what type of targets and opportunities you are looking for. This goes into managing my own expectations, which then eventually can also help me with managing my own emotions. Because if I'm expecting the thing correctly, then I can manage my expectations way better. But then I add all of it into correlation. So I like to confirm with correlations in the market, so across different asset classes, or if I look at the dollar yen, I want to see what the dollar and the yen index are doing to see if it makes sense or not. Or then other pairs between euro dollar, pound dollar, whatever it may be. So I like and love correlation. I think that helps me tremendously also to give me confidence that yes, it is not just isolated move, but also there's more things involving that actually can play into the prediction of the price that I'm making around here. So that plays a lot into it. Recently, in the last few years, I also start looking at macro. So try to see what kind of news, what kind of catalysts, how the market is reacting to certain news also helps me then eventually to anticipate what kind of reaction I'm expecting in the moves, or if a specific catalyst, NFP, CPI, whatever is having a big impact in the market. So I can also be involved in those moves, or at least managing, again, my expectation towards the move that I'm expecting to see. So yeah, all of that goes into price. But if I was about now to just simplify as well, I like to trade when there is a little bit of chaos in between the buyers and the sellers, when there is indecision, when there is pain points for both participants. Either the buyers are getting way too excited and being now squeezed a little bit into looking continuation for more longs. Let's pretend that I'm looking for a potential reversal of a move to the upside. So the buyers are still trying to buy, but now it's starting to be rejected. The price is starting to go against them, creating a little bit of pressure. And those initial sellers that are trying to sell it, they also do it a little bit too early, a little bit of FOMO. They think that maybe price already went up too much and it's about time to go down. And those sellers as well, they still see price going a little bit higher and get a little bit squeezed as well. So there's a little bit of pain from both sides. And then eventually we have the move. So I like to see that pain into those between both market participants, buyers and sellers, confusion. And then that's when I like to trade it. And there are specific patterns, and Quasimodo is a great representation of it. To trade those. Yeah, that's in a nutshell. But I agree with you. When you do have your edge and actually you know exactly what you are looking for, it helps you a lot managing your emotions, because I recognize myself that I'm a patient trader. That's why there was this conflict of 30 days. I need to pass really in a rush, but then I'm so patient. I like to wait for price to actually to evolve and to show me that my trade is there instead of me forcing it. So that there's a big conflict in that moment between what I like to do and what I do, and what these conditions of prop firms were trying to force me to do. Yeah, so having all that clear in my mind, that helps me. Helps me because now I used to be quite disappointed, because I do miss quite a few trades. So I used to be quite disappointed, and it's feeling every single time I was missing a trade. I was upset with myself. Anytime by any chance I was expecting a specific level and price will just reverse before that, I was getting frustrated because I could see the potential profit that I could have made, but I didn't. At the end of the day, I was frustrated with that situation. That actually used to cause me more pain than actually losing trade, to be honest. But I had to learn how to deal with it, and I do that by feeling comfortable within my own skin, what I want to see in the market, and yeah, it's basically it.
There you go. Yeah, I think having having your edge sorted out, obviously, yeah, it's going to help you emotionally, of course. Makes it much easier to sort of just follow, and then it's, you just go right ahead. People always have that debate, which one's more important or whatnot. I do say edge, obviously. Like, if you don't have edge, you got nothing. I think though most people struggle with the emotional part, right? Keeping that in check, and even you probably do need to have that first of all to develop a proper edge, because otherwise you're going to be running around like a headless chicken. And then because people don't quite have that edge, they get more emotional. They start to act more. They don't actually refine their process. They just start doing random things in the market, trying to fish for something that isn't quite there for them. So,
okay, hang on. Trigger warning, because both of you have taken one side of the bench, and I'm sitting there going, where do I park my ass? LJ said,
knew it.
LJ said, look, he said, you know what? If you don't have strategy, you have nothing. If you have strategy, but you can't execute on it, what do you have?
Sorry, say it again. If you have
strategy,
nothing,
but you can't execute on it, what do you have?
Yeah, it's nothing exactly. Just an idea.
So when we try and pick what's more important, I believe you can't have one without the other. And that belief is shaped from my own personal experience of having an edge that I couldn't execute on, and also not having an edge that I was trying to execute on. Both of them resulted in a big fat nothing. And so if a trader says, well, what's the most important? We've got to recognize that actually one without the other is still nothing. So both in their right camp still carry a level of importance. So one on their own doesn't get the trader where they want to be. If you look for a quasi and you say, look, this is awesome. I've got a beautiful left shoulder. I've got a wick down. I've got a break of structure. I'm looking to trade the retrace of where I think the footprint will be of that squeezed area. And then your brain just goes to spaghetti when you try to execute on that trade. Typically, the trader doesn't have edge. So if they get in and cut the trade early, their win rate will never be high enough to cover the full losses of the trade. But if a trader just puts random orders in the market and doesn't have a repeatable process or an edge to do so. So I wanted to challenge it, because it's definitely, I agree, if you don't have a strategy, you have nothing. But if you have a strategy with no ability to execute on it, you still have nothing. So as a trader, we can only really have something when we've both witnessed and seen something enough times in the market to go, hey, I know there's edge in this. I have commitment or a conviction around my analysis, but recognizing that to execute on that is a completely different set of skills. Like Pedro can probably teach his edge from a technical perspective. Victor does these wonderful workshops within the Discord. We know him as the Quasi King. He is always charting up these Quasimodos in the markets, these head and shoulders patterns. The technicals can be taught, but the traders also got to realize that they've got to practice the execution of that technicals. And we can do so through mental drills, or we could do so through demo accounts. And it doesn't always have to be like, and I agree, LJ, most traders, they actually fall down on the ability to execute what they believe, or where they believe an edge exists in the market. But it's just something that when you said that, I was like, trigger warning, because I've had edge and I've not made money from it. And I'm like, no, that like edge alone isn't enough. Like we need like left hand, right hand. We need both sides of the camp with it. So I didn't want to completely go against, but I felt like you've held up like a glass half full, and I'm like, there is another glass here, and it's good for traders to recognize that, it's try and get an edge off the internet, just a rules based edge, and see what your P&L looks like on a demo account after 100 trades of executing it. If you don't believe the edge actually works, and if your execution is all over the place. Traders will skip trades. Traders will double up on other trades. They'll take trades outside of that plan because they fail to accept the result. It's something that I've seen in my own trading journey. I've probably had edge for longer than I've had the ability to execute on that edge. And in the very early stage, I actually thought, when I get an edge, That's it. I'm profitable. That's me sorted. And the worst thing happened. I followed the edge good enough and I got funded. And then my ability to execute on that edge just fell down so hard. And to put it into perspective, the edge should have been funded and produced well over 25% profit throughout that 6-month period that I was trading it. So including trading the funding stage and payouts. I got funded and I took round about, I think it was like 4.5% return out of that edge, just simply because it was like holding melted butter. It just ran through my fingers. And I was like, I was just mentally not ready to execute on this because it was $1,000 a trade. And I was just not ready for that $1,000 to come back in. And I was like, how can I earn $1,000 in 9 minutes? Like, surely not. Surely it should take me a month to earn $1,000 or 3 weeks to earn $1,000. And I was just mentally, I couldn't execute on that edge. And we see a lot of traders go through it. We held a poll in the Discord and we said, how many traders know their technical edge? And it was like 85% of traders was like, me, I know my edge. I've got a technical edge. I was like, right, then 85% of you should be profitable then, right? And we very quickly realized that there was this executional skill that just had to be refined as traders as well. And so kind of this is where I cut my teeth on that side of the trading, because a technical edges go in and out of flavor. I've traded 4 rules-based systems which have worked for a period of time and then they've just gone off the boil. And the trader's ability to execute on that edge throughout that period is going to decide whether or not they get paid or whether or not they don't get paid. And I've cost myself so much money by not having the skill set to execute on an edge, like way more than not having an edge. So for me, I guess this is where I weight the importance of, if you can't execute on the edge, you've still got nothing, because that's actually what's cost me the most amount of money in my trading, is failing to execute on an edge that continue to run into profit. And this is where in the Discord sessions we share that in the spreadsheet I will record what is the result the strategy should have got and what is the result I got. And those 2 columns, when I looked at them at the end of the month, they hacked me off more than anything else in my trading. Because what I saw at the end of the month was I made 11R, or what should have been 11%. But in my column, I made 1.3%. And I was like, how have I lost 10% of this strategy? And every time I looked at the reason why there was a difference between my trade going 1-to-1 and me cutting the trade early, it was always skip trade because of fear, or it was close trade early because I didn't want to have a losing day. And I just didn't have the ability to execute. So once I was able to measure it, I could see very clearly that my inability to execute on my edge was costing me tens of thousands of dollars. And this is the cool thing. A trader who can't execute on their edge today, it might be costing you $100 a month. But if you were to scale that, it could be costing you $100,000 a month.
Compounded.
Yeah, that skill set is so... And I've reached a stage in my journey where I actually saw it cost me over $10,000 in a month. And that wound me up so bad. I was like, I don't care who I got to kiss. I'm going to go and fix this thing. I'm going to figure out exactly the work that needs to be done to fix this. And then I realized it was actually... I needed to work on my ability to execute my trades and manage my emotions and myself while I was in those trades. And it was one of the hardest things, because in a setup, Pedro, you could see your trade and go, yeah, this is my valid trade. I know exactly what I should be doing here. But then we take the trade and just that doubt and that brain fog and that little voice that says, yeah, Rich, you should double up on this. And before I know it, I've already doubled up on it. And I'm acting on these impulsive emotions that are showing up. And it took a long time to really start to rewire that behavior pattern and recognize it as toxic. And it was even harder when I would double up on a trade and make like 4% in a move and be like, yeah, but this works. Like, I should do this more often because I'm going to get funded quicker. And I had to teach myself that making money in a bad trade or through a bad technique was a bad result. And it went against everything the world would say when your friends say, hey, Pedro, how much money you earned today? And you're like, I can't wait to tell them that I'm up 4% today. But yet I broke all my rules. And I had to be honest with myself. I said, Rich, you're stuck in your trading. Can you get unstuck by doing exactly what you're doing today? And I'm like, no, I'm over risking. I'm getting emotional. I'm getting lucky. And then I get unlucky. And then I blame the markets. I was like, so until you're willing to accept static risk management and measure just how well you execute your plan, you're basically just falling into randomness. And that randomness in your P&L is just going to give you so much mixed signals. You'll never know what's working and what's not. So finally, I realized the importance of sticking to my edge consistently and being able to measure it. And then a good month is when I finished negative 5R, but the strategy finished negative 5R. And a good month is also when it finishes plus 10R and I also make 10R. A bad month is when there's a difference between those two results. And this is why I carry out weekly reviews to make sure that I'm very quickly catching that behavior, because the opportunity cost will be $100,000 a month easily, but I'll never get to it if I don't fix the problem. So it's always going to be an opportunity cost. And as I never got into trading to waste my time and sit there and learn to love looking at candles on the chart, I got into it to make money. I'm like, well, what's the highest probability of making money? Follow a set of rules that you know has a small edge in it relentlessly, and critique, very kindly every time that you didn't follow those rules, and then figure out why. And for me, it was always the mental game that fell down. And that's why I have such a passion for psychology, because I'm like, I'm going to build processes that make this mental execution and holding my trades so easy that I'm going to get whatever result the strategy gives. And then the strategy went on a 30R drawdown, and I'm like, are you kidding me? But inside my head, I was like, well, at least you traded it well. And I'm like, You know what? That skill right there, kick that strategy to the streets. That skill that you've developed of consistent execution, that's repeatable. And you can take that with you as you now reframe and find a new way to interact with the markets through a new set of rules. Bit of a rant, but it was just an observation that I picked up on, and I was like, why do I feel something here? And my job is always to recognize that feeling, because that feeling very often is the start of me wandering away from my plan. So I was like, I need to talk about this right quick. But that's the journey that I'm on, the rabbit hole.
No, that's good. I agree with that as well. I think it kind of, in terms of, one more important or one less, I think it also fluxes at certain points, right? So I'd say to begin with, you're kind of 40-60, like 40 psychology, 60% figuring out your style, your approach, your edge, that kind of thing. Once you've got that nailed down, then yes, I do agree with you that it becomes actually sticking that. And a good example is like basketball, right? Or take any top tier athlete, whatever sport you want to pick. What's the difference between Michael Jordan and everyone else on the field, right? On the court, they can all play, they can all execute exceptionally well, but those players like Kobe, Michael, name your favorite player, they've got that mindset, right? The mindset itself is also part of that edge, especially in that kind of environment where everyone can generally execute quite well as far as playing basketball. That's sort of what sets that to that next level. So I agreed with that in trading. I think as well with most people doing this kind of stuff, because it is difficult. I also liken it somewhat to like school though, right? Where if people go to school, say they start doing some math and they get some good grades, they initially start to think that and this is typically comes from like learning how to learn, right? Then they start to believe that they're smart. If they believe they're smart because they got that edge basically in learning how to learn, they tend to go more with that, and it becomes a self-reinforcing thing. Whereas if people don't get that edge in actually figuring out how to trade, they go, I suck, I can't do it, whatever. And then that beats it down. So I find the edge part first because it reinforces the mental side. Then it becomes the further question of, say people do have that hot track, they can also get over their skis, right? Just like you do pick up on some kind of edge or a style, you keep pushing it, and you become like complacent or over exuberant. And then you start actually wandering off because you're actually doing well, in that same way. And then hence where it flips back to psychology being the most important to keep the machine running. So yeah, I think you go through different seasons, and one thing becomes more important, then you go back, and then back and forth and back and forth.
Yeah, 100% I agree with you that we have a bias. I wouldn't have learned everything I learned about psychology if I didn't suck so hard with my psychology. If it was never a problem for me, I would have literally just been like, dude, what are you talking about? Just trade your plan. Stop being a wetty about it. But because it was such a pain point for me, I then had to learn, well, why do I get so many emotions when I'm trying to hold this trade? But I totally agree. In the beginning stage, and this is why in the performance coaching course, one of the very first lessons is strategy. Because again, a trader without an edge, why are you trying to convince yourself to feel emotionally okay when you actually don't execute in the market in a profitable behavior pattern? So it's like hitting your head against the wall and saying, I should teach myself that this is a good behavior. If it's not going to actually help you, then why work on your mindset? So 100% strategy should be coming first. We should have a framework at least. And then we go into that psychology side, and you can have it all sorted. And this is what no one ever told me as a trader. You can have that all dialed in. You can have the edge. You can have the risk management. You can have the strategy. Then the edge can just fall off the cliff, and then that starts to drag the psychology down as well, because they're all interlinked and connected. And it takes time to build that edge back up and build that confidence back up in that edge, which is why I love backtesting, because it gives me massive exposure to hundreds of trades where I can see this pattern play through, and then I can record what the result would have been. And it's almost building a track record with something, and then doing that trust exercise of putting my money where my mouth is. And I've always struggled to execute on an edge that I haven't backtested, because I just don't have that insight that there's actually a reason to execute there. So my emotional brain just goes nuts and goes, what are you doing? You don't know what you're doing. You don't know that this move goes up. And I try and trick it and say, yeah, but we don't need to know what happens in the market next to make money, right? Like Mark Douglas quoted this in his book, Trading in the Zone. And then my trader experience says, yeah, Rich, well done for taking that out of context. You're actually not executing on a framework that you know has edge. So, forget trying to find loopholes to get into the market. That only applies that you don't need to know what happens next when you know that you're operating in a framework that's given you a proven profitable edge. And it was, I've had loads of battles with myself and loads of mental conversations back and forth trying to find reasons why I can talk myself into a revenge trade and justify it in my mind as well. And then afterwards go, oh, you did it again. And it's just working with those emotions and figuring out where did them triggers happen, or where did them feelings start, what triggered them. And most of the time it's just because I wanted to make money or be right about a trade. And then I got really good at being right, really good. One of my accounts is 75% win rate with, 6,000 or 7,000 trades on it. And it's like, okay, you get good at being right, but there's also a skill of making money. And you've got to, again, Will and I have spoken about this in detail, that three-legged stool where you have your risk management, your strategy, and your psychology, and you're being intentional around your execution as well. But yeah, dude, it's absolutely everything I say comes with a bias of my own experiences, because psychology has been such a difficult point for me early on in my trading. It built me into the trader I needed to be, and I had to do hundreds, if not thousands of hours into psychology work to overcome my hiccups. And other traders probably don't have that trauma. They probably can do it in 20 hours, 30 hours, and they might be stuck on strategy. So yeah, again, the individuality of a trader's experience, right? Never going to be the same. Similar, but never the same.
Yeah.
Hey, Will.
Yo, good guys. I didn't want to come in and say hi because, dude, you were on a roll. So, what's good, guys? How are you doing?
Come on, man. Welcome back.
Oh man, did you see gold? Have you seen gold from the past 2 hours?
Doing nothing.
Absolutely nothing. And you guys know that I have a discretionary strategy. And I was looking at it and I was like, there's so many reasons to be taken out of gold right now. Like, I shouldn't be in this right now. I should just screw it, cut my losses and take out. But like I said earlier, I was like, no, because that may be a psychological implication. So, Rich, I'll just give you a bit of an update if you didn't watch the stream earlier. I have had just a mental ass whooping today. I came on, I had a good gym session. Physically, I feel brilliant. Mentally, I just feel really, really stressed for no reason whatsoever. Like I just feel like my brain's all over the place, my stress levels, you know, I can, you know, when you get, you know, when you're like about to go bungee jumping, for example, you get that tingly feeling in your chest. I've had that all morning. So, you know, it's one of those where I thought, right, my psychology isn't on point today. But nonetheless, we're going to show up and execute according to the strategy anyway, because the strategy may still play out. So I went all mechanical today. And I looked at gold over the past hour, and I was like, right, okay, no, look, there's loads of reasons I should be getting out of this trade right now. However, I have allowed myself, and the keyword here is allow. I've allowed myself to come to the markets today instead of taking the day off. Usually, I should have probably taken the day off. However, I've allowed myself to enter into the markets. I am going to therefore ignore psychology and strictly be mechanical. And I watched, in fact, I don't know if, let me just see if I can bring my screen up. I watched the markets just do absolutely nothing for about an hour and a half, 2 hours. Oh, it's not sharing my screen. Why isn't it sharing my screen? Oh, okay, hang on. It's because I'm on my... Right, hang on a minute. What do I need to... Would I be under guest now? I need a scene. Right, okay. I tell you what, I'm gonna bring LJ's screen back up. I need to do so. I've changed over account, so I'm trying to work on the lag on the back end on my side, and I've switched over Chrome accounts. So give me a minute. Yeah, when it comes to like psychology in it, you know, I was waiting for gold to play out, and it was wicking both sides, and I was like, dude, I shouldn't be in this trade. I was like, there's so many psychological confluences telling me to get out of this trade right now. I thought, no, I'm gonna hold it. Came back to the markets about like 10-15 minutes ago just to find it just dropped, and I was like, yeah, I could have called that. I was like, I could have seen that coming. But yeah, dude, you know what, and I'm glad, because I'm glad that I stuck to my strategy. And this goes on to what Rich was just talking about. Even though, you know, even though my discretionary strategy was there, and my discretion was saying, well, you should probably take out here, but because I'd had just this absolute mental battle with myself today, I didn't want to rely on a psychologically exposed brain. You know, I didn't want to listen to my brain, because it could give me false information. It could be hopes and dreams. It could be fear. There could be 101 things in my brain right now that could be distracting me and disguising itself as discretionary trading. So I thought, you know what? No, I'm going to stay strictly mechanical if I'm going to enter. And I'm glad I did. I'm glad I did. I took a loss, though. That is what it is.
That's good, but yeah.
Guys, I'm going, and someone else is coming in. So let's just bring him to the stage. Are you good, Griff? All right, there you go. Griff is in. I'm out.
Thank you.
Thank you very much, Richard. I'd gone another topic. I was supposed to stay here 20 minutes. I enjoyed so much that I stayed until the end. You managed to convince me to stay. So thank you very much. It's a great topic. I love it. I love this Tuesday's chat with you and LJ, and I'm looking for the next one again. Guys, enjoy the live stream. Everyone on the chat as well. Have a great one. I'll see you.
Cheers, Pedro.
Thanks, Pedro. See you later.
Cheers. Thanks, Pedro.
I will have to jump out as well, guys. I got a bunch of other background stuff I got to get to. So I'll say bye to you guys as well. Thank you, Rich, once again for today. Wonderful as ever. Stay safe with trades. Everything's pretty quiet. So definitely Trump look out. Because, we might be susceptible to stuff there. But, yeah, I'll see you guys tomorrow, and ciao for now. Adios.
Cool. Awesome stuff. See you later.
Awesome.
Peace.
Cheers. Okay, I'm going to hop out as well and leave you.
Oh, my
the
God, they're all running up.
I'm next, Will.
Like rats.
You guys are always going to think it's something personal. You're going to be like, what do we do? We had 5 people.
Yeah,
now we're left.
Griff, why does he hate us, man?
I don't know, man.
Cheers, guys.
Thanks,
See you later, Rich. Have a great one, man. Take care.
Is this a buy that you're in, Will?
No, it was. It was.
Ah,
it was
see.
a buy that went bye-bye. It was painful to watch.
Oh,
So I entered in here, and then we got some good. In fact, no, let me come back. There we go. We got some nice movements here, but then we got confluence reason to potentially reject it. And what happened? Price rejected it perfectly, and then volume just stopped. It just dropped back down to zero. Nothing in the market. Nothing was happening. And then, we got all this here. And I didn't mind this down here. I didn't mind the lower wicks. It was the upper wicks that was making me think, this isn't rejection to the downside. This is indecision. Indecision that followed a confluence area for rejection for potential downwards movement. That alone would have been enough for me to say, at the next possible exit, turn off. And that was my discretionary strategy, saying, look, just get out. Put your parachute on, pull the emergency exit, and jump. But I didn't because I don't know if that was psychology, if that was fear, if that was emotions talking. So I said, no. I'm going to wait through all this garbage and see what happens. Like this may still reverse. This may still come all the way down here and then move up. It didn't. It did take a stop loss. But like Rich was talking about, when you understand your strategy, you're able to make these types of choices. And when you understand how, and this is what experience in the market does for you, when you're able to understand how your brain works, how your strategy works, and how your psychology works, I know for a fact, if I'm having a psychological down day, I don't have them often. If I have a psychological down day, I know I cannot be discretionary in the market. So it's either mechanical or nothing at all. So, once you start to get to know, a bit like LJ was saying, once you start to get to know your strategy, it gives you confidence with your psychology. Once you get to know your strategy, your psychology, and your sort of experience and how you read the markets, you're able to then understand what discretion means to you. And that's where you can decide, do I want to be discretionary? Do I want to be mechanical? Do I want to look at a bit of a hybrid of both? I tend to have a bit of a hybrid of both, if anything more towards the discretionary side. And once you start asking yourself that, then then you can build. So yeah, this was my trade from today, and it was just death by 1,000 cuts. It was just.
I know the feeling. Well, I think he definitely made the right decision, and I think that's really self-aware to be able to say, I don't know where this urge to close the trade is coming from, and then I think in that scenario, if you're able to identify that, definitely the best thing you can do is just wait, let it hit stop loss or TP, just do nothing. You decided to enter the trade earlier, and you don't know if like the additional information from those new candles is emotions or reason. So I think the thing to do is just to leave it, because if you do that enough, it'll balance out. What do you think is going to happen with gold next? I mean, I don't really look at the lower time frames, but I quite like how it's looking at the moment. There's kind of this V, looks like it's broken the low and rejected quite impulsively, but it's retracing quite quick now. I wouldn't be surprised if we moved up from here still.
I want to say the hourly looks nice for the continuation up, and I know that you like the hourly as well. We've wicked Tokyo, or we've taken Tokyo now. We haven't wicked it. We actually closed below it. If we didn't get this massive candle here, this massive bullish engulfing candle, I would have said, you know what? This nice consolidation, break, retest, potential continuation down. But now we got this bullish break in above. And, I just don't know, mate.
Yeah.
I just don't know. This is illogical in my strategy. There's nothing here right now that would make me say, like, I can't pick anything. If we were here, then I could pick something. I could say, okay, break and close below this, potential continuation down, consolidation here, break and close, continuation down, break and close above, continuation up, target, target, target. I could say, Where would we target? Potentially around here somewhere, potentially this low from Monday. But now, how prices acting, even on the 15-minute, I don't have a clue. I seriously couldn't come up with a bias.
Yeah.
And
It is quite sideways, so it's not an easy task.
Yeah, super indecisive. And that's what I mean. That's why I'm glad that I'm out. Because like a lot of people, like if I took this out at discretion, I'd be thinking, "Ooh, okay, can I re-enter?" And then it would eventually hit what would have been my stop loss, and then I get my decision. So whether I took out through discretion or through a hard stop loss, either way, I would have to wait for my stop loss if I got taken out of discretion, or my hard stop loss if I took out mechanical. I'd have to wait for that area to be hit before then deciding no. You know, so either way, I would have had the same outcome today. And that's why you got to be, you know, that's why you got to make peace with the markets. Because now, I don't know, whereas before I did. And as long as I'm trading what I think is valid at the time, I'm okay. If I was to trade this now, I'd call myself everything under the sun. I'd struggle to be positive with myself because I've put in stupid practices. And that is solely because there's not a single strategy in my playbook or in my arsenal that can trade this price action post this stop loss.
Yeah, that's
the only thing that. However, gold and EU and GU, beautiful. Like, dude, that looks nice. You know, we got the nice close. It's a shame because I prefer trading cable. I prefer trading the pound dollar. Now, dude, I don't even know with the pound dollar. Like, so someone asked me the other day, or like I say the other day, earlier on in the stream, like in this morning section, they were like, "Will, do you see buys on pound dollar?" And I thought, you know, if we close above this or close above this, then yeah, potentially. Then we got this absolute unit drop here. And then I thought, okay, maybe if we close above here. But then it's like, okay, at what point do I need to take, you know, what point do I take my TP before thinking, oh, that's a valid break and close above before potentially moving up? You know, at some point you've got to look and say, is the trend just changing? And right now, you know, the trend is clearly down in like on the lower time frame, like immediately speaking, you know, clearly in this downtrend. So honestly, for me, I think it'd have to be now a break above 134.17.6, because especially with that super bearish candle, it's just that confidence is lacking in confidence, and that confidence comes from confluence, not just entry criteria. A strategy is built up on more than entry criteria. It's entry criteria plus confluence. Confluence is another word basically for confidence. So GU and gold, absolutely nothing for me for this afternoon. EU though, I'll admit EU is beautiful. EU is very nice. But what about you? What do you give me some good news in the markets? Tell me you've entered a trade, Griff.
I actually have, yeah.
Yeah.
And it was a winning trade too, which I was really pleased about.
That's what we like to hear. Show us. Let's see.
Here it comes.
What have you got for us?
Yeah, so over here, it's the first trade, like live, I've taken like this. And it's actually looking at mean reversion instead. Okay. So a bit different to what I would normally do. And yeah, it's basically a sweep. And what I'm looking at for this entry is I'm looking at these value areas. I don't know if you can see it clearly on my...
small, but yeah, we can see them.
Yeah, the like the light grey areas, not the dark grey areas. Yeah. Cool. Yeah, you can see that.
Yours.
Yeah, so I'm looking for these to align, basically. And then when we have...
Of course it is. I was going to say this is still on the hourly, I'm assuming.
Yeah, still on the hourly. When we have two or more of these value areas that align, that's telling me that this is a level where the market has determined that it's quite a fair price. And so when we break above or below that fair price, I'm basically looking for price to kind of return back into it. So if I can illustrate this a bit more clearly. So if we look at all these value areas, you can see that there's a lot which align. So there's this one which feeds into this one. There's this one which feeds into this one. It doesn't have to be a perfect, but you know, the more that they line up, the better. You can see these ones are very aligned. These ones not so much. So the chain kind of breaks here, and then here. This is the next trading day. So I'm not considering this value area at this day because it's still forming. So up to this point, there's 1, 2, 3, 4, 5 value areas which have aligned, and I'm basically looking for price to break above the highest value area, which is over here. Let me make this clear as possible, because my other strategy, I've been trading it for years, so I can explain it so easily. But this one, to explain it for the first time is
sometimes you got to try and wrap your own head around it.
Yeah. So what I've done now is where all these 5 value areas have aligned, I'm marking off the highest one and the lowest one, and then I'm basically looking for price which opened inside of them to either sweep the top, sweep the bottom. In this case, we sweep the top one. And then I'm looking for a shift back down. So we've sweeped it with this candle. I'm looking for momentum to start coming back to the downside, which is with these 2 candles here. I was like, yeah, I'm starting to see us kind of returning back to that fair value. And then I just did a market execution with my stop loss 2 pips above this high. And then I was targeting the previous day low, which was right here. Right there.
Beauty.
And yeah, really, it's really nice. Just set a TP, and this was a 1 to 2.83. So this strategy is quite different from my other one, as you can tell. But it's nice to have something where I can profit off of these sideways movements, because previously I'd be depending on, you know,
some real sort of
this price action, which is much more infrequent. Yeah, so that's the trade I took. That was on Wednesday evening. Yeah, there you go.
Dude, lovely.
Thank
Absolute lovely stuff. And the fact that I'm able to come on and ask, I just know Richard Butler's going to be jealous. I know he looks forward to you coming on just so he can ask you if you're in a trade. So the fact that, you know, I'm gonna message Rich in a minute and be like, guess what? Griff was in a trade.
Yeah, that's funny. And it was a winning trade too. It's funny because
I was gonna say that's always magic as well. There's nothing worse than being like, yeah, guys, I was in a trade and I lost.
Because that was like 65% of the time I'd be like, yeah, I took a trade and it bloomin' lost again because my other strategy is such low win rate. But like when I would be able to say I got a trade and it's a winner, you know, I'd be able to come on and show like an 8% winning trade. But yeah, it would be nice to come on and maybe show like a couple 1 to 2s, 1 to 3s, a bit more regularly. I'm not focusing on it too much, but this one was just like, it was right there, and I was like, oh yeah, I'll take that. Yeah, just when I'm at the charts, I'm going to be keeping an eye out for these setups moving forward.
Yeah, really nice. Absolutely awesome. Right, I'm gonna have a bit of a catch up with chat because I can see a couple of people have come in and said hello to us. So we'll come say hello to you guys, and then we'll dive a little bit deeper into the markets, and hopefully there's gonna be something that we can talk about. If not, then I don't know. Maybe we'll come back to chat and have a bit of a banter. If you got any, actually no, as well. If you have got any questions for Griff, then you know I'm sure you guys ask me questions throughout the week, so you're probably bored of asking me questions. But if you have got any questions for Griff, then do ask away. If you are new here, make sure you subscribe to the channel, and you will soon learn how Griff trades, and he's an awesome trader. So try and pick some of the knowledge that he does bring, because he doesn't come on often. He only blesses us with his presence once a week. SGN, hey Will, yo, what's good, my man? How you doing, brother? Good to see you, man. Steven, yo, hello, Will. What is good? How you doing? Miss K911, hello. Just wait. Hello. Cheers, Pedro. Thanks, Pedro. Hello, Griffin Rich. Unbiased trader, what do you want about? You know it's me. You know that I'm not. Hello, Rich and Griff. Yeah. Stephen, hello, Griff. Anyone shorting gold? No, gold can bugger off today. I'm not interested in it. It is one of those. It's a weird one. Yeah, gold's being weird at the moment, Kieran. But I'm assuming that's Kieran. Kieran K. Yeah, I'm gonna call you Kieran. Diolch LJ, thank you, LJ. Thanks, LJ, and cheers, Rich. Oh, maybe that was Unbiased Trader saying hello to. No, Unbiased Trader. What do you want about? Brother, just FYI, we may have a strong support level of the 45.32. Just be careful. We are short on the 4 hour, but on a strong level at the moment. Let's have a look at the 4 hour. Bring my chart Rooney up. I've got that Delilah song in my head. Have you seen this new trend on Instagram? That Hey Delilah trend?
No, not yet.
Dude, it's stuck in my head. It won't go. It's like a proper earworm. Okay, so the 4 hour looks nice for that swing idea, I suppose. You know, we got this consolidation. Guys, you know how much I love my consolidation. So got that consolidation. It's another area of interest. It's another supply zone. So you can call it a supply. You can call it an area. You can call it consolidation. You can even call it a high or a low, potentially. You know, we have got high, low as well. So you can call it a swing point. You can call it whatever you want. I like the word consolidation. So just... if you call it something different, don't think, oh my god, this isn't valid because it's not a supply zone. This is a supply zone, demand zone down here. You know, I just call them areas and consolidations. So, you know, we got this area of interest up here, area consolidation, breakout, continuation down. We get this nice bearish move leg down. Then we sort of consolidate further. Now, we've consolidated further after sweeping the lows from last week, which is May the 4th. No, that was 2 weeks ago now. Yeah, they're from 2 weeks ago, Monday. Now, we didn't break and close below it. We did wick it, which tells me, you know, what reaction we get off could determine some form of trend idea. So now that we've got the wick below, we've started pulling back. Now we've had this nice 3 candle push, which caught me the 3% long yesterday, which was, I suppose you can't win them all. You know, I had a nice 3% long yesterday. However, lost 2% today. So still up 1% for the week. It's pretty good. However, you know, we've got consolidation, pull back throughout today, back into an area of interest. Again, we've wicked it. So we've wicked that. Potentially, we could continue higher if we break and close above the 45.89 level. That's all swing ideas, though. For me to continue this swing lower, I think I'd need to see a break and close below the 4481. Now that's only on the 4 hour. As we drop down to the hourly, you know, in fact, what area did you say of support? 45.32. 45.32. Yeah, okay, yeah, fair. What level are you calling that a support on? Or like what time frame? Because that's not a support on the 4 hour. Or it's a high wick area. So it is an area of interest because of the amount of, you know, the amount of wickage that we're getting
probably here. On the 15 or something, it'll look like that's all you'll really be able to see in recent price action. Yeah, there it is.
Yeah, okay. It's 15. We've got this nice
After the V.
Yeah, nice little zone here. Yeah, okay. No, that is quite nice to have some form of reaction off of this area. Let's drop down to the 5. Let's drop down a bit further. Okay, nice. Yeah, that's actually really nice. If we You know when you have internal thoughts and you just start making noises? When you're trying to think and stream at the same time, like usually you come to stream with a bit of an idea on what you're going to talk about in the markets because you do a bit of a pre-analysis. I haven't analyzed the market, so I'm just there like, You're just going to get the real trader brain making noises.
Yeah, I know exactly what you mean. Straight path into the subconscious.
Yeah, you've got that direct
line of
corridor.
communication. Yeah.
Literally that.
You know, that's super clear on gold on the 15-minute. And it's one of the reasons why I particularly like the way that we've kind of just broken like underneath all of that and then got that big candle up at like 11:45. Like that looks really promising to me because in my strategy as well, when we get like a V and a range, we often get like a continuation of the V's second leg. So like if we get, in this case, we've got a bullish V and then a range, I'm expecting at some point price to continue moving higher. And this looks like a good kind of trigger point for that, I'd say.
Yeah. The only thing that worries me, like I said, if we could just like, this doesn't exist anymore, go away. Can we like scribble this out and like pretend this didn't exist?
Yeah.
And then
you can use bar replay.
No, I mean I want to get rid of it. Forever.
Oh right, I see.
I want
like it never existed.
It never existed. Then this would be beautiful because that area that you just mentioned, that's saying that that 45.32, we tapped into that 45.32 area a few times. 1, 2, 3, 4, 5 times. This is the 5th time. And then we had a 1, 2, 3, 4 candle, which got stronger over time. A 4 candle push. Pull back. Massive candle up. A bit like this candle here. Massive candle up. Only to then pull back. Enter me in through valid rules. To then break and close under. So that's the only reason this support, for me, this support level is a bit ambiguous. You know, it's a little bit if, buts, and maybes. Not only that, we did also get the break and close under here. Like I know it's got a heavy wick bottom, however, and it is followed by a monster engulfing candle. But honestly, I don't like it one bit. I could see why you're thinking longs though, Griff. Like,
yeah.
I can fully see why. Azrael saying, what about GU, Will? I'd love to see buys on GU. I think it broke my heart seeing this 11:30 bearish candle. I think that broke my heart. Because I think if we could have dribbled down instead of just absolutely grenading it down, then these adjectives are on point, aren't they? If we could have just, instead of just potentially I could have bought. But then you see EU, and then EU looks nice for sells. I believe LJ actually hit TP on a sell earlier as well. I believe LJ was selling EU. And then, we've got a super bullish Dixie as well, which confluences the sells on euro and pound dollar.
Yeah, looking at the DXY is very clever. I don't think people do that enough.
Yeah, I find it's a good confluence, but don't get too absorbed in it.
Mm-hmm.
And I think that those who use the DXY make it their personality trait. Do you know what I mean? It's like, check the Dixie, check the Dixie, check the Dixie. It's like, yeah, okay, yeah, the DXY is great and all, but it's not the only thing. Think about it like again, it's a confluence, you know, and hence why you see here on my watch list, I've got confluence DXY, because it's another fair value gap for me. It's another imbalance. It's another fib retracement. You know, it's another higher low. All it is a way that I can look at the charts and build confidence in my trade. So that's what I like about the DXY. And then you get the other people, which are the complete other side, which just don't look at the Dixie at all. No, they don't look at the DXY. They forget it exists. I think if you use it in the right way, the DXY is such a valuable asset to look at. So Azrael, sorry, bro, I'm really struggling to see anything on gold. Maybe if we break above here. Sorry, I meant GU, not gold. It's because I was looking at gold chat. Maybe if we, because here's our swing point. You know, we've got swing low, swing high, move up. Maybe if we can have almost like a confirmation break and close above, pull back into an area of interest and a continuation higher. Maybe if we can see something like that, I think I'd be potentially looking at long in gold. But Azrael, let me know what you're looking at as well, Marlon.
Long in GU?
Yeah.
Gold. You got gold on your mind.
Yeah,
yeah, I would also say the same. I like how we broke under. How do I describe that? You know, we got that big impulse to the left where it made the high. Then we came down, had a V. I like how we've kind of broken underneath that. No, next to it. That one. Yeah, I like how we've broken under that, because that's basically a flag on the 1 hour for me. Taking a retrace after breaking under that is basically my flag entry. I mean, it's a dirty flag. It's not one that I would take, but it's still a pretty good sign that price wants to move up, especially after the way we came down, like on the far left, we came down, we had all those tiny candles, momentum basically disappeared, and then we had that massive push to the upside. Oh, nice. Sorry, yeah, I'm telling you where to draw. Next slide, Will.
Thank you.
Slide.
Thank you, Remy. Remy's probably thinking, oh my god, poor Will's got to try and like digest all this thing. Got to try and translate.
Yeah, no, bless you. Yeah, all these candles, like obviously we had loads of momentum over here and over here as well. And then we had a bit of a pause, but that momentum returned. And then from here, it just went so slow. Loads and loads of tiny candles, no momentum towards the end of the week. Then we opened on Monday with very little momentum. And then boom, London Open. We started getting all this momentum. And that continued through New York. And yeah, now we've got this where I feel like we've got this move down. We're seeing weakness. We're seeing strength. Yeah, I mean, just looking at the candles, to me, it's clear that price wants to move up. And this is just a pause before the next move higher. But I think that's quite likely, especially how we've broken this low. And then we are seeing, you know, further weakness. Like I can see it on the 1 hour. There's a little descending here. These wicks represent on the lower time frame that we're moving like this. And then we've got pretty good bullish candle here. So yeah, I think we're just waiting for some kind of volatility. Coca-Cola, you know, make that big pound order. Whoever it is, make that big order. And yeah, and then I'm expecting we'll move up. I mean, maybe New York session, we'll see that. Yeah, I'm pretty confident we'll move to the highs before we move to the lows, but
yeah, the only issue is, so me and my brother have started. You would not want to come to the gym with us. We'll drive to the gym and we'll listen to a bit of music, but I hate music. I'm not a musical guy. So on the way home, we'll have the Financial Times on, and we'll go into our favorite or onto the article of the day, let's call it. And usually it's more pound related because, you know, obviously my brother isn't necessarily a trader, but he does like to keep up with the GB news. So we'll start playing like articles instead of reading them. We'll have them like voiced over to us, and you know, listening to what they were talking about with the pound, you know, with the way that interest rates are going, with the way that potentially more, you know, mortgages are going, the Strait of Hormuz, how banks are reacting to that. I don't know. I'm not a fundamentalist. I wish LJ was here right now, but I'm struggling to see how we can have a strong pound at the moment. Fundamentally speaking, that's the only thing that worries me. But as far as technicals are concerned, yeah, 100%, Griff. I can see us moving up, especially with the move on the 1 hour. We've got all this down here. What the hell is Rich doing?
Listening to something that you hate.
Music.
Dude, I hate music.
What's up, Griff?
Hey, Richard. Good to see you.
Yeah, I played bass for Will last week Friday.
To be fair, that was
I saw that.
He could
Oh
not
my
be
God.
bothered. He could
No,
not
that's
be
not
bothered.
true. That's not true.
He could not be bothered. He was like, "Oh, this is rank BS, mate," and then
That's not true whatsoever.
I saw that on your story, Will. That Rich, you look badass. That was so
To
cool.
be fair, it was sick. It was okay. Don't get me wrong.
Wait. On your story,
Yeah.
On his story.
did you record me?
No, I didn't. No, I didn't record you. I took a picture of you.
Oh
Did you not see it? I thought I tagged you.
no, I did.
Ah, shit. I must have forgot to tag you. I should have tagged you. Maybe I was just so engrossed in your music, mate.
Let me go over.
Why are
and
you
see.
looking now? It's gone now. It's like,
How would it be gone now? Like,
dude, this was last Friday.
does it just disappear?
Well, yeah, after 24 hours.
Well, that's crap.
I can send you the photo that I put on my story if you want. You get to.
Yeah, Will's still got access to it.
Okay, yeah,
No one else. can see it.
yeah, I can show you.
All right.
You absolutely like jamming away. Hello, handsome. Hello, Rich.
It's because CC saw the photo, didn't she?
She saw you and Griff was like, oh my god, overload with good-looking men. Oh man, but yeah, no. To be fair, like when you weren't playing like scream metal, I'm really not into that sort of rock. When you like calmed it down a bit so I could actually hear and like digest what you were playing, dude, it sounded incredible. I will. There's some. So my brother knows if I wanted to play music, there's got to be something with bass. There's got to be a beat and it's got to be bass. I love that bass beat. So listening to you play the bass guitar, in all fairness, mate, it was proper. Bang on.
For anybody who wanted to know, I played Through the Fire and Flames by Dragon Force. All you have to do is just go and Google it.
Was that the screamy one?
No. It wasn't the screamy one.
Oh, no, so that was the good one. That was the one I liked.
Yeah.
Yeah, okay.
I don't think I played any screamy ones for you, to be dead honest.
Dude, I literally jumped on, and then I was like, shit!
Oh, wait. That was for MGN.
Yeah,
It's
that's
before-
right. Yeah, that's right.
Yeah.
Because I remember you saying, once I finish playing for MGN, I'll play something a little bit more humans can listen to.
Yes.
Yeah,
For the uninitiated.
I remember I had the roof down one last summer, and I was driving up, and I said to the boys, I was like, boys, give me some music. I felt musical. I was like, give me some music to listen to. This is how bad I am with listening to music. I'll drive in silence. I was like, give me something to listen to. I couldn't think of anything. MGM goes to me. He's like, right, okay, try this. And then Rich goes, this. And I thought, right, MGN's suggesting this. Rich is suggesting that. I'll play both of them. I'll queue them up. I played Rich's first. It was a bit heavy. It was all right. It was a bit heavy. And
Until you played MGN's.
Yeah. My brother was like, what the hell is this? I was like, I don't know, something Rich has suggested. We were coming through a quiet town with the roof down, music playing. All of a sudden, MGN's music came on. I swear to God, there was like old ladies looking at me like, they were like people holding the cross up to my car sort of thing. He was like, oh my God. But yeah, that was quite funny.
What a memorable moment. Look at you months later being like, I remember this moment. See, we created a memory for you, one that you will cherish for
Probably
the
the
rest of
last
your
time I
life.
listened to music, mate, that's why. Also, a couple of questions coming out. Stephen, thank you very much. Nice rules, William. Thank you. SGN Dude, I hate it when it like loads the comments really slowly. Will, when you say you're more of a discretionary trader, do you mean that you don't necessarily follow the same fixed rules or confluences before every trade? No. So this is where I'm very mechanical, and this is where discretion and mechanics get mixed up. Discretionary, inexperienced traders think discretion means discretion everything. Discretion is how you analyze and manage the trade. For me, anyway. So no, I have fixed rules, fixed confluences, very, very mechanical. I will, however, look at different, how order flow sets up and, have discretion on that. So if I see a market forming in a certain way, like my discretion, in other words, my experience, because I hate the word discretion, my experience in the markets will say, I've seen this pattern before. I don't care what confluences I'm getting. I don't care how A+ the setup is. I've seen this pattern forming before. I don't want to be involved in it. That's the only time I'll use my discretionary trading prior to entering into a trade. Other than that, it's strict rule, strict mechanical, strict confluences, strict entry criteria, A+ only. Once I'm in the trade, that's where mechanical strategies kick in. I hope that cleared it up, SGN.
He chooses when to be discretionary.
It's
literal discretionary.
I'm discretionary on my discretionary trading, yeah.
Yes.
Yeah, it's quite ironic as well, actually. MGN. Lol, I don't remember what I sent you, but I'm sure it was some of my lighter. It actually was. I'm pretty sure you said, this is some of my lighter music. I'm pretty sure you did actually.
I can't even remember what it was.
It was literally, ooh, I like proper screaming. I was like, oh.
Was it?
Dude, like, I was wearing probably linen at the time. It instantly turned into leather.
Yeah. Okay. Sounds about right. I see. Yeah. There's a good question here. Daily loss limit or daily trade limit for psychology?
Ooh.
Daily loss limit or daily trade limit for psychology? Griff, what do you think?
Daily loss limit or daily trade limit for psychology? I'd say, God, that's a good question.
That's a thinker, man. What a question.
Daily loss limit. I mean, provided you're definitely risking a fixed amount per trade, then they're quite similar. I would go with daily loss limit because daily trade limit, you could just say, like, just throw the baby out with the bathwater type thing and just risk like 10% on your one trade limit per day. So I'd say daily loss limit because ultimately it all comes down to money at the end of the day rather than the number of trades you're taking. So yeah, I'd say focus on daily loss limit.
I think it'd have to be. I think if you have a daily trade limit and you hit 2 break-evens, or you hit 1 break-even, and then you're like, okay, there's another A+ setup, literally forming, and you're like, this is super, super golden. Like, this is really, really nice. But you don't trade it, you don't take it, and then it ends up hitting your TP, then you're going to have a psychological implication on that. You're going to feel in a certain way psychological because you've limited yourself with trades, not with dude, I don't know, because
it's a hard one because you want to talk about the actual result.
Yeah, exactly, because I want to talk about the result, but then at the same time you shouldn't focus on the result, so I can kind of see why you'd ask the question.
But remember, this is for psychology, right? So forget about winning and losing, just think about impact. Which one of the two do you think has a better impact on you psychologically?
Yeah, 100% fair. So you could take 10 trades and they all hit break even. You've covered commission. Let's say you've covered commission. That's what I call break even. Yeah. So you've hit break even, covered commission. 10 trades later, you're still in the exact same position where you are when you started the day. do you have a psychological effect on it? You don't care because you're like, oh well, I'm exactly where I was.
Dude, I might just think that I'm a horrible trader in the sense that I can't make money, but I can't lose money either. It's just break even the whole time.
Fair, you're just in an absolute trade in purgatory.
But keep it to. Well, I'll say this. To me, it doesn't really matter because both sides needs context.
Yeah, fair.
If you're saying daily loss limit, I'm assuming that the person is referring to an account daily loss, like for argument's sake.
Okay.
A proper account saying, look, if you lose 5% in the day, you lose the account. All right? And then I take that and say, okay, a daily loss limit would mean that for me to protect the account, I'm not allowed to lose more than a percentage. And it would be an arbitrary amount unless there is some rule or something from a prop account that's going to stipulate, look, 5%, 3%, or whatever. When it comes to daily trade limit, exactly what Griff was saying, if you attach a percentile-based thing to it, then it makes sense. But if it is just, well, I'm going to take 5 trades a day and each one of them is 2%, well, then that kind of like throws out the idea of percentile. So I think a little bit of context is necessary. It depends in my mind what you're trying to achieve with it psychologically. If I have a problem with trading too much, like trading too often, over trading, then I would definitely say curb yourself to a handful of trades. Whereas if you're over risking, I would limit the percentile for the day and say, look, if I've traded and I've lost 2% for the day, I'm done. And if that is across 10 trades or across 1 trade, doesn't matter. Percentile. Where, like, you remember my best of 3?
I was waiting for you to finish. I was literally about to say, I think you need both.
Yeah, with the best of 3 was to curb over trading and revenge trading. But I had already, prior to that, had the risk management already locked up, saying, look, I refuse to trade more than 0.25% or 0.5% per trade. So, to me, it's very small, subtle difference, but it's kind of like psychologically what you're trying to achieve from it. Yeah. But I think both can work, but context is required.
100%. I think the hard answer, like the strict answer is, for me, is going to be daily loss limit, providing you're not talking about a props daily loss limit, providing you're talking about setting yourself a percentage daily loss limit. So if you're like, like for me, for example, I don't want to lose more than, depending on where I am in the account, I don't want to lose more than 1% in a day. If I'm doing well and I'm thinking, you know what, the markets are good, I don't want to lose more than 2% in a day. And that depends on where I am in the account, and this is where my discretion kicks in, and this is where, and I don't call it discretion, more my experience kicks in, and my risk management. However, if you're like, I don't want to risk more than 1% in a day, but I like to trade 2 trades a day, then you know that you can risk 0.5%. Or if you're like, I see 3 to 4 trades a day, 1%, 0.25% risk per trade. So therefore you limit yourself to 4 trades a day at 0.25% risk per trade, and that is where you start getting Rich's best of 3 is me strategy. Then is where you start implementing. Okay, I can't quite remember your risk strategy, mate. Yeah, best of 3 changed the game for me 100%. You start having your what was it? So you'd win one.
There's only 4 outcomes. There's only 4 outcomes that you can have with best of 3. Whichever comes first. 2 wins, 2 losses, 1 win or 1 loss would then be a tiebreaker, and of which there would only be then either another loss or another win. So you can only end the day with 2 wins, 2 losses, or 2 wins and a loss, or 2 losses and a win.
Yeah.
It's the only 4 outcomes that you can have with best of 3.
Yeah, exactly. So, and that's like a hybrid between limiting trade quantity and limited trade risk percentage.
Yeah, those were 1 to 2s. So if I had 2 wins and a loss, and every trade that I took back then was like on EU and GU, and that would have, for argument's sake, 10 pips of stop loss, 20.4 pips for take profit. So the 0.4 would be the commission that was covered. So every trade that I took, if I took 2 losses, or 2 wins and a loss, then that's great. I'm up 0.3, or 3R, because I'm winning 2R, and then I'm losing 1R. Where if it was 1 win and 2 losses, I would be effectively break even, minus 1 commission, which was the losses commission, because that one was not covered by the 2 take profits. So the worst day was 2 losses. You've lost a full 2R on that day, and it's just like, okay, it's fine. But every subsequent time I would trade, there would be days where I would go on like a runner of 2 wins, 2 wins, 2 wins a loss, 2 wins a loss, 2 wins, that kind of like stuff, which would more than make up for that 1 or 2 times that I have days of double losses.
And then you know that your max risk, if at 1%, you're only risking 2%.
2% a day. That's why I said context matters when you have
100%
that question.
Yeah, 100%. We've got a question here as well from, if it loads, Striver saying, what is the most important thing you wish you would known when starting out? I'll tell you what, we'll go from bottom to top. So, Rich, question to you. What's the most important thing you wish you'd known when starting out?
That's a tough one, because I feel like I've learned a fair few things that I would say is equally important. But if I had to choose one specific thing to kind of like go back and say, you know what, learn this first.
Mm-hmm.
And that is to accept the outcome. I know it sounds vague, but
do you know what the worst part is? It's not even, it doesn't sound vague. It sounds stupid. I think a lot of people
it does.
A lot of people would
sound
refuse.
stupid. Yeah.
People would be like, shut up. What do you mean just accept the outcome? I think a lot of people would struggle.
If it's a win, accept it's a win and move on to the next trade. If it's a loss, accept it's a loss and move on to the next trade. I feel like a lot of people hold on to the outcome of either or. If it's a win, they're like, oh my God, I won. Congratulations, me. You need to bring your emotional state down. And if you are taking a loss, you're like, oh, F my life, everything's over. You need to bring up your emotional state, So to me, it's just come to terms with the outcome and just accept it.
I really like that. I really like that because, like you said, it prevents you from having that euphoria and depression. Like me, for example, even when I'm psychologically exposed, even at my worst psychological day, I still looked at the loss and thought, yeah, okay, saw that. Okay, cool, move on. Even at your worst day, then it gives you the ability to just get on with it and move on. So, dude, I really, really like that. I think that's probably the most underrated answer you could have given. I think everyone could have expected anything other than that answer. And I think that's probably one of the most important things you can do. What about you, Griff? What's your thoughts?
I struggled to think of one initially, but I think for myself, the most important thing I wish I would have known for myself early on was to be more, I wish I would have been able to tell myself to be more flexible. Because when I started trading, I'd been somebody that had kind of jumped between a bunch of different money-making schemes and ideas, and I was never sticking to one thing. And so in an effort to not do that anymore, when I started trading, I was like incredibly mechanical and stubborn, and I everything else was great, psychology, strategy, but I was very almost like one-minded, like blinders on, not considering anything beyond the scope of what I need to know. But I think as I've traded, I've learned how important it is to be flexible and to be open to new ideas, to be able to grow and eventually start trading more discretionary, because the markets are always changing and you need to be changing with them. And if you're just stuck in one way, then yeah, you'll start losing basically, which is what happened to me. I started having my trading performance just disappeared. It vanished because I didn't adapt quick enough. So that's what I would say.
Yeah, nice.
Be flexible.
I
stretch.
I like that. Flexibility is it's important to be flexible in the markets because, like you said, the markets are always changing.
What about you, Will?
Risk management, man. I took way too long. You know, I didn't master my psychology. I don't want to say that. I hate the word master because master suggests that you have nothing else to learn. You can start teaching. You know, so yes, although I'm very in touch with my psychology, I feel like it's a priority to me in my trading. However, I got that nipped in the bud early. My psychology, I nipped in the bud pretty early. My strategy, that was just strategy. I soon realized that who gives two shits about strategy? It comes and goes. Most strategies you find work. You know, so I started realizing that it took me way too long to work out what the hell risk management was. You know, and it took me way too long to understand that providing I have a good psychology, which I did, and I do, providing I have good psychology, I have a mediocre strategy. You know, it doesn't need to be the best in the world, just any form of remotely profitable strategy and a good risk management system, you will outperform almost every single trader in the world. You know, that is the key to success in trading, in my opinion. Great psychology, a strategy. Not even a good one, just a strategy, great psychology, and a great risk management. And then I think you're made in trading. You, in my opinion, anyway. I think if I was to go back and say, look, little Will, stop wasting your time on trying to find the perfect strategy and all these garbage indicators and all these garbage concepts like ICT and SMT and DBD and GBD and BBD and EBT.
Hey, you remove DBD from your mouth.
Yeah. DBD is the most profitable trader in the world, I'll have you know. I've got him branded.
I have a tattoo on the inside of my bottom lip about DBD. Don't you dare say anything negative about him.
Yeah, so providing you can just ignore all the garbage you see on social media, I couldn't. I just absorbed that garbage. Providing you can ignore all that garbage and understand the risk management. And sometimes, you know, these hedge fund guys that are maybe retired or maybe they've gone into the social media space now and the teaching, the public speaking space. I've met loads of them, and they all talk about how retail's garbage and how this, that, and the other, and how how trading this and trading that. I think if you take them with a pinch of salt as well, don't listen to them, don't listen to influencers. Just understand the basic core fundamentals. Don't listen to anyone else. No one else really matters, unless they're truly going to try and help you, like us here. Unless we're going to talk, because we talk about from our experience. You know, we're not.
This is free, by the way.
Yeah, and this is free for a start. Like, you guys, you're more than welcome to pay me, and I'll teach you anyway. But you know, you can get it here for free. You know,
if you guys do that, I get 15% of everything that Will makes. So
yeah, you've got to put in QR code RICH or what's it called? Redeem code RICH.
Discount code RICH to get 15%.
Yeah,
or to give 15% to RICH.
Yeah. But no. So, you know, it's free what we give here because it's based on passion, it's based on experience. We don't like the idea that other traders are gonna, you know, listen to gurus online, and it's 90% of it's gonna be absolute bull. You know, it really is gonna be absolute bull because most of it's all fabricated and made up. Now, however, there's also the other side of it as well. There's also the scaremongers out there. You know, there's the scaremongers that are stay away from trading, stay away from retail, retail's garbage, and that's because they've got a degree in it and they were once a hedge fund manager. They want to make them, it's an ego stroke, you know, and it's the complete opposite of the retail.
I wouldn't just call it an ego stroke. I would also say that it's also got to do with you know what you know. Like,
yes, I suppose, true.
They understand a certain approach and a certain way of doing things, and they're kind of like rooted in that. They understand only that. and that to have a different approach might seem like it's folly. So like I don't understand this because I understand like this. So I wouldn't say don't listen to them. I would just say that
take it with a pinch of salt.
Take it with a pinch of salt from anybody, including us.
Yeah.
Like go and test what you learn, and then decide for yourself whether or not this is something that you can add to your arsenal, to your strategy, to your lifestyle, or anything like that. Or you can then decide, look, this is not for me, I move on.
Yeah, 100%. Yeah, 100%. And I think that is very important to take everything everyone says with a pinch of salt, but big and just understand just because they're, like Rich said, just because they're a hedge fund guy, just because they're an ex-institutional guy, they're a big investment guy, unless they're talking to you about long-term investments, or unless they've got their DIPFA qualification, which is, your financial advisor's qualification, unless they got some form of financial advisor's qualification, they're talking to you about long-term holds and talking to you about, fundamentals and, they're economists, then, if you're looking for their advice on that realm, then yeah, fine, let's listen to them. When they're talking about the retail space, like Rich said, they only know what they know. So if they, and you're going to find a lot of these types of people slam the retail, and a lot of sort of gurus really promote the retail. They're two literal yin and yang, two sides of the spectrum. You need to find your balance. You need to find your happy medium, and that is your salt. That's your pinch of salt. Go out, test it, find people you like listening to, and try and find to make sure that they're genuine. Usually the genuine people, even if they do have a course, even if they do have Signals Group, not many of them have Signals Group, but even if they do, you'll find that they do still do stuff for free. And what I mean by that is maybe they go to events for free. Maybe they go and join the 5ers for free, like Griff, for example, myself, Rich. That you can find a lot of what they talk about for free because they understand that if you want to buy, let's say, for example, I have a course. If you want to buy my course, I will reassure you that everything in this course you can find for free. The only difference is you like the way I teach, you like the way I conduct myself and the information I relay to you, and you also cannot be bothered to go find it. It's all in one place. That's the only thing a course has. Everything else, if you have a guru out there saying, I'm going to teach you, to go from £10 to £10 million in 30 days, this is my strategy and I know exactly what I'm doing. Garbage, because those who are genuine in the market know that you can find it for free elsewhere. They just put it in one place for you. And that's the difference.
Griff, you look like you really need to go.
I was literally just thinking, I thought, I better actually stop.
The moment you took off your earpiece, I was like, yeah, this guy's getting a...
Yeah, it's not like
I
thought someone was at the door, so I'm a bit eager to check. Yeah, thanks for having me on.
Griff, pleasure having you on, bro.
Yeah, I was about to say, it's always awesome. And I'm glad that I eventually found, or heard, or watched at least as a viewer, you being in a winning trade. So
I did see you in the comment section.
Nice seeing you guys, and thanks everyone in chat as well. Have a lovely week.
Awesome, Griff. Have a great day, mate. We'll talk to you soon.
See you later, man.
There we go, Sir Griffin.
Sir Griff. There's a question actually from... Adivash saying, hey, Will, have you heard of a guy called
Gary Stevenson?
He's an economist who is very local about wealth redistribution. Thoughts on this guy?
Let's go and have a look at who is... Oh, I've seen his videos before.
I haven't read it yet, but I've been recommended it, and I said that I'd buy the book. It's on my bookshelf.
Oh, yeah.
I've watched a podcast with him. I've not read his book. Yes, he seems very vocal. He seems like he's very... I think he's trying to almost be controversial. He's
quite opinionated.
Yeah, and I feel like he wants... It's maybe not necessarily who he is, but almost his marketing strategy.
I watched 2 of his videos before. This is a while ago. Like I'm trying to remember. It must have been like in 2024. It's a long time ago. And I can't quite remember. The one thing that he was talking about was the prop industry as a whole. And then the other one, I can't quite remember. I will go and check my history. Maybe I should go and watch a video of his tonight and just kind of like refresh my memory of what it was about. But I didn't find anything that he was saying like perversely incorrect or all over the place. But also not really thought-provoking. Let's put it like this: it wasn't information that I felt like was new or hidden. I felt like it was information that was already available, like from what I knew about the prop industry at the time. So, it didn't feel to me like he was making a big splash about anything.
No, I feel like what he like I said, I think it's just like how he conducts himself is his marketing strategy. Because I don't, and again, I've watched one podcast with him, which I thought this guy is a bit Marmite. I thought this guy's a bit Marmite. So, I'm going to take what he says with a pinch of salt. However, after I watched that podcast, people started recommending his books or his book. And I thought, okay, you know what? I'm going to get his book. I haven't read it because there's better books out there and that a lot more people have recommended and that I resonate with a lot more. So I've got a few books I need to get through, including, in fact, I'll actually get a couple of books now. 1, 2, and 3. These are 3 books that I've been recommended and my brother has given me. He's read these books. I'm reading Psychology of Money at the moment. Once I finish that, Subtle Art of Not Giving a Fuck. The Courage to Be Disliked.
Subtle Art of Not Giving a Fuck and Everything is Fucked is 2 books.
Yeah.
It's from the same person, Mark Manson. It's a psychology book.
Yeah,
I've read the first one, haven't read the second one yet, but my wife has got both.
Oh, okay, good. I was going to say, I want to see, I was going to say, hopefully you've read the second, not the first. So, The Subtle Art apparently is amazing. I'm not going to...
It's really good.
I don't want to
It's really good if you are struggling with being... How can I put this?
Relying on other people's opinions. Yeah.
Like indecisive about your own life.
Yeah. Which is why my brother absolutely loves it. Clear Thinking is the third book. So Clear Thinking, The Courage to Be Disliked, and The Subtle Art of Not Giving a Fuck.
Ren is saying The Courage to Be Disliked was good, and then Unbiased saying I stopped reading after 25%. It's a waste of time. Which book are you referring to, Unbiased Trader? Are you referring to Gary Stevenson? Or which book?
Yeah, I got Gary Stevenson. That's an interesting point because I was the same with Diary of a CEO. I love Stephen Bartlett. Big fan of Stephen Bartlett. There's something about his... And you get... To, and this is what I mean. Sometimes you just don't like the author. Okay, yes, Gary. Yeah, fair. And that's why I haven't put his book as a priority on Unbiased Trader, because it's not that I don't like him, but I just feel like it's just going to be what I've read before, but with his personality. And his personality that I watched on this podcast, I thought, it's all right. Don't know if I want to read a book from him, but I thought, you know what, look, it's been recommended to me, I'm going to buy it, I'm going to put it at the back of the queue. However, these other 3 books, after I've done with Psychology of Money, I'm going to read first, then I'll probably read that book. Now, however, it doesn't mean that it's going to be a crap book, but same goes... Sometimes you just don't like the author. Like I said, I love Stephen Bartlett.
Preconceived notions.
Yeah, like I've watched him in Dragon's Den. I follow him on Instagram. I follow what he does because I like the way he speaks. I like the way he conducts himself. And
he's a very good interviewer.
Yeah,
he's very good at doing research.
Yeah.
If you want to really know his character, he had a
podcast,
an interview with Dr. K. I don't know if you know who he is. He's a psychologist. Anyway, so Stephen Bartlett had no idea who Dr. K was. And when he was introduced, Stephen Bartlett had prepped for a different person. And when he was about to have his interview, Dr. K pitched up and he was like, he has got no idea who this person was. And you cannot even tell that he was unprepared. The way that he negotiated, well, not negotiated, but like treaded the questions and how he was moving around, like talking to Dr. K, you can see he's a very good interviewer. And then he eventually asked Dr. K to join him again on a second episode, a second interview at a later date. And he was way more engaging, but you could see the difference between the two.
Yeah.
However, in that moment, you just realized that Stephen Bartlett's a really good interviewer. He's very good.
Yeah, no,
So,
definitely. I think his public speaking...
It's not necessary to say that is going to resonate with anybody.
No, and that actually backs it up. It goes to show how good of a
interviewer,
how good of a public speaker he is, how good of a conductor through his speech he is. Fantastic, really awesome guy to watch. As an author, I put his book down. I didn't like it.
Like I said, it's different strokes for different folks. You're not necessarily going to resonate with his story, but you might resonate with his capabilities and his abilities. Let's rather say.
Exactly. Yeah, exactly.
I wanted to get to, there's 3 questions before we have Samir and Victor joining us. The first one is, how do you handle losses without getting discouraged? How do you manage expectations versus the reality of trading? 2 different questions, in my opinion, because the one leads to the other, I feel. So it's the management of expectations that leads to you handling losses without getting discouraged. So that's kind of like how I feel about it. When it comes to managing expectations, it's first of all, you need to understand your expectation. Your expectation that you have needs to be rooted in something that you've tested. I can't just say I expect to win 80% of my trades without actually having a baseline. So expectation is formed around baselines. It's you testing something and then realizing that there's a certain degree of success. So if I've backtested a strategy, I have an idea, I backtest a strategy and I see that the strategy with a 1 to 2 gives me 60% win rate. That's the expectancy. But the reality is that there's going to be deviations. There's going to be margin of error on both sides. Like imagine this channel that I've drawn here is, let's do this. This is expectancy. That's the line. But the outcome can be this, can be that, can be this, can be that. So it's realizing that even though I've tested something, that there's going to be a degree of expectation change. There's a degree of variability in expectation. And that's the reality. The reality is that even though you've tested something, it's not going to conform to it every single time. And you're going to have periods where it deviates very far away from your expectancy and periods where it is very much in line with your expectancy. So that's the reality. And to simplify this as much as you can, how do you handle losses without getting discouraged? It's coming to terms with the fact that expectancy is going to be changing. You need to have tested something in order to build your expectancy around it. Otherwise, it's just guessing. So you need a framework. You need something that you can refer back to and say, look, I expect, based on my backtesting, to win 6 out of 10 trades. But I also know that based on my backtesting, that I'm going to go through a few runners of losses in a row. So I'm going to have sequence losses, 1, 2, 3, 4, maximum 4 across the time frame that I've tested. Now, I need to realize that there's a degree of error. So even though I have lost 4 in a row with my backtesting, doesn't mean that that's the maximum. That's the theoretical amount that I've tested. So the expectancy is that I'm going to win or lose, or in this case, lose at least 4 times in a row before I potentially have another winner. But that could also go down to 3 in a row, or it can go up to 5. So a degree of variability, 33% above, 33% below, that kind of like thing. So how to handle losses without getting discouraged? It's trade a lower risk amount so that you can give yourself more chance to become right again or to fall within expectation for your trading. How to manage expectations and the reality of trading? It's realizing that you need to have backtested something in order to have an expectation, and then there will be a degree of error or a degree of variability on expectation. I think that is pretty much the only way that I have ever found to not be discouraged, is that I'm following a plan. I know the data. I know reality. There's a chance that it's going to deviate, and I need to be okay with it. It's as simple as that. It's hard. It's very difficult, but that's when you break it down, that's as simplistic as I can get it.
Yeah, that was a pretty deep and example. Yeah,
but it's the truth, dude. It's like if you've
not 100%. No, my point being, I'm trying to add to it. You know, I'm just gonna go on if I add to that. You know, it was.
You share the same sentiment.
Yeah, 100%.
Let's answer this question then from James. James asking, how many trades do you take per day, guys? Will?
It depends how I divide my risk. 1. Half.
So this is 5 trades. However, it is only 2 entries. It's an entry that splits itself into multiple trades.
Yeah, exactly.
So I view this as only as 2 positions. I've entered 2 positions, or I've entered 2 trades. No, I've entered 2 trades that has multiple positions. Let's put it like that. So this was 5 entries, technically, because it's literally 5 of them. But it is 1 analysis per idea, and the idea itself is split into multiples. I average around 1.9 trades a day. So that was my most recent backtested data. Well, not backtested, but like my most recent data from one of my accounts. That was for last month. So across 30 days, or in this case 30 calendar days, 20 trading days, it's 1.9 trades per day. So it's very, very, very close. So it's like 38 trades across 20 days, that kind of like thing. So and it's different from person to person, but for me, that's what it's like.
It's difficult for me to answer that. You know, we've discussed this before. Well, like, how many trades have you taken this month alone? I've taken 6 trades on
one account.
On one account. You know, so I take a trade when it's valid, and if that's 2 a day, then that's 2 a day. If that's 5 a day, that's 5 a day. You know, I'm up 1.7% after losing $600 today. So $600 I lost today. The rest is literally all in the blue. $1,736 net after commissions. So that's 1.7% just in May alone, after over the course of 6 trades. You know, so that to me, that's a pretty good month-ish. It's an okay month. I don't know. It depends. Like per day, I can take 1 to 2. Now that I got a play account, sometimes I don't take any trades on my live account, on my 100k live account that I trade also on stream. So sometimes I don't trade it at all, and I may, like last week, I didn't trade my 100k live account on stream at all because I had my play account. On that, I'll trade at least 1 trade a day.
I'm on 29 trades for this month.
Nice. I remember my brother, Richie, he would take like 29 trades in a day.
Dude, he would take 29 trades in an hour. What are you talking about?
yeah, true. So, yeah, facts that. So it all depends on the person and the strategy, I suppose. But
yeah,
6 trades in a month for me is pretty average. And I haven't said that we've still got, 2 weeks left? Or a week and a half.
Yeah, no, I try and take a trade a day if there's a setup. If there isn't, like I said, sometimes I have a few days where I haven't taken a trade. Sometimes there's days where I've taken a trade, I've taken a second trade, I've taken a third trade because they've all lined up. And it also kind of aligns with how I feel on the day. If I have a very busy day, there's a lot of admin in the background, stuff like that. I don't tend to have all that much opportunity to take a trade. Like I took this trade on Nasdaq before jumping off of stream, but I took a trade from here on my regular account, and it went to TP3, and it's still sitting in like profit. It's like kind of like sitting there. It hasn't reached TP4 yet. But I've already taken a previous trade as well today that already went to TP2 and then down to break even. So on my personal accounts, I've already taken 2 trades, but I've also taken 2 trades on the play account. So that's 4 trades already. So it depends. It just depends.
Yeah,
but in general,
100%.
I look at the averages.
It's like on my main portfolio, I think I've taken 2 trades this month, if I remember rightly. I
Okay.
don't really remember trading it this month at all.
Cyprian is saying, or is asking, what is the line on your chart, Richard? Can you explain it? Which one are you referring to? This green one over here, that is a 50 EMA. Or if you're referring to the ones down here, that is just a MACD. So just let me know which one you're referring to, and then I can explain them. A MACD, this green line, it's literally a moving average. So it takes, in this case, on the 5-minute, the last 50 5-minute candles, and it averages the movement across them. But it's an EMA. So an EMA is exponential. In this case, it means that it weighs its price placement more heavily towards the most recent candles. So the older the candle is, the less it's used in its calculation. The more recent the candle is, the more it's used in the calculation to plot where the line goes. Once it's been plotted, once the line closes, it's established. That's where it is. So the EMA versus the regular moving average or the smoothed one, the EMA is a little bit faster. You'll see the reactions on the front end of it be a little bit more impacted by what price is currently doing, where a regular moving average might be slightly lagging. It might be a little bit higher or it might be a little bit lower. So it's just an EMA.
Is it a Big Mac or is it a Happy Meal MacD?
Which one? This one down here?
Yeah.
MacD's.
Mackie D.
It's a Big Mac, mate. It's a Big Mac.
Okay.
Big Mac, mate. How many trades do you recommend a day? I don't think that there is a recommendation for the amount of trades that you need to take. I think it boils down to your back testing and the specific strategy that you're trying to implement, along with the specific risk management model that you're trying to replicate. So if you want to only risk 1% per trade, and you've given yourself a framework to say, look, I'm only going to lose 2% a day, then theoretically, if you have 2 losses, you have 2 maximum trades a day. Whereas if you have 2 wins, another 2 wins, you're 4% up. Let's say it's a 1-to-1, you're 4% up. Technically, you haven't reached your 2% drop down or your 2% loss. So you can go up to, I don't know how many amount of trades until you actually lose 2 trades, as an example. So it could be 10 trades and you lose 2 of them. So the maximum amount, I feel like it's dependent on your strategy, your risk management, and your risk appetite. What do you think, Will?
Literally what he said. You know what you. It's so. It's impossible to give an answer to that, other than it all depends on what your strategy says, how many trades that you see as a setup, how many trades you see valid, what you see as an A+ setup, and how many times you see that throughout the day. How many times you see that throughout the day will depend on how much you decide to risk. If you're seeing 4 setups, A+ setups in a day, then you take 4 trades. If you take 4 trades in a day and you only want to risk 1% per, or 1% of total daily loss limit, should we call it, then you got to divide 1% into 4 because you're taking 4 trades a day, 4 high value setups, 1% risk, 0.25 per trade. So, it all depends on a friend of mine a friend of yours took 340 a day.
Dude, that's insane.
That's like HST
That's insane.
trading.
It does feel like it, doesn't it? But
Yeah,
it's very difficult to do high time frame or high frequency trading.
Yeah, that's bonkers.
As individuals. Unless he's going enter, massive 20 entries, and then it moves 1 or 2 pips down, he closes it, and then he enters another 20, pushing it up. I don't know. It's maybe something
that's
like
fixed. I've seen a few people on Instagram do stupid shit like that. A few people...
I agree.
Yeah,
silly stuff.
And in all fairness, look, I don't want to hate on them because look, they're getting like 10k days. But this one person had like a $5,000 personal account and just like 0.1, but ended up like 0.1 in the shit out of this one gold trade, and that 0.1 ended up being like 10 lots deep because he put that many, or because they put that many trades on.
That's rough, mate. That is rough,
dude. I was watching it and I was like, oh, I can't watch. But like, when you're like that, but you're like kind of watching. You're like, I shouldn't, but I'm curious. Yeah, that's crazy. But no, going back to the point, it all depends on how many. Ask yourself first, how many setups can you see? How many valid A+ setups can you see with your current strategy? Not with 3-4 strategies, but with one current strategy. If you see in 4, 3, 2, 1, whatever, however many strategies you see, that's how many trades that that you can average take in a day. It may be more, maybe less. But then you can start to understand how much risk do you want to put on. If you want to risk 1% per trade, then you're going to potentially be risking anything from $1 to $4,000, 100k account, 1 to 4% per trade per day. You don't want, that's a lot of risk. However, if you're thinking, okay, I want to risk 1% per day, then you need to divide your risk per day being 1% by however many trades that you on average take. Now, yes, it may suck because one day you may only risk 0.3% or 0.5%. The other day it may be 0.75. Another day maybe 1%. Because it's on average, and it's always take average estimations. You can never be exact and precise when it comes to futuristic price probabilities. Okay, thank you.
Last question over here. How do you define success in a trade? I think for me, very simple. For me, it's very simple. It's whether or not I followed my process. It's whether or not I entered the trade when I was supposed to, left it to hit its TPs, and then that is success to me.
100%.
However, I do feel good when a trade goes into profit. I do feel good if I end the day being up. Nobody enjoys losing, mate. Nobody enjoys it. Even though you're used to it, you don't enjoy it. But I think for me, a successful day is when I have followed my plan in its entirety every single time I entered. And believe me, I don't think I've had a successful day in 2 years. Because I find a way to screw up, mate. It happens. I find a way. Like, my first trade would be perfect, and then my second trade will be like, I'll close it at 2, or I'll close it at 1, that kind of thing, and I don't let it run. That technically is not following my plan. So
we're all human at the end of the day, And just to top it off, instead, just to add on to we're all human and we make mistakes, we're rebellious animals. Hence why you see like kids, they rebel. Why do they rebel? Because they want a challenge. So if we give ourselves rules, we don't like it. We don't like rules. It's not in our blood to like rules. So we want to rebel against our own rules. It's almost like self-destructive. However, by teaching ourselves to follow rules, and I always relate the whole boxer scenario, we're not programmed to be punched in the face and just let it happen. We
just take it.
Yeah, I don't know many people that were just born with the ability to look at you, get punched in the face, and go, ha. Not unless they're a few short. However,
That's true.
However, you've got to, as a boxer, you've got to teach yourself to keep your eyes open and take the punch. Look at the punch, accept it coming towards you. However, same goes in the market. You've got to accept the fact that you're going to be wrong. We don't like to be told we're wrong. We don't like to, follow your rules. We don't like to follow our rules.
So, this is crazy to me, all right? Because I don't deem it my strategy. Let's put it like that. But, dude, congratulations. Like, really. Like, Richard, remember when I mentioned I passed my Funder challenge with your strategy? Guess what? I did it again on a new challenge with the same strategy last Friday. You and Will are trading gods. First and foremost, thank you very much. It's very appreciated. However, it's not my strategy. The moment you start trading it and you've added anything or removed anything from it, it's your strategy. So just change that. It's not Richard's strategy. It is yours. It is my ego style's strategy. It is I may have inspired your strategy, or you found something about my strategy that resonated with you, and then you adapted it to you. But it's your strategy. So congratulations, mate. That's really cool.
Dude, that's absolutely incredible. Massive kudos to you. Proud of you, brother.
This is probably the next person that's going to pass their accounts with my strategy. No, I'm joking. I'm joking. The moment you guys take a strategy that is being displayed here and you adapt it to your own, it becomes your strategy. Own it. 100%. Take ownership of it.
100%.
So that's what I want people to learn.
Yeah,
that's what I want people to learn.
There's literally what we do here. Rich is super good with it. His strategy is absolutely awesome. I said to him the other day on, me and him were on a call, and I said, dude, I may rob this strategy from you. I said, if gold is doing well for me at the moment. I said, if GU and EU don't pull their finger out the backside and start working with me here, I'm going to ditch my EU-GU strategy, my major strategy. I'm going to go over to the NASDAQ and just absolutely hijack Rich's strategy because it's fantastic. But I'll make it mine because I won't see the markets the way that Rich does. So I'll have to improvise and, make it unique and make it my strategy. Same goes with Richard Butler. When you were talking about your best of three is me, I had my own little version of that when you recommended that a couple of years ago. I was like, "Ooh, dude, I quite like this. Let me see let me see how I can implement this." I did my own sort of little thing, my little take on it. Now, same goes with mindset, guys. You may like what I talk about when it comes to mindset, lifestyle, discipline, when it comes to psychology, when it comes to performance, when it comes to understanding alignment between discretion and mechanical trading. You may take a lot of what I say and think, I'm going to use this. I'm going to use Will's thought process here. The minute you think about it, it's yours. That's what we do here is we try and help and guide traders through our own experience. We've had our own sort of upfalls, downfalls, whatever you want to call them. We've had our pros, our cons, our ins, our outs. We've been there, we've done it. Nonetheless, doesn't mean we're experts. Doesn't mean, doesn't mean we're trading gods, but dude, that is one hell of a compliment, dude. Thank you so much. I'm glad that you see us as that, but it doesn't mean we are. It just means that we're people who've probably been at it a little bit longer than you guys, and one day there'll be someone out there who will see you guys as trading gods because you will have been in it for a long, long time. Look at LJ, look at Dirk, look at the guys, the guys coming in just a second, they've been at it a long, long time. So to them, speaking of the devil, and he shows up, huh?
Ding dong.
Ding dong. What is good, Victor? How you doing, brother?
Anyone order pepperoni?
Please go like this. Just do it. Just once.
I got the meat piece.
Pepperoni.
Maybe another time. How's everyone doing? Rich,
Good man.
Will.
Good in yourself, Victor.
I'm doing fine. I'm doing fine.
Good. That's what we like to hear.
I mean, short and sweet, to the point, I'm fine.
I'm feel.
Oh, I just realized something.
Dude, that's probably why you hit your break-even stop loss.
Because the light wasn't on.
And
that's
what
why
is that
I
strategy
constantly
you've
got
been
my
talking about, Richard? For those who are just coming in and may not be so familiar with your strategy, could you give a 2-minute summary of what you do, what you look for, and how you put your stop loss, your TP, and what kind of results are you getting with your strategy?
I tell you,
Yeah.
just before you do that, my stomach has just reminded me that it's home time and it's time to go get some food. So, guys, I'm going to love you and leave you in the very capable hands of these two very handsome gentlemen down here. So, three very handsome gentlemen. Sorry, I stand corrected. Samir, what's good, brother? Anyway, guys, I'm going to love you and leave you. I'll see you tomorrow morning. Make sure I've just opened up the stream. There's 112 likes. Guys, that is not good enough. We want as close to 200 as possible.
Those are rookie numbers.
Make sure, yeah, rookie numbers in this racket. You need to pump those numbers up. Quote me, chat. Quote me. Anyway, guys, make sure you like, make sure you subscribe, click that bell notification. Ask these guys some fantastic questions, especially when Richard divulges into his strategy in just a second. But for now, peace.
Cheers, Will.
Take care.
So, what's up, Samir? How are you? It is.
You're muted.
It is 1-0. Victor and Richard is ahead. Samir is...
Right. I think now it should be fine. Hello, guys. How are you all?
Okay, there we go. It's a little bit better now. It was like super robotic.
Mic check 1, 2, 3. Now it's fine.
Perfect, mate. Perfect.
All right. Let's do this. All right. You was gonna share your strategy. I will not interrupt you. And I'm also curious about your strategy. I know the overview about it, but I would love to know some kind of entry pattern that you see, or how you see the markets. So yes,
Okay.
you can drop some knowledge on that.
Let me drop some premium octane knowledge. I hope you guys' think tanks are open.
Yes.
It is a very simple strategy, to be dead honest with you. I am primarily a trend following trader, or a reversal into a trend following trader. So when I'm talking about a reversal or a trend following, I am looking for the areas where, I'll give you an example. Down here, we have what I call an established zone. An established zone, in my opinion, is an area where we have had either a previous high, previous low, a session high, a session low, previous day high, previous day low. A simple area where we've seen a reversal of sorts, and an area where we've had either a slowing of momentum after an attempt to break it, or I want to see multiple tests. So it can be a supply zone, a demand zone, a resistance, a support zone. That's what I refer to as established zone. But I group all of them kind of like together across the board and say, look, this is an area that has been established. We've already reacted off of this established area. So I know that if we do come back to this area, there is a probability that we're going to react either the same way we did. We're going to either slow down and consolidate and then decide to do a break above or below, or we're just going to disrespect the area. So it's just areas that I can have a look at very quickly. So to me, this area that I have up here right now, yesterday's lows on New York, is an established zone because that was the lowest price we had yesterday, as well as we've had multiple reactions already today on this area without breaking through it. Okay, so that's the first thing that I do when I look for a setup, is I look for established areas. So in this case, the trade that I had taken earlier today, it had been this area over here, where we had a bit of a reversal. There we go, a bit of a reversal during the Tokyo session. So the Tokyo session to me was an established area, the Tokyo low at least. You're seeing the reaction. So this was the last low point that we made prior to closing out the day. We've had a singular reaction off of that area. So remember, this area over here had a volumetric reaction. So it's a very strong reaction pushing price up after it attempted to take the low and then retest the low. Okay, so so long as we're aligned with that, then I know you understand what I refer to when I'm talking about an established zone. So volumetric reaction, a retest, another retest, another retest, another retest, and a real struggle to try and push lower. So if you look at this price action over here, it looks very strong. But when you look at the same price action over here, it looks very weak. It looks undecided. So at this secondary point over here, you can see that the momentum is falling away. Its willingness to continue pushing price lower is fading. Okay, so I'm looking for an established area, and then I'm looking for a reaction off of an established area. And this is the reaction that I'm looking to kind of like catch. So I'm looking for the slowing down of the momentum and then a shift. So I'm looking for it to slow down in one direction and start shifting towards the opposite direction. In this case, what I would do is I would wait for an area that is at an established area. It's slowed its momentum, and I can mark up some sort of price structure within that area a little bit. A high and a low of that consolidation, you can say the high and the low of that slowed momentum area after the reaction or after touching an area of interest, in this case an established zone. So what do we have here? So we can effectively think of this as the high of that established area, the high of that slowing of momentum, and this down here is the low. The low itself doesn't get tested again. So you have the high over here that pushes into your established zone. You create the high pushing out of that zone off of this attempt. You have a reattempt to push price lower, which creates a lower low in relation to the previous one. You don't really make another high. You make a lower high, but you at the same time make a higher low. This to me signifies the momentum has completely died off. If there was really an incentive to push price lower from within this area, we would have had to have broken the lows of Tokyo that was created by this wick. Instead, what we get is we start getting momentum pushing price up. So you look at this candle over here and you start seeing, we're starting to get a little bit more momentum. It is followed up. There's a secondary candle, not as momentous, but it's still in the same direction. We keep getting more candles trying to push price up. Eventually, we do break and close above that recent swing. Okay. Then what happens is price tries to push back again. Price tries to, what I like to call, break this newly established initiation of a trend. So that I always talk about arm wrestling, a back and forth. All of this that you're seeing here is just bears and bulls being here in the middle, just absolutely just struggling. Pushing a little bit, pushing a little bit, pushing a little bit, but in effect, there's no real winner. There's no real movement. Eventually, what happens is one of the two gives up, and it's right about here where the bears give up, and you start getting bullish momentum. So the bulls start pushing the bears down with this arm wrestle. Where is it finalized? It's right here on these two candles. This is that last ditch effort after pushing, trying to push lower, breaking the most recent high that we had over here, closing above, and then attempting to push price back down again. So the bears are trying to stop this new upward lower time frame trend from establishing. And that's where they fail. So then I refer to it as a rally base rally or a drop base drop. So established area, reaction off of an established area, and then we need to have a shift in structure. So in this case, change of character, higher highs, higher lows, change to a lower high, lower low kind of like thing. We need to see it change its structure on the 5 minute. And then I'm looking for a rally base rally or a drop base drop. Those are the 4 things that I look for in a strategy. So a rally in this case would be after the reaction off of the established zone, after the let's say the change of character, going from a bearish price order or price action into consolidation, trying to push bullishly. This is now a bullish price structure because we're breaking highs and we're struggling to break lows. Then you have this as a rally. So 1, 2, 3, 4 candles that are higher than The previous ones, they close higher. They're looking like they want to push higher. And then you have what I call a base, and it's this. It is an area where the bears do a last-ditch effort to try and push the bulls down and fail, and then eventually get completely overwhelmed. And that is then the rally. So it's a rally, base candle, rally candle. So what I would then do is I would enter on the close of that candle. So I'm paying attention to this. I know that I'm looking for a buy because of all of the let's call it the precursor things that happened. I wait for my base to be established, and then I'm looking for a candle that confirms the rally, which is this one. So that would then be my entry point. I sometimes get a little bit slipped. It's not always exactly at the close or the open of that candle. And then what I'm looking for is I am looking for this. So I'm entering a set TP, set stop loss entry point. I have 4 take profits. I have a 1-to-1, which is over here. I have a 1-to-2, which is at the top of that candle. Then I have a 1-to-3, which would be over there, and then a 1-to-4. So the fourth one being up there. So I have different areas to take profit at. And then what I do is I remove portions of my trade as it hits certain spots. So my stop loss would be down here. As an example, it's a set amount. It's almost always 0.5% or 1%. It depends. It depends on the volatility, the reaction, the zone, or how I'm feeling on the day. Am I feeling a little tired? If it feels like I might not have, if I don't have like the best amount of sleep or something, then I might lower my risk to 0.5% or something. But how I then attach it, or how I then approach it, is I would have TP1 and TP2. TP1, if it's hit, nothing happens. I take profit, it moves on to the next portion of the trade. Once it reaches TP2, the EA, my Forex Fury, this position sizer, automatically moves it to break even once it reaches 8,000 points on MetaTrader's price action. So what then happens is, once I've reached TP2, which is 8,000 points on MetaTrader, it will move the trade to break even. So at TP1, being a 1-to-1, I lock up a quarter of the risk. At TP2, being a 2-to-1, I lock up half of the risk. So between TP1 and TP2, I have locked up, if I took 1% in risk, I have locked up 0.75% in risk, and it becomes a risk-free trade. Then I like to see maybe TP3 get hit, and if TP3 gets hit, that is an extra 0.75% locked up, which then brings me up to 1.5% in profit. And if TP4 gets hit, that is another 1% that gets added, bringing the total up to 2.5% if a full run is met. And that is how I manage my trades, and I've been doing that now for probably 2 months now, almost, give or take. And that's my strategy. If you look at the EMA and you look at the MACD, all they do is they just add a bit of confluence. They just add that little visual additive to say, I have a little bit more confidence in the direction. If we're trading above the 50 EMA, after having been under the 50 EMA for a while, that provides me a bit more confidence, saying, on average, we were below, now we're starting to push above. The MACD as well. Is it ascending? Is it descending? Are we showing a little bit more volume, a little bit more momentum pushing price up? Or do we see it kind of like stagnate? You can see it with the candles here. You can see it very well. But I do like the visual aid that the MACD provides as well. It's like, quickly, okay, it's blue, it's above the line, it looks like it's ascending. It does look a little bit stronger. Okay, we're above the 50 EMA. This just adds a little bit more confidence to the trade. And that's basically it. It's the same. I took this trade over here. So you struggled at the high. You started getting a little bit more volume coming down. We're pushing below the 50 EMA. The MACD is showing that it's starting to lose its upward momentum. you have another attempt to try and push price up. It fails, and then we start pushing lower. And that's the trade that I took on this account before going off of stream. This one was managed a little bit differently because it's not exactly the same, but the concept stays the same. I'm looking for a leg pushing in one of two directions after a reaction off of an established zone. This wasn't quite an established zone reaction, but we had momentum. And it was basically a continuation of what we had from Monday night New York session going into Tokyo session. High, lower high, and so on and so forth. So it's a re-establishment of the trend that we had going into Monday. And that's it. That is the, let's call that the meat and potatoes of my strategy. There's obviously extra stuff like I do pay attention to the candle characteristics, how volumetric a single candle is. I will go up to the hourly as an example, and I'll also look if there is any established areas on the hourly and the 4 hourly that potentially is being tested or is about to be tested. So even if we do have a cell that is presenting, let's say here, there's a cell that's presenting over here. Because we have this established area for yesterday on the higher time frame as well, I might be cautious and say, look, let me wait and see the reaction first. That's it. That is the extent of my strategy.
Can I ask you a couple of questions?
Of course you may.
So do you had it on the 5 minute? Is it always on the 5 minute?
Yes. I predominantly enter on the 5 minute, and sometimes I will use the 15 minute as confirmation of the same information.
And so could you list the definitions or the examples of the established zone you mentioned? Is it a fixed list, or are you flexible with it? Is it discretionary, that zone, or is it very objective, like, it has to be these 3 or 4 or 5 things, and if not, then I won't look at it, I won't consider it? How is the established zone established?
It's broad, so I have a few things that I add to it. Like I said, I bracket. So I take, it can be an order block, it can be a previous day high, a previous day low, that kind of like stuff. There's a bunch of stuff that goes into it, but the main thing that I'm looking for is reaction. So you establish an area by having a reaction on that area. So I know this might not seem like, it might seem a little vague, but it's really not that vague. If you consider momentum around a specific area or a reactionary point, you can say, oh, this is just a break and retest of a consolidation zone. So it's something like that. If you can imagine it being, okay, price came down to an area that had multiple reactions previously in the past, and I'm seeing a price structure on the lower time frame that is signifying the potential that it wants to break and continue up higher. And it's effectively that. It's just, when I learned how to trade, I did not go into, oh, this is a flag pattern, this is a doji candle, that kind of like stuff. I basically went into it and I created my own mental picture of what is happening and my own wording so that it made sense to me. To other people, it'd be like, well, that's just a change of character. And I was like, great, I'll call it a change of character then. But to me, it was just, So for me, an established area, is exactly that. Just an area that had a reaction, and I want to see if it has the same reaction.
And how long, do you have limits as to how long that area is still considered an established zone? Like, let's say there's a lot of time, like here we can see there was, I don't know, maybe it was a day or so, not even. I think that was, how long was it
so
from the moment it was established?
From this one to basically the first test that we had was 56 bars, so 15 hours. Yeah.
15 hours. Do you have a limit? Like, I will consider it only if it is below a certain level. Does it have to have a certain number of time or amount of time before it gets retested? What if it gets restarted quickly in an hour? Or you understand what do you have a how do you handle that?
So I have no limit because I can have a 4-hourly one that can sit over here and it takes days before it reaches it. I just need to see a reaction. So in this case, if we have 4-hourly, this is one of those bases that I referred to earlier, where you have a long bullish leg, a attempt to break that bullish push, and then a continuation. So this would also be considered a 4-hour base, but we've already had the reaction here, or in this case, almost had it there and had it the next day. Then I would go in and I would have a look on that day. So I'll go on the hourly down to this area and see how it's reacting. And then I try and bring it maybe from a 4-hour, 1 hour to a 15-minute base, if I can find a base in there. So in this case, that's the whole 4-hourly base, but we do have another 15-minute base because the reaction off of this area created a new high. And then I would like to see if price were to come back to that area, is it going to react the same way it did when it did so previously? So a base can also, let's say, become an established area. A low of the day usually can be a base if we have a strong enough reaction out of it. So the time frame doesn't really matter. It's just the retest. It's just, if we come back to this, is it going to react the same way it did initially by pushing bullishly again? In which case, I would love to see a rejection. I would like to see either it slow down its momentum to the point where it's barely moving and then we start getting volume pushing it higher, or I want to see a dip in, start pushing higher, retest, and then continue sharply up again. So it's broad, but I feel like the rules that I set is the entry requirement. Like when I'm taking the trade, that's where I'm like very, very like, this is the entry and this is the rule, done and dusted. But creating an established zone can, some days it's going to be a lower time frame, sometimes it's going to be a higher time frame swing point, sometimes it's going to be a base area that was retested and continued away from. Yeah, Henry's taken this strategy of mine and has kind of like added his own confluences and his own ideas to it so that it fits his style of trading. 2 candles, I've tried that one before. To me, the one candle worked fine enough that I could just continue with it. It's a 50 EMA. So the green one is just a 50 EMA with the close on the as the source. So just a 50 EMA. It's the one that I found if you look at the lower time frame, like even now on the hourly, it kind of respects it to a degree. And if we start moving volumetrically away from it, we continue to do so. Sometimes have a few tests, and then we'll look for an area like over here, where it does look like it was a bit of a established area. It was a high of the Thursday. The Friday Tokyo session consolidated in that area. We tried to break lower, failed. We volumetrically broke up higher. We came back down to it. We retested it, and it just kind of aligns itself with the EMA as well. The EMA just gives it that extra confluence to say it looks like it wants to continue going higher.
All right, I got a couple of more questions, if that's okay with you. So
fire away.
So what is the distribution of the percentage in your partials out? Is it fixed? What have you noticed? Is it better to take more to the earlier TPs like TP1, TP2, or have you noticed that having an equally uniform size being partialed out is better? How do you make these decisions?
So what I had initially done is I think it was 12 renditions of the TP points. So I had my initial backtested data, which was on 1 to 2s as my baseline. So I only had TP1, which was 2R. That was it. And then what I did was I split it up into having 2 TPs with the same 2R. So a TP1 is 1R, TP2 is 2R. and then I tested that to see whether or not there was any validity to it. Took all of that information, and then I split it up yet again. And I kept on doing that. So I had, with the weight being more towards the top end, so a 10, 20, 30, 40 split on the percentile. I had a mix of that, where it was 40 at the top, or 30 at the top, 40 at TP3, 20% at TP2, and a 10% at TP1. And I've had like different splits of that. All of them had different expectancy ratios, but they all shared the same win rate, because I used backtested data that I had for where the set TP 1, 2, 3, and 4 was, which was all of them 1-to-1s. So, or a multiplier of 1-to-1. So TP1 is a 1-to-1, TP2 is a 2-to-1, TP3 is a 3-to-1, and TP4 is a 4-to-1. And I just looked at the expectancy with a 4% degree of variability across each one of them. So if I had a 75% win, or 75% of the time it would hit TP3, I would say, okay, here's my one calculation. It's 71 on the lower end of hitting TP3. 75 is the expected, and 79 is the upper end. That's my room of error for that. And then I would just cancel those out basically and say, you know what, I'm just going to go with the average minus 4. Because if it's going to hit TP3 4% more often, it doesn't matter if my take profit is going to be even higher than that. So I'll just take the lower end of it. So it doesn't quite reach TP4. It doesn't quite reach TP4 or TP3 and so on. So long story short, I had all of my win percentages per position, per TP1, TP2, TP3, TP4, and then I worked out which one of my rewards is going to net me the best expectancy at the end of it. And I ended up between just two of them. It was, in this case, the 4, 3, 2, 1, 40%, 20%, 30%, 10%. Where you lock up a portion as you're going up. Then this one, for me, or 0.25% for each take profit point to remove my. Oh, I think I just. Am I back on? Okay. Yeah.
Or watching. Samir, we have plenty of, I think we have a lot of interest. Not I think, I see we have a lot of interest in the chat for your strategy, and it's for a good reason. How did you derive to that 4%?
Yeah.
Samir or me?
No,
it's you.
you mentioned about you're taking a margin of error of 4%. How did you? How is that a statistical number that you notice that's a good rule of thumb, or is it actually what why 4? Why not 5 or 10?
So the difference between the percentiles was between 8 and 10%, between TP1, TP2, TP3, and TP4 being hit.
Oh, okay.
And I just took the mean average across that and said, look, it's going to be 5%, give or take 4%. I didn't want to overinflate the potential difference between the two. Am I frozen?
Let me see on the YouTube if it is fine or not.
Yeah, I'm gonna check.
But I want to ask one thing. This TP1, TP2, TP3, this type of approach. Okay, if you are frozen.
You are frozen. Yes, I see. Okay. I see Rich is frozen.
Okay, hold on a second. I'm going to disable my camera and then re-able it.
Okay.
Let's see.
Am I still frozen?
You're fine. I'm checking.
You're still frozen to me.
I'm going to have to exit and then re-enter for it. But can everybody hear me? That I think that is maybe the more important point, and whether or not you can still see my screen.
Yeah, we can hear you. On YouTube, actually, we can hear you.
Yeah, that's great.
We can see your screen, and it is moving.
Okay,
It is
cool.
just
So
your
it's
camera.
just the camera. But if
Yeah.
I'm gonna have to exit, then it's yeah. Should I exit and then re-enter again?
Yes, please do. We
You
do
can do
like to
that.
see you as a
All right.
how do
Let's.
you say that? Let me show
Um.
your screen in the meantime, Samir, if that's okay with you.
Yeah, that's fine. All right. I just wanted to ask Rich if that's how your foundation started, taking multiple TPs, but there was slightly some kind of connection issues, but that's fine. I remember someone was asking me, it was
We
Vamshi.
cannot see on the stream. We cannot see your screen, Samir.
Uh, I'm moving here
Yeah, but
on YouTube.
I'm looking at YouTube and it's not showing your chart. Let's
On
switch to Richard.
Am I
I don't know what's the
back
problem.
alive?
Yes, Samir,
You
you're
are back
absolutely
alive and your screen is showing. Yes.
Excellent.
But we have to check Samir because Samir, we will be
Yeah, yeah.
wanting for him to explain
Can you
something in.
type in chat, Remy?
Let's switch back to yours,
Let me
Samir, to see
redo
what's
this
happened.
screen. Now it should be fine.
Let's checking.
Now it should be fine, I think. I just reshared my screen.
Okay. Let's go to Samir and then let's see if his screen sharing.
Yeah. And that makes me wonder how it is with mine.
Do you want to bring yours up
I'm
as well?
seeing the YouTube. Yeah, now it's
Maybe-
fine.
Maybe
Alright,
we had a
everything's
bit
fine.
of a glitch and then everybody's stuff got.
Yeah, but it's fine. I can see mine my position, so it's my chart. I mean, so it's fine. All right, so go ahead, Richard. You were saying about how you came on to how you derived to the 4%, 8, and so on. So basically, it's based on measurements, based on the data you have measured. You sort of you optimize basically your TPs from the observations you had on the TPs. And Samir had a question for you. What was the question, Samir?
Yeah, my question to Rich was, was your foundation started this way, where you was taking multiple TPs, or with time you found out this thing and you got comfortable with it, or your foundation started this way only, where you was, from the day one, or when you was looking trading, or maybe taking this thing seriously, you started with this approach. I just wanted to know this.
So, first and foremost, no, I did not start like this. I was always a set take profit and set stop loss kind of person. And it was always
All right.
1 to 2, 1 to 2, 1 to 2. And then myself and LJ had a conversation a while ago. It must have been late February, middle March, somewhere around there. And we started talking
right.
about why do I not let some of my trades just run? Because we were discussing my trading and we were talking about he likes my entries, he just doesn't like my exits. He feels like I can get a lot more out of the market by just letting some of them run. But I don't like leaving my trades just to go. In this sense that if I'm going to have a set take profit and stop loss, I want to be in and out of the market and then I go and do my thing and then I come back. But if I have a trade that I leave to run, I'm constantly going to want to come back to see, is it now at its next TP point? Should I close now? So it's kind of like that balance between the amount of time that I'm spending in front of the screen versus the amount of time that I'm not really around, where I'm trying to do other things. So I'm trying to limit the amount of time that I'm at the screen. I get in, I get out, and I'm done with my trading. That was always the idea. And then when LJ and I had a discussion about this, he was like, look, just take partials. Take a partial at one point and then let the rest run. And then you see what happens. And then I started to backtest this. And I've been backtesting, I think it was a year's worth of data.
How many trades?
All right.
How many trades? The initial one that I had was close to 209 trades, give or take.
That
the
is
initial one that I
All
had.
right.
209 setups, of which each one gave you one entry and multiple TPs, correct?
Yes. So they were all exactly this. They were all exactly this this setup. I hadn't yet looked at what percentage I'm going to have for which take profit point. But I had, look, let's split it into 4. Let's split it into 3. I initially did it with the 1 to 4, and then I made a variant of it for 1 to 3 as well. And then I started playing with the percentiles. And then I broke it down saying, look, I'm comfortable doing, if it was 1%, 4 entries at 0.25% each entry point. And then each take profit would then be 0.25%, that, a 1-to-1 ratio that would be locked up and then multiplied. So the win percentage pretty much stayed the same. It was how much I won when I won that played a bigger role. But the one that played the biggest role was the amount that I lost when I lost. And I feel like that is the one that ended up turning the expectancy to the degree that I really liked it. The original way that I used to do it was just a 1 to 2, which had a good success rate. But
I think this is really a good point.
But if I went on losing streaks, I would lose 1%, 1%, 1%, 1%. Or, okay, drop down 0.5%, lose 0.5%, 0.5%, 0.5%. And it's like psychologically, it's like, this is annoying. I would much rather retain some of the winnings and then, or some of the profit, and then when I do lose, that it is then kind of like evened out a little bit better. So the curve itself is a cleaner curve instead of like these sharp spikes and sharp spikes lowers and stuff, sharp spikes lower. So I kind of wanted to bring that curve, expectancy curve, a little bit closer in. And that's where the multiple TP came in. So once again with this, there's 5 outcomes that I can have. I can enter a trade and it can go directly to stop loss. It is a 1% loss. Great. That happened 22% of the time. Out of all of the trades that I had, it happened 22% of the time. So I know that on average, 1/5 of my trades are going to go straight to stop loss.
And you lose your whole risk.
Yes, I lose a full risk. Then TP1 would be hit 78% of the time, which was great. So 78% of the time I'm making 0.25%, or at least in this case, this is 78% of the time it would hit TP1 and either hit stop loss or continue higher. So 78% of the time it was TP1, 65% of the time it hit TP2 after hitting TP1. So that's good as well. So it meant that I had a 62 or 65% win percentage on TP2 alone. But if I removed TP1 from that, it would be a 35% time that it goes straight to stop loss. And that was kind of like the idea that I had in my mind. It was like, okay, so I'm trying to curb the amount of times that I lose and how much I lose when I do lose. I don't really care about the profit side. I want to manage the losses and the amount that I lose when I lose. TP3 dropped lower. It was a 54%, if I can remember correctly. And then just shy of 50% for not shy of 50%, shy of 40% hitting TP4. I think it was like 38% of the time it would hit TP4. So across all of the trades that I had, the only time I'm losing profits is the 22% of the time that I hit straight to stop loss, or when I hit TP1 and it goes straight to stop loss from there. But instead of losing 1% when it hits TP1, I'm losing 0.5%. Because I've locked up 0.5%. It's removed it removed 1/4 of the initial risk from the table. So I'm only left with 0.75% risk. So the 0.25% that I've locked up covers effectively TP2's stop loss. So then I'm just effectively left with TP3 and TP4 stop loss, which becomes 0.5%. So 1/5 of the time, I'm going to lose 1%. And then 1 extra fifth of the time, I'm going to lose 0.5%. You know, if you worked it in like the outcomes. We're not talking about the expectancy. We're just looking at the potential outcome. So two of the outcomes I'm losing money. From TP2 onwards, it's break even. So if it hits TP2, my stop loss gets moved to break even and it becomes a break even trade. So even if it hits TP2, goes to stop loss, goes almost, hits TP3, goes to stop loss, and then TP4, it removes everything. It's risk free. So I can only ever lose 1% or 0.5%. And then the follow up, the opposite side of it, the profits, is I can either profit 0.75%, 1.5%, or 2.5%. So those are the 5 outcomes that I can have. Win a full or lose a full percent, lose 0.5%, gain 0.75, gain 1.5, or gain 2.5. And I just built the whole premise around losing less when I lose and getting that equity curve a little bit less spiky, a little bit less, like deep, sudden drops. And this was all to allow me the opportunity to have some of the trades run and not feel any emotional attachment to them. That's basically it.
Nice. Did you measure, how do you enter? Do you enter with 4 positions, each having their stop loss already built in, or do you, and TPs, or do you have like an EA, or do you manually, adapt things?
Okay, so I will use this EA, and this is the play account as an example for you. Very simple. You see that this position sizer prints 4 take profits that I have marked up. So you can just press the plus, and then it will add a profit point. If you go to the trading tab, you'll see that each one of them has a share of the initial risk. So it's 0.25% or 25% of the initial risk per point. If I were to add a 5th one, it would be 20, 20, 20, 20. But you can split this however you want for the 100% of the risk that you're putting out. So I could have changed this to 40, 30, 20, 10, or however I want to. So what this position sizer will do is when I click trading and I click this trade button, it will enter. So we're having the New York Open very soon, in 12 minutes or so. So what I'm going to do is I'm just going to go ahead and take a trade here just to show you. Okay, so come on. There we go. It enters 4 trades, each one of them having a quarter of the 1%, or in this case, 0.5% risk that I initially wanted. So all 4 of them might have slightly different entry points based on spread, but the stop loss is going to be the same across the board. So all of them share the same stop loss. So 28,788.18, all of them is the same. And then what I would do is, so I will hide the line. I will move that out of the way, and I will then just go and ensure that it is as close to my 40, 80, 120, and 60, 160 profit points. So in this case, this trade doesn't matter. It's just to illustrate what I would do. But what I would then generally do is I will just make sure that this is on 4,000. The next one is on 8,000.
So you have
so on and so forth.
fixed number of points or pips for the TPs.
Yes, and this is what the back testing was built on. It was on set stop loss and set take profit points. And then all I do is, in this case, I just make sure that is correct, as well as the entry, the stop loss point. In this case, would be 4,000 points. And then I just ensure that on the trading tab here, that the break even is equated to 8,000, which means that if TP2 were to be hit, which is 8,000 points, I would then have my stop loss be moved to break even. So if I hover over that one, it's 8,000. The moment TP2 gets hit, it automatically moves my stop losses of the remaining trades to break even.
Nice.
Simple. And then from there on, I just do this. I just minimize it, and then I go about my day.
And you backtested only NAS, and did you backtest any other pairs or equity indices?
I looked for trending assets, so I didn't really do this on on the Forex pairs. I did it on UJ and EJ as a test because they tend to trend a little bit longer, and then mostly the indices. So US 30, DAX, and NASDAQ. But I also wanted to ensure that I focused on a singular asset and kind of master that one asset, so to speak. Just get comfortable trading one thing and trading it very well before I diversify too much. Because my problem is there's so much stuff that's happening. Like especially if you're streaming, with people, you have to pay attention to what's happening there. You have to be conversational. You have to pay attention to what everybody's saying. You have to check the chat. Sometimes there's like messages coming in from background. You have to address all those things. And it's just that attention that gets diverted. So if I'm going to miss a trade on NASDAQ, it's fine. I can get another one later. But if I'm in NASDAQ and I'm looking at EU and I'm jumping between them, it's difficult to sometimes hit that exact point when I'm supposed to be getting in. So I want to focus on one pair and just keep the focus on that one pair. Simple.
And
All right.
another question, Rich. If you break down each entry, each TP as a singular individual trade, not as part of a partial that you're getting out to mitigate your equity curve and your emotions by it. But if you just look at them as individual trades, sharing the same entry and stop loss, but having different TPs, which one has the best expectancy?
In terms of, I have it. I think it's this one. I have it here.
You don't have to show us the secret sauce of your strategy.
No. I will give you the expectancy for each one of them. Just need to get it set.
Just so the viewers can have an idea, how their backtest looks in comparison to you, or
TP4.
TP4 has the best.
TP4 has the best expectancy, yeah. So my expectancy on this is a 0.935.
What is that? Is that points, pips, risk, or multiples?
So it's R multiples. So if I have 100 trades, I am making 93.5 R across 100 trades.
On number 4, on TP4.
On number 4, yeah.
Okay, that's very good. That's a solid edge.
Technically, number 4 is 0.9.
Yes. That's a solid edge right there. And how does this
once everything's balanced out?
Have you broken down this this edge per month? Because that's over the whole period. But have you seen the variance it has from one month to the other, in order to compare how it performs in certain regime consolidations, breakout, rallies, and so on?
So last month was the first month that I ran it in its entirety. So not just on a demo account or anything. So I've only had last month and this current month's data. So last week was a 5% week for me.
Wow. That's
on 0.5% risk per trade.
All right.
Yeah, that looks very, very delicious from a trader standpoint point of view. What I automatically want to answer if I see something like this is this because of the market, or is this because it's capturing capturing edge, or is it the market that is giving me these results? You know what I mean? Because if there are times where certain strategies align beautifully with what the market is doing, breaking out, not coming back, or just not going anywhere, just going sideways, and and sometimes we get these results, but it's not clear and it's very easy to think this is because of the strategy, uh, and it's going to perform equally well in the future. However, how very important for risk management is how much is the market responsible for what I'm actually measuring as performance. You get my point, right? Because now, for example, Nasdaq is just breaking all-time high. It's just going and going with no going back. But of course, that will change at some point. And that's where I want to go with the question.
So you can basically see that if I just go over to the daily, that obviously it is incredibly bullish for the longest time. And I tested many, many trades. Now, predominantly, every single time I've tested it, there has been some version of a trend.
Okay.
During any day. It can be an intraday trend. It can be a slight consolidation. But in general, days like that tend to capture the 1 and 2 Rs, or the 1 and 2 take profit points more easily. So then my expectancy comes a little bit lower because I'm not achieving those 4 TP4, TP3 kind of like levels. But I never looked at it in that sense saying, look, I can only do this in trending markets. My intention was to only implement it in a trending asset. If it's trending bullish or trending bearish, it doesn't really matter. Because the confluences are the same. The entry points are the same. The testing that I've done with the percentile R that I've had was across that 200 and let's say 210 trades that I've taken. And some of them were trending days where we had like really strong continuous movements. And some of them were also during areas like this where it was like really struggling. Days like this, obviously, you get a little bit more losses, or you have more strings of losses directly, maybe TP1 loss, or straight to loss. But in general, when it's trending like this, the expectancy is almost as expected, or within a slight margin of error. So the idea is just that I expect that this strategy is going to perform less than expected during times of consolidation or sideways markets like we had over here. So this area over here is probably going to be like, oh, I'm gonna struggle here. But where it makes up for it is when we do have trending price action. Then you get 2.5% winners, that kind of like thing. So if I'm going to a time frame where it's going to be like this, a little bit more cyclically, prices within a range, I would most probably reduce my risk to as low as I'm willing to go. Let's say 0.2% or 0.25%, something like that. But because we were trending so nicely, I was like, well, I can go 0.5% and I can go up to 1%. I will never trade more than 1%. Not on in my live accounts and not on my evals or even my prop accounts. I won't go higher than 1%. But because right now we are trending so nicely, I will continue to do 0.5% to 1% up until it proves, look, we're going into this price action that we have here. And then I'll be like, you know what? Let me reduce my risk a little bit because now I'm outside of my expectancy. I hope that answers the question, because it's an interesting view when you consider that, like, look, the strategy is made for trending assets, and not all assets are going to trend permanently, and you'll have days of consolidation, weeks of consolidation, but it's like it's capturing when it is trending and getting those ones. I remember Jonathan used to talk about this like quite a while ago. He would go months and months of hitting stop loss, hitting stop loss, hitting stop loss, and then there's that month where everything just aligns perfectly and he makes up everything that is lost plus more. And this is kind of like it was that vision that I went into this with. It's like the market's going to be cyclical. You're going to lose days. You're going to win days. Some days you're going to win barely. Some days it's going to be break even. Some days you're going to lose. But those days where it runs, you better eat. You better like scoop up as much of it as you can. I had a 5% day the other day.
Wow.
I've never had a 5% day ever in my life of trading. And I don't know if it's like the stars are aligning, the strategy with the asset is just aligning perfectly. Mindset was great, psychology was great. But the experience was like, wow. I don't expect to get this every day. I don't even expect to get this like once or twice a year. But on that day where I got that, I was very happy about it. So
I think it's not too difficult to have a great mindset when you have a 5% of a day.
Yes and no, because you win 5% and then you think to yourself, this is not sustainable. This is an anomaly. This is outside of what is typical. And I try not to get too excited about days like that, because I try to view it from a point of, look, congratulations, you got 5% today. Don't expect this every day. Don't go and get a big head about your trading. Just stay humble about it. Realize that this can change at any point in time. I can go to a 5% losing day if I don't control my own vigor. Let's put it like that in trading. So if I need to ensure that I remain as down to earth about my trading as I can be. Because I'm a numbers guy. I like the logical side of things, and I do struggle with the emotional side as well. So
market is go ahead. No, I would like to continue this conversation many more times, because I think there's a lot. I think it opens a book for everyone who is watching, including me, to learn by observing what you've done and see how that matches, fits or not the experience that I have in back testing and the results, and what works, what doesn't work, and that's very, very valuable. And what is also very valuable is the analysis that Samir is doing right now, because I can see his eyes going left to right, looking at the market. The market is open 6 minutes already, and I can see the vigor that Samir has, ready to pull the trigger, or maybe he has already. So
All
Samir, show us what
right.
you got.
before
I
you
was
do that,
looking
guys,
at.
I really need to go. I've got a few messages here that I need to address like immediately. So
Yeah, no
I'll
problem.
talk to you guys tomorrow. So have a good day, and thank you for the questions, Victor. I really do appreciate the interest. And yes, we will continue this discussion
Uh,
next time.
It's a gold mine. It's a gold mine. I think if anyone would pay some attention to what you're being explaining, the process, the logic, the results, the reasoning, the everything around it is filled with gold nuggets. So please, continue. Let's continue this soon again. But thank you for opening your book.
Yeah, that was more than 2 minutes. 2 minutes of explanation from my side. All right, guys, have a great day.
Yeah.
If you haven't already, please drop us a like and a subscribe, and we will be back again. I will be back again tomorrow, early in the morning for another session. In the meantime, you've got Samir and Victor going to close out the stream for you guys. All right, guys, see you tomorrow. Bye.
Take care. Thank you
Take
very,
care,
very much, Rich.
Rich.
We appreciate all that you have shared with us. Samir, the stage is all yours.
All
Show us your
right.
magic.
Magic. I already did the magic. I caught this move and I just locked my
Really?
payout. Yeah.
Really?
I was
Okay.
expecting this low to be gone, but now we are at a very decent area. But I am having some
Break
problem with my. Yeah,
break
yeah.
down the process, the setup, the
Yeah,
reason
definitely.
why you took the trade, how much you risk, what made you get
Yeah,
in,
definitely.
what made you get out, everything. Give us all the secret sauce, so to speak, of the magic you just performed.
Yes, definitely. So, guys, first I want I want you guys to look at this area because this is a very good area to look for longs, in my opinion, because this is some kind of demand area. And the way I look at charts is some kind of liquidity, demand, supply, and VWAP. Right now, I'm assuming that we took out this liquidity, we tap this demand. We can easily tap this area because this is the supply area, and VWAP is also away right now from the price. So as I already took the trade, I would have placed my buy limit order somewhere like this. I go for 50 point stop loss. I think that day I was explaining you this strategy. That day I took a stop loss, but I'm testing this thing nowadays. I am not a big fan of back testing. I look at charts. I just do a forward testing type of thing. Yes, this thing is working. So then I do that thing in a live account. So this is the trade running. But as I took the trade already, I secured the payout. But this was amazing trade, and VWAP is way too away from the price. So amazing trade. I would have taken this trade anyway. But let me break down this trade, this shot that I took. VWAP is the main part of the strategy that I use. And again, trading view is doing some crazy things. Okay, let me use any other chart. Okay, now it's fine. Okay, so VWAP was bearish, and look at this area. This was never tested. Story number one, or point number one of the story, this area was never tested, and we was not able to go above from this, this pullback. If this pullback was strong, we should have broken this level and we should have continued higher. But we came below the VWAP, and I was noticing it, and I was like, we haven't tested this area, so maybe I can play some shorts and I can capture some moves. So this was the supply area. Price tested that. I got to the 1 minute time frame. I was observing how price is behaving. Look at this, the big part of the strategy. I look for some kind of consolidations, and price just got down and pull back. I just entered somewhere around here at this fair value gap. This candle was my entry, and my stop loss was 50 some point above this candle, and I was aiming for that area which was never filled on the 30-minute, some kind of this area. I closed a little bit early because it was just 5 minutes left for the NYSE open, and I didn't wanted to see the crazy volume against my trade, so I closed the trade here. But if I don't even want to talk about that because that is completely unrealistic thing. So why to even touch that point when we cannot capture it?
Capture, you mean by capturing it, you mean take everything the market does, right?
Yeah, exactly.
Yeah,
We
yeah,
cannot do this,
it's
closing the
yeah.
yeah.
So, but did I understand you opened the trade before the open?
Yeah, I opened the trade before the open. Why? Because I was expecting a liquidity move to the downside at the NYSE open, and then the actual move to the upside, which is already happening. Seems like it. Going to the 1 hour time frame, that order block that I showed you guys, that was the buy limit for me if I was about to enter in this trade. See, I'm not able to go in the 1 hour, but this was the area somewhere around this. This could have been the entry. 50 points, somewhere around that range. I'm using my stop losses, and take profit can be anywhere close to the VWAP. So this is the only trade for me. But NAS 100, this was the area which I was looking for sales, and right now we are already getting the rejection. We saw the inverse fair value gap. This was the shorting entry. Stop loss can be here, and target can be this low.
Why are you expecting a short there, or a supply
Okay.
area there? What
Okay.
constitutes the supply
Yeah.
area for you?
So you have you also know I talk about these type of candles having no wicks. So this was candle having no wick, and VWAP
Mhm.
was also bearish, and the structure was also bearish. This is the supply area also on the 1 hour time frame, and look at this area. Candle having this candle is also having no wick. So my buys for today was sells only. I just was waiting for the confirmation. But as we was talking about US 30, confirmation came right here, inverse fair value gap. You can even keep the stop loss here because if it crossed this fair value gap, this trade is not gonna go in your favor. But let's just be safe. Can keep it here, and TP can be here. Not very fancy type of analysis. It is just a few observations that I noticed when it comes to chart. For an example, candles having no wick, some kind of structure, some kind of supply demand areas, some kind of liquidity areas, and the VWAP. So these couple of things I use when it comes to taking the trade or making the buys. Very simple analysis is it was. So let's see if it plays in our favor. Of course, this is a paper trade for me, but the actual trade is, if I hadn't captured that sell off, I definitely would be involved in the US 30 trade. Let me load the other chart. I don't know what is the problem with my trading view. My internet is fine. Okay, now we can see the charts. Okay, we are having small fair value gap here, and this big wick which was never tested. Again, I'm getting the problem, guys. I'm sorry for that. Let's go to the 1 minute time frame. Yeah.
Your trading view
And
is
as we
not cooperative today.
yeah, but I can, stick with this. The order block was somewhere around here. But I was talking about the risk to reward type of thing. So as I was
Mhm.
following the 1-to-1 system, I needed the high risk to reward. But as we are getting 1 to 3s, sometimes 1 to 2.5s, nothing below 2.5. So even win rate is 40%, sometimes 30, sometimes 50. I still can make decent profits when it comes to this strategy. And I have noticed it is working good in the current market condition. I don't know what is going to happen in about 4 to 5 months, but I think I'll be following this strategy for next 3 to 4 months, and then we will see if anything changes, or if I'm noticing any other patterns which are performing in the market a little bit better than this current one. So right now I'm using this system, and I'm completely open about this thing. I'm kind of a dynamic type of trader. I have learned a lot of strategy. It has stayed with me like forever till the day. So whenever I come to the charts, I notice few things and I see these type of patterns are performing in the market in a good way in that particular market condition. So I try to follow that footprint. So right now I'm noticing these kind of supply demands are working good when it comes to US 30. I don't know. Maybe I can change when US 30 is gonna go way too bullish, making new highs every day. Then I might can use breakout strategy. Who knows? So every market condition needs different type of approach according to me. So yeah, being dynamic is not a problem at all. But you guys should not change the fundamentals of the way you look at charts. So for me, liquidity, some kind of patterns, some kind of impulsiveness, these type of thing has been my strongest point. So the fundamentals has always been the same. But and the VWAP also, and EMA also, I was doing the same thing. If price was way too away from the EMA, I was looking for buys. If price is staying along with the EMA, I was going for continuation. The fundamentals are the same. The entry pattern has it has changed over time, and it will still change in upcoming years, in upcoming months, but the fundamentals will always stay the same. Can be VWAP, can be EMA, can be liquidity points, supply demand areas, patterns. So these type of things will always stay the same. And also price was consolidating here. I was expecting the impulse. So this is also the type of the way I was looking at the charts. So
And
yes.
so I guess you spend quite some time observing the market, because you say
Mhm.
you're not a big fan of backtesting. What you do is you observe to see what's working in the current market condition. If it's more of the order blocks, or more of the
Yeah.
fair value gaps, or whatever it is,
Mhm.
price action phenomena that you see that is working, that's what you want to be trading. But does that
The
mean
point
that
is that you're talking about the point that I observe the market
Mhm.
actively. I don't do backtesting. The point is that I pay the price to the market. So, if for the losses, if I'm having a lot of losses,
Mhm.
then I am bound to look at some other patterns that I'm familiar with. I'm not testing any new thing here. I have traded order blocks. I have traded supply demand areas for a quite for for like 6 to 8 months, profitably. So I am familiar with what kind of order block supply demand area FVG is high probability. So that comes to the point, and I pay the price to the market. Can be some losses, and the way I was noticing this pattern is by losing my accounts. I bought, I think, 5 accounts, so I lost those accounts. I was following every risk management. I was risking little, 1%, but still that 200 EMA was not really uh, giving results according to the future accounts. There are some different rules. So then I was bound to do some testing because I was losing. So that's how I come up with new thing, or that's how I have to find some new pattern which I'm familiar with, of course. So in short, I will say I pay the price to the market. Can be money wise, can be account wise. So then I look at other patterns. So this is you know a little bit. I'm being a little bit dynamic here, but this buy
Yeah,
setup was amazing. I definitely would have taken this trade if I was not in cells.
nice.
Uh,
No, I think there's a lot of everyone is different, right? I'm a backtester kind of a guy. I want to see
yeah.
the proof, I want to see how it performs. I don't trust it until I see data on it. But you're different, and there's no
Mhm.
one right way of being a trader, I guess, right? Because if the feedback you get from whatever process you have, if the feedback is positive, and you see that in your performance, have, you've had. I think there's a video from some time ago, maybe a year ago, where you had at the 5ers, right? You had an interview with a certain amount of payouts you had. I think it
Yeah,
was a
yeah.
year ago. That's public, right?
Yeah, that's public.
How much is that amount?
It was around 31,000, but now I'm
Exact.
sitting at, I think, 2.5x that amount
Okay.
in
So
the
at the,
fibers.
at the point that I'm trying to make is that there are different ways to get to Rome, or there are different ways to become and stay and be successful as a trader. I have my ways, and I'm very confident that this is
Hmm.
the right way for me. But you watching watching your everyone can get to the conclusion that you have a different approach, much more
Yeah.
about feeling the market, or observing what is working for the market currently,
Hmm.
and applying it. So much more dynamic, as
Yeah.
you describe yourself as a dynamic trader, and
Hmm.
it's also good. That's also it's working for you, right? So
Exactly.
who am I to say no? You have to do back testing the way that I do it, otherwise, you will never make it. No, Samir is a living proof that there are different ways you can do it. You are still getting data, but in a different
Hmm.
way, because
Exactly.
your observation is still data. It's different. It's a different approach, different method, different conclusions, or different measurements, but it's still maybe the way you do it is a bit more fluid, but
Hmm.
it is still data, right? Because you're not doing random things, you're observing and
Yeah, you
concluding
just.
based on your observation that you
Hmm.
need to change this or that. It's just a different approach or a different process, but it's still it's working nicely for you, given the numbers we just explained. And that's only that's not everything you trade. That's only the 5ers that you're trading. Yeah, we're not talking about your personal accounts yet. So
Hmm.
it's good for everyone watching to realize that each one of us is a version of what has worked or what can work for a trader, and you have to see it as a palette, as to try and see which one fits, which one works for you, and adopt that, or maybe bits and pieces of what I or Samir or Richard is talking. Actually, today we've been talking a lot about strategies and, you know, how a system building this is basically, and how you move. In your case, it's more about system management, right? You have you're not with a fixed strategy, or at least one fixed strategy, but you have you know, like a toolbox, and you observe and choose to switch to a different tool depending on what your observations are, what the market is doing.
Yeah,
And
exactly.
that's also, you know, that's basically, that's about maintaining your edge in the market, right? It's about getting feedback as to what kind of market condition we are in, and what tool or strategies fit best with that. And you do that with observation, and I think it's very insightful for everyone watching.
Yeah, exactly. I think there is just one thing, that the way you are making the story, it should make sense. What do I mean by that is, for an example, price is touching the support area and you are looking for sells around this area. That doesn't make sense to me, because even if you're a liquidity trader, why will you sell around this area? Okay, so the way you are making story, it should make a little bit of sense, to you, of course, and according to the market condition also, according to the market sentiments also, or according to the market fundamentals also. What are the fundamentals of the market? Market moves in a wave. Okay, so this is the lower high, I'm sorry, this is the lower low, lower high, and again the lower low. So why are you trying to sell from the support area? Of course, if you're a breakout trader, there can be some kind of different confirmations, but the way I'm trying to explain, try to get my point, that it is just one analogy. In short, I just want to say the story should make sense according to you, and according to the market dynamics, also according to the fundamentals of the market, the way market moves. You should not do random things here and there. You should only do the things which are proven. And what are the things which are proven? Can be patterns. Actually, everything is proven. Okay, so can be patterns, can be quasis, can be liquidity. You should only do the proven things, and with time, your decision making will get better. And how will get that thing will get better? The decision making, by observing, by taking few losses and learning from them, and by seeing the patterns that are printed by the chart on a daily basis. That's how your decision making will get better. And I remember when I just came to the stream, somebody was asking that he's overtrading, he is not able to pass the funded account. And let me tell you my experience, how I passed my first account. As I was doing random things, I was having no plan, and I was just doing unproven things. And what do I mean by that? For an example, I was selling at the support area. This is just the one analogy that I'm giving, or one example that I'm giving. So the way I passed my first challenge was by restricting my chart time. This was the first point. Okay. And second point, risk parameters. How much I'm allowed to risk in that particular day. This is the second point. And the third point is which strategy I am using. Back in the days, I still was using EMAs, some kind of support resistance, and the patterns, you know, and the risk to reward, how much I'm aiming. I was not really being that dynamic, like Richard was explaining that he has TP1, TP2, TP3. Of course, that thing is working for him. That is amazing. But me personally, I was, having a fixed target, fixed risk approach, fixed number of trades that I'm allowed to take in that particular day. When I made the rules for myself, then I passed the first account, and when I followed those rules, okay, can be different rules for you, and you might be wondering what was your rules. So my first rule was I am not allowed to take risk more than 1.5% of my current balance. This was the first rule I set for myself. Second, number of trades. I am not allowed to take more than one trade per day. And the third rule was I am not allowed to keep keep a look at more than 2 to 3 assets. So back in the days, I was trading GU, EU, and I think it was gold also sometimes. So there was only 3 assets which I was focusing on. And these 3, 4 rules that I set for myself, when I was following them, I was getting results. When I was breaking them, I was blowing accounts. So I came to the conclusion that following the rules that you set for yourself is the only way that you can is the only way to be profitable. Basically, forget about risk to reward. Forget about strategy right now. Right now, I just want you to focus on the rules that you will make for yourself. Of course, every individual is different. You will make your rules according to your lifestyle, according to your the way you understand charts, the assets you trade. So, but the fundamentals should always stay the same. Like for an example, you should not risk a huge amount on one trade. As I'm saying, you are allowed to take one trade a day, but that doesn't mean that you will risk 4% in that particular trading day. So these was the few rules that I set for myself, and I passed my first account. So that was some kind of cheat code I gave you guys. Of course, it is very basic thing, and that is the only thing that you can do. That is in your hand. Rest, market is unpredictable. It can be in an impulsive phase. You can see your stop loss getting slipped. You can see your TP getting slipped. But the thing that you can control is number of trades you are allowed to take and the risk that that you will put in the market. So I think these two things are the only things that you can control. That is it.
The
And try
time
to,
is
yeah,
the time is not enough because I am enjoying this conversation, Samir. And I think we should continue with this conversation. Certainly, again, I said that to Rich, but I mean, this is
yeah.
again, these are we just started scratching the surface of what you're talking about. I
Mhm.
think there's a lot of depth, a lot of layers to understand what you're saying. It sounds easy. It sounds not superficial, but it sounds like there's one thing that you're saying, but there's actually a lot of more layers down there. And I actually want to explore that with you in another session we have. But before we do so, we do have a big fan of our stream here, Big D Guy 666. Let's answer these quickly if you can, Samir. Um,
Yeah, definitely.
are you in what you've explained right here? Is it that
Mhm.
you feel now that screen time and observation and making notes is more important than the particular strategy you
Okay.
are employing? Is that true, or is it different?
Experience is the most important thing, and I think that is the only way. And why I am saying that, you remember I covered the topic decision making thing. Your decisions
Hmm.
will not get better. Your decision making ability will not get better if you don't have the experience. I can teach you the pattern, but you haven't experienced that thing. How will your decision making will get better? So in short, yes, experience is more important than the strategy, because then you get the inner confidence in your particular setup that you have found in the market. That will not I cannot teach you that inner confidence. I can only share you my setup. Okay, this is the supply demand area, this is the fair value gap, VWAP, etc. How will you bring that inner confidence? That will come with the experience. And when you get that inner confidence, then I think you are open to take risk in the market. You are not afraid to lose. And I think that way your decision making get better. And that
Good,
is
good,
all about
very.
trading.
That's very awesome to what you just mentioned there. We should clip it and send it to Remy.
Remy, yes.
Anyways, the one question, I think there's two questions, one for you and one for me.
Mhm.
Samir, do you move your stop loss to break even when you're trading?
I only do that when the trade is like almost 80 to 90% move has moved in my favor. Rest, I don't move it to break even because my foundation hasn't built that way. The guys that I was learning from, they didn't taught this thing in the first place when I started trading. So it has stayed with me till now.
Mhm.
So, and I am not really trying to explore this side, like moving stop loss and trying to play with the targets. I am not open to it yet because I think this thing is working for me. So yeah.
Nice. And the last question. We are, let's see, we have here JPL Double O is asking, I've been backtested the strategy that worked for a full year 2025 on 8 assets, but this year it isn't really working. It's a break even. Do you think eventually will work again with your experience in backtesting? JPL, there's a couple of questions before I can give you some kind of answers. One is, did it perform equally well in 2025 as well as in now for the 8 assets? Is there any difference between the assets? Two is, how many trades do you have this strategy is based on? And three, have you noticed a very distinct equity curve between these ones? Because the market can just by knowing it made it made profit, or it is breaking even, it is around where it started the year. That information doesn't give us the complete picture. How is the equity curve behaving? Is there a very different equity curve? Is it completely different than 2025 or not? Those are the questions that one would want to see to get an idea, get a feeling. Okay, this is just a period where the regime of the market is not optimal for the strategy, or in other words, the strategy isn't capturing the edge it has because the market isn't giving it, the edge isn't present for the strategy to capture it. That's why it's breaking even. Every strategy has, we're talking about an edge, right? An advantage on the market, but it needs to, the market condition needs to be conducive for that strategy, right? And sometimes, yes, there are filters. You can say, well, the strategy shouldn't be getting in on, if it's a momentum, for example, a breakout strategy, it shouldn't be getting in unless the market is breaking out. But on top of that, meta going one level higher, a lot of the times, the kind of market condition, the kind of market, the regime that we're in is can be conducive or not for certain kind of strategies. So my guess is likely that is happening with your strategy without knowing really anything specific. Most likely, your strategy is suitable for the market regime that was present in 2025. So will it work again? Yes. My guess is whenever we get the same regime again, it will work again. And so your job is to, as you understand your strategy and the regime or the market condition it works in, is to identify it beforehand and say, okay, and that's what actually what Samir is doing. He is identifying what market condition there is, and he's looking through his observation. Okay, what kind of strategies are working well in the current market condition? And what you could do, and anyone actually, is knowing your strategy. Okay, this strategy works in this particular, let's say, market condition A, and if we're not in A, I'm not going to be using it. I'm going to be using other strategies that are good for market condition B. And whenever I see market condition A again, the regime change, I will go back to my toolbox and use this strategy that has worked in 2025 on the regime that I labeled A. You understand what I mean? It's a little bit more advanced because you got to have multiple validated strategies. You got to know how to recognize the regime change. It's not easy, but it is doable, and it takes a lot of time. I mean, even building one strategy can take a long time for most people, and let alone having a toolbox of validated strategies and all the experience to understand what kind of regime we are in. But I mean, it is what it is. I cannot change. That's how I understand market and trading in general. So I would like to thank everyone. We went way beyond our time today, but I enjoyed every bit of
Yes,
it, and I think
definitely.
our viewers as well. If that is even a little bit the case, press the like and subscribe button if you haven't done so yet. We have on the Discord community, the marvelous Discord community we have in at The5ers. We'll have a call today in about less than an hour. Be part of it. You don't want to miss it. Samir, last words before we head out?
Last word. If I touch that point, it will be another open topic, and it will be again, we'll spend like 30-40 minutes talking about that. But I will just cover that in a small way. Probably I'll take 1 minute. So when it comes to trading, you cannot really win like every month, and there will be down times. You will have some confidence issues, and I think that is the time your past performance will give you motivation. And like, yes, you have done good in the markets, but these type of days or months will happen often when it comes to trading. It will create some kind of impact in your mind psychologically, also mentally also. It will be hard to deal with that, but you have to be comfortable with that, because these type of times, every year it is gonna hit you, so get ready for that also. And the way you can tackle that thing is having set of rules for yourself, so that you don't blow your account that much that it is way hard to recover from those setbacks. So guys, make sure you're following your rules and you have some kind of rules in trading, because that is the only way you're gonna succeed in trading. With that being said, guys, I will see you tomorrow, and thank you so much to Victor and to The5ers for giving me this opportunity. And I will see you tomorrow, guys, and make sure you are liking our channel and actually this live stream, and subscribe to our channel. And if you're from India, we have The5ers India channel also. You can subscribe to that also, where we post interviews, we do webinars here, we do a lot of things for our Indian community also. So if you're from India, make sure you check our socials. And that is it, guys. We are already ahead of our time. I will not take more time now, guys. I will see you tomorrow. Thank you so much once again.
Perfect, perfect. Lots of gratitude and humbleness, Samir. I like to. Everyone likes to see that. That's amazing. So that's it for us for today. Everyone watching, thank you for your attention, and be safe in the markets. Uh, Journal, and keep on improving. Your edge. See you. Bye bye.
Take care, guys.